All right, I guess I'm live. There seems to be a lag. New home sales crash. All right, let's see what we can do today to keep you interested, keep me interested, keep me uplifted. It's all about me. All about me. Happy Veterans Day to everybody. I guess the president is making speeches. And we should be grateful to our veterans, many who were dead, gone. Just imagine the Civil War. They died for a proposition that each one of us is free and each one of us has a right to say what we think, print what we wish, gather as we will, protest freely. And the only limitation, I think, came, I'm sure there were more, but the one I remember is Oliver Wendell Holmes saying that free speech, there are limits. For example, you can't yell fire in a crowded theater. But we've become so, see, I'm a male, I can't say it. You can listen to Dr. Do you know that Michael Jackson's daughter is 27? You can listen to Helen Andrews, and she'll talk about, she wrote a great article, which I think I printed out, called The Great Feminization. I don't know if it's that or if it's just the fact that the banks control the media now. But there's a lot of limiting free discussion. And a lot of those men, mostly men in history, but some women too, many women, died to protect our right to freedom. And then we just give it away in these petulant fights because it doesn't feel good to have someone speak the truth. So we got to just shut them down. But anyway, maybe we'll go over her article, The Great Feminization. It's an interesting article. It's written by a woman, so you'll listen to it. If a man says something like that, she basically says wokeness is an extension of feminine social norms into a male-dominated world and male-dominated institutions, prioritizing feelings, nothing more than feelings. I mean, it's a great strength women have that men don't have. I did business with a guy that ended up completely manipulating and I think lying. And, I'm not, I don't carry any grudge anymore, but he took my client, and it's just terrible. But I didn't see it. To me, he was a good guy. But a friend of mine came from London, and I guess she gave him a ride somewhere, and she came back. She was staying at my house, and she said, "You should never trust that guy. You should never do business with that guy." I said, "Why?" He's a good guy. I went to his wedding. She said, "He's a bad guy." I don't know. Women do have the ability, trusting their feelings, trusting their instincts, to see things that men don't see. And it's very important. So who's to say it's right or wrong? It's just different. It's just different. It's just different. I don't know. I have some sort of allergic reaction. All right, we're up. Railtown, we're up to 15,307,171 shares. And I know that is correct because I added everything up very carefully. 15,307,171 shares. That's amazing. Do you know you guys are more powerful in this stock than any institution, than any insider? Yeah, this is amazing. So hang on, add to it. But we'll try to talk about various things. My eyes are a little bleary, worse for wear and tear. I signed in. Really, I did before I signed on here, but I have to do it again for some reason. If you're trying to buy bonds today, you have to wait until tomorrow. The Dow is up 300, NASDAQ's down 150, S&P's flat. Railtown's up 2 cents at 44.11. Soundhound is down 99 cents. 99. It's down a smacker. I just met her. It's down over $1. So something's going on at Soundhound. But it's still trading at $6 billion. $6 billion. Finger is up a penny, 137. Please avoid that until, I'm not telling you how to feel about the long run situation, but you've learned enough that they get you to buy it before these so-called ATM offerings. It goes up. It's your money. They're selling that money, but they get to be the big shots. They're selling stock that doesn't exist. They're called some client of O'Flaherty is selling it. And when the deal comes available, they wire $1 million and they're the big shots. But the deal's done at 125 with warrants. And you bought the stock at 137 with no warrants. Don't get suckered right now. Let them raise money and then see the lay of the land then. Now, G-Bucks is showing remarkable strength today. It's up 1/3 of a penny at almost 15 cents. GDC is flat. It's down 1/2 penny at 387.5. And Roadhouse Railtown is 41.61 on the bid. 41.61. The ask is 44.3. I show 155,900 shares traded. I haven't seen all those trades hit my run, so I don't know where they are, what amounts or where they did those trades. The last trades, double, whatever you call those, double sailboats, 44 cents. And people who are bidding on that stock need to realize that up in Canada, the stock is up. So while you're still bidding, the stock is up 5% in Canada. It's up 3 cents at 61 cents. And the volume is 54,000 in Canada. So if you take 61 cents CAD and you move it to USD, that's 43 and 55 cents. So if you're bidding below 43 and 55 cents, you're hoping, one, the stock comes down in Canada, or you're hoping the dollar collapses versus the Canadian loonie. But we all hope, don't we? It's all about hope. Oracle is the first AI domino to fall after Barclays downgrades its debt to sell. Barclays. Our planet can't stand nuclear power. It's the biggest fraud out there. It's most dangerous. Your body cannot tell if you're eating radiation, breathing radiation, touching radiation, drinking radiation. Your body can't tell. But we're hell-bent on creating these, whatever they're called, isotopes or elements that our sun throws at the earth, but our magnosphere protects us from. But we're dead set. We're just dead set on anyway, let's not get off on that subject. That's an interesting headline. The anti-AI hedge. Apple doesn't blink when NVIDIA does. Look, a lot of this negativity in AI probably is justified. Who knows? When you look at the charts, if you give it a wide enough time frame, they look like any other hyped stock. All these things, they all look like they've gone straight up. But a lot of these fund managers and traders want excuses to book their profits too. That's how they get paid for their year. But AI is not just one monolithical thing. How many of you reduce the amount of storage you use on the cloud every year? Or do you increase it? How many businesses reduce their cloud usage over the course of the year? Demand for data centers and apps just keeps growing. SoftBank liquidated all of its NVIDIA stake. I guess, it's always possible NVIDIA needs to be repriced. All right, let's look at your points, and then I'll see if I saved anything last night to go over, and then we'll just see where the conversation goes. We got a new sheet out. I'm a little bit down just because everybody wants instant results, which is fair enough after a year. All right, let's see who's up there. Tebow is number one. Hi, Tebow. Chestnut says, morning, Bo. Jeff Grimm, how are you? Pat M, good morning. I think you are the one that sold things you don't need to buy some Railtown. I think that's brilliant. Whether you sell things to buy Railtown or not, I just want to reemphasize, if the economy goes into a severe recession or a severe, God forfend, depression, your junk's not going to be valuable. So this is a good time if you're bored to do that. Good things are coming. Yeah. Bama Lake, MMTLP. Yeah, I've heard of it. I invested $40-some thousand into it. I did see, I'm trying to remember who, somebody here brought it up. Might have been account settings. I can't remember. Might not have been. I don't want to get him in trouble. But Charlie, Charlie on Fox Noise interviewed Secretary Atkins, and I guess Atkins said that MMTLP holders will be hearing something shortly, something like that. But that doesn't mean Bahama Lake that there's going to be some huge payday. The flaw in that thing, there's at least 3, maybe 4 flaws in the thinking that there's going to be some huge settlement to right a wrong or to right an injustice. And by the way, if your point, and I don't know if it is, but if your point is that somehow I promoted MMTLP, I didn't. I never did. But I did buy it on that, I forget, that Wednesday, just before the Thursday, maybe the Tuesday. Maybe I bought some Tuesday, bought some Wednesday. I had a friend of mine tell me to buy it when it was 80 cents. And then told me to buy it when it's $1 and $2. And I just didn't, because I knew the Torchlight story. I had lost money in Torchlight. I just didn't trust it. But then, right at the $8 range, I bought, showing that the human desire to participate is greater than thinking sometimes. But anyway, the problem with getting a big settlement boils down to, what did you lose? The negotiators on the other side of the desk are going to say, what did your client lose? Well, they didn't get a short squeeze. Well, why are they entitled to a short squeeze? Well, we have records of this trade and that trade, and Jessica Hopper halted trading. Did she do that without authority from the SEC? No, it looks like she asked for permission from the SEC. So what's your beef? Well, FINRA's corrupt and they had a short position, and so it's fraud. All right, that might work. That part of it, the fraud part. But even that's not going to be a big settlement. They're not that scared of it, you or us. They're not that scared. But the fraud part is the only aspect where I think there could be a payout. 60% will go to the lawyers and the costs, maybe more, and it'll take a decade. Maybe to avoid all that, they'll try to get you to settle now. But they're not scared of you. Or me, talking about the collective you. Wall Street attorneys will take that case for years. That'll buy a lot of country club dues and education for bratty little spoiled brats, and they can go learn about gender studies at $100,000 a year, $160,000 a year. It's a gravy train, and it'll take a decade or longer. So in the meantime, the other thing is, well, other than the squeeze, my client missed out on they're entitled to shares of NextBridge. Well, Your Honor, or in a negotiation, your client never asked for those shares. So your client abandoned his or her asset. According to our client, the window was open and still remains open. You can get shares of NextBridge, but they're not going to hold it open forever. Well, there's a guy on Twitter that's convinced everyone, Double D, that Wall Street is going to give us something because we deserve something. Well, it says right here on the FINRA fact sheet that in order to get the shares of NextBridge, the shareholder has to initiate the request. It specifically says the brokerage firm is not responsible for that. So whoever that guy is, can you get his real name? Well, we don't know what his real name is. All right, well, you took advice from a guy. You know a guy. The other thing is, well, if your client did have shares of NextBridge, what are they worth? Well, what they would be worth if this wasn't interfered and the client, that the client's money, there would have been a squeeze, blah blah would have blah 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 blah. Well, that's all speculative. Nobody knows for sure. What are they worth now? Well, they're not worth much. How long's it been? It's been 4 years. What were they worth 6 months? Nobody. So you're saying that if we give you money in lieu of shares, they're not worth anything? Pretty much. Pretty much. They're worth maybe it's eyes of the beholder. And then the only other possible avenue is that you were misled by your broker or somebody that gave you advice. Your broker shouldn't have taken your order. You could dazzle them with your BS and say, Jessica Hopper said that was the last day to buy the stock anyway. But the fact is, we could have done shortened settlement on Thursday, Friday, and Monday, and we could have gotten out of the stock. So you cheated us of our liquidity. Well, we've already told you we're not going to pay you for a short squeeze. That's speculative. Well, look at these trades, 2,500. We're not doing it. Well, how about if you give the client their money back? Plus legal fees, plus interest. We're not doing that. How about if we just give everybody who wants it pick a price, $3, $5 a share. They have to sign a release, and the legal fees come out of the $5. And we want to do it. We want our clients to net $3.50, and the legal fees are more than $1.50. So why don't we just say the client can take a settlement of $3.50, and the legal fees will be absorbed by the banksters, and therefore everybody here on the conference call is going to have a huge payday because their fecal matter doesn't stink. They all went to the right law school. Well, let's see. Maybe we can work with that. $3.50. How about $3? Well, let me check. All right, $3 it is. But we want to give that $3 to our clients in kind. What do you mean by that? Well, we just like to give them 10 years of trading in our account without having to pay commission or pay annual fees. Well, nobody's going to sign. Anyway, you see where it's going. It's going to be a low number. All they want is your release so that you don't join a class action suit on the fraud side. And my guess is you're so persistent that you're not going to sign a release for a couple of bucks when fraud is the way to make them pay. So I don't know why you want always to waste time, in my judgment, talking about MMTOP. I will tell you, Bamalake, my strategy for you, for everybody here, if 15 million shares or some large portion of it goes to $10, we have wherewithal. If it goes to $100 in a buyout, we're powerful. If it goes to half of that, we're bloody powerful. If it goes to $50 in a buyout, that's a lot of money. And what we could do then, Bama Lake, is set up a lobbying effort, our own, or we could hire one of the white shoe boys and I don't know what girls wear to show off how smart they are. But you go to one of those firms, and we ask who's a lobbying firm that we could use for this cause, and we'll have the money to pay them. Then we campaign, and then we go after fraud, and then we're the ones that get the benefit. That's my approach. Walking around like mendicants in the halls of Congress doesn't get us anywhere. Walking around Congress with a large lobbying firm and we're able to pay for it, that gets us somewhere. So that's my approach. But thank you, Bama Lake, again, for bringing up MMTLP, wasting, in my judgment, wasting time on it, because I say the same thing over and over again. But if you believe Atkins, you're going to hear something soon. I hope what you hear pleases you. Hey, Fast Eddie. Hey, Robert. How are you? Tebow, good day, sir, to you as well. Chestnut, oops, morning. Oh, look at that puppy dog. Barks all the time. Anybody walks around in the front yard barks. The mailman barks. A repairman next door barks. A dog walks by, barks. Leaves Russell, barks. Such a good dog. Just doing their job. Snow day in Toronto. Yeah, it's going to get cold here. And we might have a little bit of snow. Chestnut, I hate typing with fat fingers on my phone. I always get something wrong. You didn't get anything wrong with that dog. That dog needs a big hug. Of course, they never let you do it, but sometimes they do. Sometimes they do. Hey, Marty Party. Ward Richardson, good afternoon to me and RT crew. Any news on that Rebecca Kurzweil revenue that Eric B. brought up? Well, I don't think she showed anything more than I showed. I didn't take a picture of it. I don't think. Well, look, maybe I did. But what she showed, she said the revenue is now getting clear. Here it is. And she showed 3 pages from this presentation, which is still not on, this presentation is still not on the website. But she showed 3 pages, Ward. Let me see if I can find it so I can show it to you. She might have done it on Twitter, but she did it on LinkedIn. She has a little poodle, cute little thing. She's essentially doing what a guy like Frank Benedetto does, except it looks like she's what would the word be? Honest? Here, show all posts. She works for EMP Metals. EMP Metals accelerates Project Aurora, lithium. She works for Roadhouse, Railtown. So she has something with the CIO with TELUS and the CEO of TELUS posted. Okay, here's the story. Let me see. I'm going to take a picture of it. And I'm going to show it to you. She picked different charts than I did. So I'll show you the charts she used. But it all gets to the same place. The first one she showed, her post says, the revenue story for Railtown AI Technologies is starting to unfold for investors to understand. I understand just how you feel. Railtown, a fully integrated business model from technology to marketplace to cloud service, is now in place. And that's from Rebecca. All right, let me show you what she chose as her charts. I chose a different 3, but same message. Same exact message. Railtown. She didn't use that one. 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 She did not use that one. Or that one. Or surprisingly, that one. Or this one, which I think is important, but she didn't use that. She's good at getting a message across, so keeping it simple, stupid is important. But maybe she's mixing and matching from other presentations, because here it is. This is the first page she puts on her post. And it says, and I've shown it to you, you can see in the yellow, AI-driven affiliates with a proven 400 million annual sales footprint right there. She doesn't highlight it, but that's, I think, what she's trying to show you. This page reads Railtown AI Technologies and AIP partnership, a transformational coming together. Over me. This merger represents a unique combination of two Canadian powerhouses in the AI ecosystem. Railtown AI Technologies, a leader in AI-powered developer tools and AI Partnerships Corp., an established network of over 180 AI-driven networks with a proven 400 million annual sales footprint. The combined entity is poised to create a scalable platform that redefines how AI solutions are developed, delivered, and monetized. AIP's affiliate network, used in conjunction with Railtown's AI services, creates a first-of-its-kind platform for the AI service business. This transforms AIP's previous B2B matchmaking model into a one-stop platform for developers' AI needs. AI services growth potential. The newly integrated platform aims to have multifaceted growth potential. On the monetization side, the integration of Railtown's AI service suite delivers the existing affiliate network high-quality AI service solutions and activates ensuing revenues for Railtown. From a growth perspective, the network's expansive nature provides significant opportunity for organic network growth, with new customers further growing service revenues. So let's translate that. By integrating Conductor into the 180 companies in the network, this activates revenues for Railtown. Why? Well, I presume that the Conductor agentic tools, sorry for my language, machines, software, get housed at TELUS. TELUS, she belongs to me. And then, as the company, combined company, grows its customer base, new customers, those customers host their AI at TELUS, and guess what? Railtown gets revenue. By combining Railtown's cutting-edge AI suite with AIP's vast network, we aim to deliver unmatched value to shareholders and customers. This merger empowers developers, enhances customer outcomes, and establishes a monetized marketplace for AI tools. That's the first thing she posted. Which I think she picked a good page. That page says it emphasizes the 400 million, and it emphasizes the 2 or 3 revenue streams that are going to come back at Railtown by everything being hosted, if I can put it that way, on the TELUS AI factory data center in Usamingi, Quebec. The next one she put up is this one. 180 affiliates. Conductor, 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 conductor. 80 affiliates use conductor, 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 conductor. TELUS, Sovereign AI Factory, TELUS, shared revenue from the computer power here. She puts this chart up. The top says a fully integrated technology marketplace and cloud service. So there's 180 plus affiliates, whether or not they're purchased by Railtown or just stay in the network, their hosting goes, remember, Railtown after Friday is going to control AIP. Their hosting, the idea is, and I imagine the execution will be, that all of their hosting will end up on TELUS. They'll use Conductor Cloud, Conductor DPE, Conductor RCA, Conductor RAG, and Conductor ADK. They pay, these companies will pay TELUS for that, and then Railtown shares the revenue. That revenue comes back to Railtown with essentially, other than an accountant or a clerk maybe, essentially very little in by way of costs for that revenue. And then she shows this chart, which I did not show you. But you build, this is build and publish AI agents with AIP. You build with rail tracks and Lang tracks, all at Roadhouse. And then you deploy with TELUS, Bell, Amazon, is that Google? Anyway, this one, I think that's Google. And this one is, let me look, Google Cloud and Azure. So you deploy them across all these, and then the observe stage is run by Conductor. And then you publish these agents via AIP. Now, it's an agent marketplace. I would be misleading you if I understood what all that means. But that's what she put up. Now, just so the next page, 2 pages down, this is probably too complicated for her to put up, but the spend, the current spend by those affiliates, whether they're purchased or just stand in the network, they currently spend $120 million a year with various hyperscalers, data centers, host services. So they're going to move all that to TELUS. It says a common lower cost platform. Let's call it 100 million. And let's say they get, I really don't know, 15% of it. That's kind of the ratio. That's the ratio typically of a shell company being reverse mergered, 15%. That might be high, but let's just use it because I went down to 100 million. That's 15 million in revenue for Railtown at 100% margin. Lang Chain raised 125 million at a valuation of 1.25 billion based on an estimated annualized revenue base of 12 to 16 million. Well, they don't make any money, and they're earlier stage, and they're not as I'll show you after I get down. They're not as a good a set of tools yet, anyway. So, but there's room for more than one company. There's 300 billion in the annual spend by companies in this space. There's room for more than one, but Railtown's first to market, best product, solving the problem. If they get 15 million with, let's say, 95% margin, I don't know, mostly translates to cash revenues. The revenues translate to cash flow and probably mostly earnings, depending on what else they're doing. But if they get the same multiple as Lang Chain gets in the private channel on Wall Street, you've got a stock somewhere between $5 and $9 a share. How long is it going to stay this price? Well, I would submit all it takes is one hedge fund, one family office, one mutual fund, one advisory service, one research analyst, one venture capitalist. It just takes one to say, you know what? We've got to own 5% of that company. And you know what, guys and girls and puppy dogs? You own almost 10% of the pre-AIP. You own, without the warrants and employee options, you own 10% of Railtown right now. But when you add in the warrants and the employee options, you know, that's 175 million. So, but you're almost there. When they buy AIP, it's going to be 222 million, 223 million shares. You're going to be over 5%. Other companies, let's pick my favorite, Mavericks, which doesn't have to do any due diligence. If they want to buy 5% of this company or 10%, they're going to have to go out in the open market and buy those shares. You already own yours. Who's going to give them the shares? Not at these prices, nobody. Well, maybe the counterfeiters will keep printing up to a point, but then they're going to see something's wrong. So I guess my point is the amount of time you have to build a very large position relative to what you're going to be able to build is the window's closing. What defines that closing? Just one company. I don't know. Let's say it's Mavericks. Go out and buy 10% of this company in the open market. That'd be 22 million, 23 million shares. Well, we're not going to, all right, just buy 5%. 12 million shares, 11 million shares. You've done it. Do you know how amazing it is what you've done? It's taken courage and it's taken steadfastness. But Mavericks isn't going to be able to do it. At least that's my judgment. And they're going to pay more. They're going to pay more. So, Roadhouse. I think, Ward, I have a picture. I'll show it to you, her post, when I get to the bottom, Ward. But that's all I found about the revenue that she said, and it's excellent what she said. I think she did a very good job of pulling out 3 charts of a, I don't know, 42-page presentation that gets right to the heart of the matter. And it's exciting. Just to repeat, Railtown is going to get shared revenue for 180 companies moving their hosting where they currently spend over $120 million, just moving it to TELUS, which they will because Railtown will own them. They're going to get that revenue, high margin, highest margin, 100%, essentially. Secondly, if they roll up any of the Railtown AI companies, they're going to book that revenue. And remember, Rebecca's very good interview with Dr. Tom Core. He said these companies were carefully selected for synergy, another word that should be put in the same closet with compute and munch and brunch and those kind of horrible words, and the misuse of him and her and them. But whatever. As they roll up these companies, that revenue comes in and Railtown gets it. And then Railtown also gets revenue from new customers outside of the 180 that they bring on board. And the conductor is going to sit at TELUS, so they get whatever their revenue sharing arrangement is, and they get the revenue from these new customers hosting their crap on the TELUS AI factory, Sovereign AI factory. And finally, Railtown, to any companies they have not acquired in the network, Railtown can cross-sell its conductor services to those companies so that it can become that same dynamic where those companies host their revenue stream at TELUS, paying for it, and Railtown gets a piece of it. But also, if those companies start using conductor as their whatever the hell machine to their agent to do everything, there's a revenue sharing deal with Railtown. So I see 4 visible, broad revenue streams ahead for Railtown. And I don't know, who pays for building the agents? Who does that? Do the companies build the agents in their own shop, or do they have to build the agents with the help of Railtown? I don't know. I'd love to ask that question, but that might be more revenue there. So after this AIP merger gets completed, after 10 bloody months, I have another theory on why it could have been delayed, which isn't a very pleasant one. But the key is we're through that time frame. Unfortunately, we're coming to the end of the year when vacation calls for this enchanted class of people who just bet other people's money, and they call it productive use of time on the planet Earth. So Railtown has to kick it into gear, I fear, before the end of the year. Otherwise, some investors might steer clear. But I think that's coming. Deschamps Nothing to fear. Donald Trump is here. Purchased a couple of thousand. Purchased a couple of thousand. All right. Well, yeah, I've been watching this federal government. It doesn't look like they're going to open probably until Thursday, because you've got to get the vote in the House and everybody's got to fly home. But it's soon. I hope you start getting your paychecks. I live in a city where everybody somehow benefits from the federal TIT, and or I guess I should say T, to make it past the censors, I guess. But I know what you're going through. My sister is going through it right now. It's not pleasant. Good job, though, Dasham. Babcock family. Good afternoon, all. Neil Gondik. Morning. Good morning. Account settings. Good afternoon, William. How are you? Hello, everyone. One of the things I look forward every day is the caption you write for your live stream. Yeah, I tried two different ones, yesterday and today, but I guess YouTube has changed its rules in some manner. So I had to truncate it. Yesterday I wanted to write it. You don't remember the cartoon, but I wanted to write, looks like this might be the end. Tune in to our next Underdog show. But for some reason, I couldn't post it. Ward Richardson, new headline, SoftBank sells entire NVIDIA portfolio worth $5.8 billion as its CEO goes all in on OpenAI to the tune of $30 billion. A lot of big money moving around. Well, you know, it's what makes a market. Some people look at that like that's a warning sign that here comes the end of NVIDIA's high multiples and all that. But even though SoftBank's a huge company, it follows the rules that I was taught. The time to sell a stock is when the story changes, when you need the money, and when you have a better idea. Those are the three reasons. And I'm not sure this sale means the story has changed. I don't know. I mean, certainly all of these valuations are unprecedented. But $6 billion, as you clearly state here, to help fund $30 billion to OpenAI. One, it looks like he needed the money, at least without taking a lot of risk. And two, he's got a better idea, in his opinion. So I'm not sure this is the death knell for NVIDIA, but we'll see. Neil took another, wow, up in Canada. I believe after the 14th is when the tide turns for the patient investors. Otherwise, the investor will become a patient at the local mental institution. That's great, Neil. You added another. That's awesome. I think what's amazing, I never would have predicted it, obviously. But you're able to buy in 2 or 3 weeks a large position, and I don't think you're going to have to wait very long. A lot of us have built up some people very large positions over the last June, July, August, September, October, November, 6 months. And that's why it's very smart what you're doing, Neil. Congratulations. Jack Hamilton, hope you are well today. I am well. It's cold outside and the building hasn't turned on the central heat, so I'm a little nippy. It's a little nippy inside. But I'm doing well, thank you. Hope you're well, Jack. Jack Hamilton, I added more Railtown. Please add 477, new total. All right. All right. That's awesome. We might, depending on how the week goes, we might get to 15.5 million. Pat M. Yes, sold stuff on Facebook Marketplace. It was fast, local, and easy. I took cash only. I have to learn how to do that. Now that I'm famous, maybe I can just sell autographed pictures of myself. I should do that. Should have been doing that. Should have been doing that. Joe 99. Uh-oh, here comes something bad. William, I respect your analysis, but you're just encouraging the corrupt system to continue with their crimes. I assume I'm going to fill in some words to make your sentence make sense. Can you honestly explain what can happen to these people if the courts actually do their jobs? Are you talking about Railtown or MMTLP? I'm going to assume you're talking about MMTLP. And I think the fact that it looks like a fact anyway, from what I read, but I guess it's got to be proven in court. But the alleged fact that FINRA had a short position in MMTLP, the allegation that TradeStation was corrupt, I guess, in their dealings with investors. And the biggest of all is the allegation that Fidelity committed fraud. These are enormous payouts, which I think, I'm sorry to say, will mostly go to the attorneys. It will make, if it's successful, it'll make attorneys like Wes Christensen a billionaire, and he'll buy the Texas Rangers so he can compete with the Angelos lawyers who own the Baltimore Orioles. But I don't know that it's going to trickle down quickly or massively to individual shareholders. I'd love it if it did, but I'm just not that hopeful. They have endless budget. I think even the investors who back Wes Christensen are going to run out of money. And that comes to my strategy. I'm trying to fight back, Joe, by giving people a way to get their money back from all these crappy losses with stocks that just really had no chance at all. And maybe, and I think very strongly, depending on the size of the position, people can get in the green. Once we've reestablished our financial sanity and strength, we maybe can help West Christian. But maybe we become one of his investors and get a piece of the settlement. I'm trying to give us as a group wherewithal. Roadhouse. Ward Richardson. Okay, that news you just read is old news. Yeah, it is. I thought Eric B. was talking about something new on the revenue. No, I didn't see it. He may have been, but I didn't see it. I couldn't find it. Thank you, William. Ward, we're not going to hear about revenue until after the merger. It looks that way. And I would caution we may not hear about it right away even then, because I don't know. I don't know. I don't know why it's been taking all this time anyway, but I don't know what the restrictions are up in Canada on, or the requirements are on disclosure. And to the extent that the AIP deal gets closed, maybe it takes a couple of days before it's disclosed. It's possible. In terms of a press release. And then it may take, I don't know, it may take nothing, or it may take a day, 2 days, 3 days before attorneys release buyers from their restriction. I just don't know. So Ward, we may not hear right away. In other words, don't think it'll be instantaneous. On the other hand, I'm not saying it won't be, but don't think it'll be instantaneous that we start hearing about revenue. What I think's important, Ward, is that this presentation, by the way, I think is excellent. And it tells us a lot of information. Sorry. I think what's important is what the company is telling those large buyers, I hope now, but certainly after the merger is completed, the acquisition is completed. I hope that those large investors can see the pathway to 50 million, 100 million, 150 million in revenue. If they can see 150 million to 200 million in revenue sometime next year, on a rolling 12-month forward look, I mean, this stock could be 6 billion like Soundhound. Soundhound doesn't make any money. Railtown's going to come out of the gate. I think the big difference, and I don't have the language, the vocabulary, but I think the big difference is Railtown doesn't have to pay for AI agents. They provide them, so they get paid for them. And so Soundhound has to go lease or pay for agents. So to make money, they're paying somebody else. It's like running a franchise. Whereas I think Railtown is the franchise. It's a different model. It's very exciting. Joe, sorry, MMTLP. Yeah, I do think, Joe, and I respect everybody fighting And I'm out of the loop a little bit because I focused on Railtown this last 6 months. But I joined in the fighting quite a bit. And I'm still more than willing to fight, tell the story, stand up to any congressman. I'd meet with Trump and tell him that if he really wants to make America great again, he's got to fix the leak at the bottom of our multi-trillion-dollar over-the-counter and NASDAQ markets. And it's policy. It comes down to policy. I'm willing to do all that, but, and I could be wrong, Joe. If the attorneys on the good side, the good guys and girls, have a strong enough case like fraud, and the attorneys on the bad side of the case believe it, well, the negotiation price goes up. But I don't think it's going to be very high. And it's going to require a release. And I would be surprised if most of us would sign a release for $3, because then you don't even own Nextbridge. you don't have any upside. But on the other hand, at least you close the chapter, you get some liquidity, and move on. I don't know. But Ward Richardson, yeah, NVIDIA's projected to grow to 10 trillion. Look, that could either be complete pie in the sky or some combination of 10 trillion not being worth what it used to be worth, and just the gigantic size. Word, I don't know, but apparently TSMC, whatever that one is in Taiwan, is trying to create a chip as good as NVIDIA's, and I bet they can. China is trying to create the next generation of chips or bricks or whatever they're called. And even Elon Musk is trying to create his. And I assume that Donald Trump's investment in Intel is to see if Pentium inside can mean something again. So there's a race going on, and I bet Russia is trying to build chips in the Cyrillic language rather than in the alphabet we use. So that's one of the races going on. And I would think, Ward, that NVIDIA, because it's leading and because therefore talent goes there, I bet NVIDIA stays in the lead for a long, long time. So I agree with you. I happen to believe that the AI trade is real. I don't know how to process what happens if the whole market crashes. Obviously, everything's going to go down. But the last time there was a market crash and a depression, the thing that pulled us out was the brutalism of war. It might be this time it's software and AI, or maybe not. Maybe we got to go slaughter a bunch of Ruskies, and then they slaughter a bunch of Mooskies up in Canada, and somehow we escape unscathed. It's lunacy. It's complete lunacy. Joe 99. Thank you very much, William. Also, I have 8. Thank you, Joe. I wish I were more optimistic. I'm not saying it's impossible that there'll be a nice settlement, but I'm just not optimistic. So I think Railtown is my, and it's funny, the thought was a year ago, really. It's my solution to fight out of this for people. And I know I haven't done a big campaign into Junk Savvy's spaces or Busy Brands or anyone else's. I don't think that's my place. So I know the people here are not the majority of 65,000. But to the extent that even some of the people who lost everything in MMTLP or some of these other stocks follow this strategy, I think it's the most effective way. As one dear investor said, I just want my money back. I think Railtown is a way to make the money back, and also getting well into the green. Now, I think it's possible, if things work out, that the red gets made up, and then there's many multiples into the green, and it's like we went to college for 4 years, and it was a hard slog, but in the 5th year, it paid off. I'm hoping. Ward says, I'm reading that on December 17th, Railtown will be talking on finances. December 17th may be the earnings release for the 4th quarter. I think it's the annual meeting. I think the earnings release for I think Railtown is on a June fiscal year, not December. So I think their 1st quarter, July, August, September, I think their 1st quarter, the earnings are going to be reported on or around November 15th, which isn't too far from here. And we could learn a lot there. Remember, one of the advantages of this long wait, I would imagine it's possible they go from 0 revenues essentially to 60 in a minute. I'm comparing it to racing, but they could go from 0 to something, and on a growth chart that's going to look great if they've booked some revenues in the background. I don't know. I really don't know, but we could see that November 15th if my assessment's correct, but we also can read the management discussion. But then their 2nd quarter, I think is October, November, December, and I don't think we'll see those earnings maybe February 15th, give or take. I mean, no give, just a take. That'll be the latest. All right, let me see if I had anything to show you. I doubt I have very much. But before I do that, let's check the stock price. Currently, the stock is 177,000 shares. Last trade 0.4336. Bid is 42.1. The ask is 44. And let me just see if I see a big trade. Not really. I see 1,000 shares is the last trade at 0.4336. Some of the other stocks out there, they're all up, except for SoundHound is down 88 cents. Fingers up a penny, 137. G-Bucks is up. a little bit at 0.1485. GDC's up 11 cents at 3.99. Are you out of your mind? But let's see if I can. Let me show you this again. This one first. Let me take that comment down. This is the difference between conductor and Langchain. It's in this presentation. I don't know what all these, the value all of these are. I have no idea. But memory extend, conductor has. They both have RAG. Prompt manager, conductor has. I don't know what remote model support. I don't know if what conductor has is better or worse. So I just gave the check. I give that one to Langchain because I don't know better. Local model support, conductor has it to some sort of squishy offset here in Langchain. Docker, conductor has it, Langchain no. Vector, conductor has it, but again, it's kind of a wishy-washy answer here. It's not built by Langchain, so I don't think it's worth much to their revenue stream. State management, yes. Langchain, no. Error recovery, yes for conductor. Langchain, no. And then whatever MCP is, conductor has it. Langchain sort of has it. Context management, conductor has it. Langchain doesn't. Logging, conductor, yes. It's basic and it's paid as you go, it looks like, for Langchain. It's inferior, whatever it is. Human, they both have humans. That's their weak spot. Humans. And then visual chat, yes. Langchain really doesn't have it. Visual debug, yes. Langchain, no. Tools, they both have docstring. Documentation, conductor, yes. Langchain really isn't in that game yet. Multi-agent, yes. Langchain, basic. Streaming, they both have streaming. Streaming. Multimodal, yes to conductor. They only have image at Langchain, whatever that means. Cache, yes for conductor. It's in beta right now at Langchain. This is more of a startup. Auto shot, William Hendershot. Yes, Langchain doesn't have it. So Langchain is currently valued by Wall Street at $1.25 billion. Railtown's currently valued by this corruptish market and this buyer's strike at around 60 million. And Railtown's better, at least with the information that Railtown provided us. Railtown's better. All right, let me see what else I have here. It's probably nothing that interesting. It's probably nothing that interesting. All right, Ed. Wow, you sure have a lot of files. All right, here's my favorite thing. This is my favorite reason to buy Railtown, is right here. That's my favorite reason to buy Railtown. If that doesn't convince you, I don't know what will. They all like it. except for this one right in the middle. He's a little confused. That's Tony, Twinkle Toes Tony. And up here is this one is amazed. Here's my biggest reason to buy Railtown. All right, now let's get to what's this? Ah, not for nothing. Jimmy Connors, most ATP titles. Jimmy Connors, 109. I saw him at his last one. I saw the last one he won. Roger Federer, 103. Novak Djokovic, 101. And then most titles on hard courts. Novak Djokovic, 72. Roger Federer, 71. And Andre Agassi, 46. I know that has nothing to do with Railtown. All right, let's see what else I have here. I really can't read anything, so it's all a risk. Let's see what this says. Vic Vega Capital. Oh, here's somebody sent me this, and this is important. I've told you before that Canaccord Genuity is notorious for working with shorts. So let me read what Vic Vega says. I like the company, Railtown, and the recent progress. The only thing I'm worried about is that Canacrooks has their fat fingers in this, and from years of watching Canacrooks, in companies like this, nothing good long-term happens when these guys control the market for a company. I agree with that. That's one of the risks with Canaccord. And how would Corey know that? He wouldn't know that. But I also think Canaccord, it's not the whole company. It's part of Canaccord, So it's like Roth Capital. It's part of Roth Capital. It's not all of Roth Capital. So here he says, the real Dirty Randy says, I've said this from the beginning. The fact that smart Canadians, now come on, are there any? One must assume there are smart Canadians. Just kidding. The fact that smart Canadians don't understand this is mind-boggling. They being Canaccord, have shorted all along against clients' positions. I agree with that. I think Canaccord works on behalf of the shorts, and I think it's possible shorts are trapped in Railtown. I hope to hell there's not a squeeze. But one possible explanation for the delay is not the attorneys, at least not the attorneys handling the case, but the top of Canaccord. Can you imagine the big funds like the Toad and the rest pour tens of millions, hundreds of millions through the law firm annually, tens of millions. And they call up and say, hey, can you slow walk that a little bit? I've got a client who caught his knickers in the bicycle chain and just needs a second to pull over and make sure he gets his jeans unstuck. Could you just delay that a little while? That could be happening. That easily could be happening. So I agree with Dirty Randy. I don't know who Vic Vega is, but I agree with him. That's something to be aware of. All right, now what do I have here? I really don't know. It's risky when you don't know what you have. Oh, Hesham. Fahmy. This is from his LinkedIn. Incredibly proud to celebrate our TELUS third quarter achievements, building out national AI infrastructure to power Canada's digital future for generations to come. This quarter, we opened Canada's first fully sovereign AI factory, a groundbreaking, ultra-secure facility giving Canadian businesses and researchers access to world-class AI technology to develop smarter products, streamline operations, and compete globally, all while keeping data secure and under Canadian control. We joined forces with transformational partners and customers, including Accenture, OpenText, Ernst Young Canada, League, and Roadhouse, Railtown AI Technolgies, in order to unlock the benefits of sovereign AI across our country. Oh, I see. TELUS, there's more than just this. I didn't copy them all, but I saw 4, maybe 5 research reports on TELUS, and they weren't all good. But what they show you is their natural 4 or 5 companies who could come out with research on Railtown. But anyway, this one from Finimize, whatever that means. It's the Finimize newsroom. I guess all the good names were taken. TELUS ups AI ambitions with bold new revenue target. TELUS is aiming for Canadian $2 billion in AI-enabled revenue within 3 years, within really 2 years. Betting big on business-to-business growth and earning an upbeat outlook from analysts. Not all of them. I didn't copy all of them. Some were good, some were bad, just because it got repetitive. But my point is, for example, from Finimize Newsroom, let's start a newsroom and call it Finimize. I wonder if anyone else is using it. No, I think we'll be the only company using Finimize. It could be a place that we could actualize. Anyway, TELUS is turning up the heat on its AI strategy, aiming for $2 billion in external AI-driven revenue by 2028. How much of that are they going to be doing with Railtown? I know they got other partners, but how much is going to use Railtown's agentic solutions? I don't know. Be a good question. More than double its earlier goal. What does this mean? The Canadian telecom is sharpening its focus on artificial intelligence, lifting its AI revenue target from Canadian 800 million in 2025 to a whopping Canadian 2 billion by 2028. A move that suggests a steep 35% annual growth rate. TELUS plans to drive this growth from units like TELUS Digital, TELUS Business Solutions, and its recently launched Sovereign AI Factory, all centered on providing advanced digital solutions for business clients. Well, whose agents, or whatever you call them, whose tools are these companies going to use at the TELUS Sovereign AI Factory? Is it going to be Conductor? Or how much of that business, that $2 billion, is Conductor going to penetrate? It might be all of it. This is very interesting. What if they only get, I don't know, half of it, a quarter of it, 500 million, and they get 20% is probably high, but it's easy arithmetic. They, that'd be 100 million to Railtown, to Roadhouse, right here, just from this. Anyway, RBC Capital Markets, it's one of the research companies. The others, I'll look them up before I get off the call, I'll read them off to you, has called this an edge for Teles's enterprise strategy, but there's still some skepticism for the declines in their landlines. Why should I care? AI ambitions ignite long-term growth hopes. Teles's aggressive new AI target is giving investors something to look forward to, especially at a time when old school telecom lines are losing ground. While the long-term opportunity looks promising, success will depend on how well Teles turns those AI investments into bigger profits and protects its turf. Now, there's two parts of that. Every company is going to try to grow. That's a bad use of that word, but everybody uses it. Everyone's going to try to cause growth in their profits via AI. And everybody has to protect their turf. And they have to use Roadhouse. Strong third quarter numbers and steady analyst backing have left the market watching Tesla's next move with cautious optimism. The bigger picture. Canadian telecoms chase digital reinvention. Doesn't sound like the end of a bubble. Actually doesn't sound very bubblish at all. Teles's AI charge reflects a growing trend among Canadian telecoms to embrace digital transformation and business services as legacy businesses slow. As firms put more weight behind AI, health technology, remember that, and data solutions, they're not only fueling innovation, but also building the backbone for Canada's digital future. Key for competing on a global stage. This is another one. There's two or three more, but here's another one. Telus strategic growth and resilient performance justify buy ratings. There's others out there that are not giving a buy rating on Telus. Yesterday, TD Cowen analyst Vince Valentini maintained a buy rating on Telus and set a price target of 26 loonies. Vince Valentini has given his buy rating because of a combination of factors, including Teles's strategic initiatives and financial performance. The company has set ambitious targets, such as achieving $2 billion in AI-related revenue by 2028, which demonstrates a forward-looking growth strategy. Additionally, Telus has shown resilience, with its stock price declining by 9% since September, yet still maintains a robust 8% yield, that's a dividend, which is attractive to investors, especially in declining interest rate environment. Moreover, Valentini highlights the company's strong infrastructure investments, particularly in upgraded Sith fighters, which justifies a premium valuation compared to its peers. Despite some reliance on debt or share issuance to fund dividends, the analyst sees minimal risk of dividend cuts and anticipates continued annual growth of 3%. These factors reinforce a buy rating. And then there's RBC. Anyway, there's plenty of research firms that could come out for Railtown. Oh, this is Barrick. Barrick looks to get a handle on North American operations, find growth. Nevada Gold. Guess what? We, some of you anyway, are investors in a perfect acquisition candidate. Perfecto. All right. I am almost legend. Let me get a sip of coffee. And let me quickly give a quote on Railtown. Doesn't look like anything has happened except it's trading on the ask. It's 41.6 by 44. Its last trade is 44. It's 180,000 shares. 1,000 shares went off at 44. All right, I'm almost legend. Thoughtful Tuesday, Sir William, being that everything with Railtown has moved at a slow pace. No kidding. I'd like to argue with you there. I will slightly adjust your statement in saying that at least according to everything we see, everything at Railtown has moved at a slow pace. What we don't know is what's going on behind the scenes. I think this report is very powerful. It's not on the website yet. I linked it to my sort of I had these 10 reasons to buy Railtown now. My number one reason, you can build a large position inexpensively, in my opinion, in a stock which may be bought out. That's my number one reason. You can build a large position. My second reason, they're all tied in, is that soon I think Railtown will trade like a real market or a normal market. And so you'll see discounted forward revenue projections, which I assume will be good. The good news will be discounted to today, brought forward today. It'll be reflected in good prices today. My third reason, Langchain is valued at basically somewhere, depending on the number of shares you use, somewhere between $4 and $9 a share in comparable pricing to Railtown. Again, depending on how many shares outstanding you use. And then I said, revenues are known. They're not exactly known, so I wrote in part, but you can extrapolate them somewhat. And I said due diligence. I linked, see that Google? And I know you have to type it out. But I linked this presentation that I keep showing you right there. My fifth reason, which I think is important, this Canaccord Genuity doesn't have the leverage it normally would because there is no toxic funding out there. There's no large institution dedicated to destroying the company like the toad. There's nobody trying to steal the entire market cap. I think it's a big difference here than all these other companies, or almost all of them. My sixth reason is I think we're getting a benefit here that it's on the over-the-counter. The over-the-counter computers reading the news automatically sold their short masters into trouble because it really isn't an over-the-counter stock. It's a Canadian stock. So I think that there's two aspects of that make it good to buy. One is it suppressed the price artificially. On the other hand, what gets confusing is Canada might be where the price is established. So it's my sixth reason. But also, it's possible that these guys are trapped and they at some point cover. I hope not. But anyway, it's not an over-the-counter stock. They got fooled. It's a Canadian stock. Anyway, that means more to me maybe than to someone else. And then number 7, sometime after Friday, I think it's possible Canadian big boys and girls will start buying. And I linked a story to Mavericks, and I know you can't click on it, but maybe you can just take a picture. I don't know, type it in. But if you just Google John Ruffalo, and you'll see this news under his name. So I think all you need is one or maybe two buyers that each want to have 4 or 5% of the company, and it's a different price. My 8th reason is the TELUS Sovereign AI factory. And you've seen the news on that. There's all sorts of revenue sharing. I'd say 4 different ways that Railtown could make money on the TELUS Sovereign AI factory. It all boils down to people are going to be using their conductor tool, and they'll make revenue in partnership directly, but they'll also revenue share with TELUS. My 9th reason is I expect after the AIP news is complete, sometime afterward, I'm not saying the next day, but I think there'll be research coming out. And I think in Canada, unlike in the United States, there are dedicated research teams that address low price stocks. And there are buyers for low price stocks. So that's my number 9. And number 10, it's been a bloody long time that the company has actually been able to talk about itself. And I just showed the 11th news and some of the other news. Anyway, let me go back to your comment. It is slow just to get to this point. Is it possible that accumulation and big buyer investment will be slow after Friday as well? That seems like such a simple question, and I'm probably going to annoy you by breaking it into 2 parts. I think it could be slow after Friday. They may not come in on Monday. They might not come in very much on Tuesday, Wednesday, Thursday. So in that sense, it could be slow for days, a week. So that's my first part. The second part is once it starts, I don't think it'll be slow. Now, on the other hand, they're professional buyers. They're not going to come in and hurt themselves. But if, just picking on my favorite potential buyer, if the Mavericks 2 fund gives its brokers, and they'll have brokers all over the street, and they may not give one broker more than, a few million shares, but they'll say, whoever, the woman running the desk for this investment, she'll call over to, I don't know, Cohen, and say, look, we'd like to buy Railtown in size. What can you offer? Well, we don't have a lot here. We can offer you 300,000 shares at 61 cents. All right, well, we'll take it, but we'd also like you to work an order for an additional $1.5 million shares, and we'll pay up to 65 cents. If it goes higher than that, give me a call, but please do your best. I don't no need to remind you we're going to be an important client of yours, so we're going to pay attention. Don't give that free rein to abuse us. So they may leave $1.5 million share order with Cowen. They may call up Canaccord, where if they're smart, they know Canaccord has shorted a bunch of stock on behalf of Canaccord's clients, and they say, hey, look, we'd like to buy 5 million shares. No, they wouldn't do it that way. They wouldn't show their hand. I have interest in size in Railtown. What can you offer? Well, hang on a second. Let me call Francois. Hey, Francois, how many shares do you have available of Railtown? Well, we've sold a lot of it, but my clients are still willing to sell 2 million shares at 62 cents. That's a little high. Well, that's what they're going to try to buy it back lower. So it's fill or kill. All right, we'll take it. But that's 2 million. Let me leave an order with you for 3 million at 61 cents or better. Then they call over to TD Bank. Look, let me cut to the chase. I'd like to buy some Railtown. What can you offer me? Well, we don't have much here, actually. We can offer you a couple of hundred shares at the ask. But let me call around for you. All right, we'll take the 200. And how much you interested in? Well, it depends on what you can bring, what price, but we're willing to buy up to 5 million shares at up to 65 cents in Canada. So that might be a scenario that Mavericks, I'm using them as an example, making it up, where they get an order out there for almost 5% of the company. And what they're trying to do is buy as much as they can quickly without running the price up. So initially, those brokers are going to call around to their sources and see how many shares they can get for Mavericks. After they do their best, they'll call back to the woman handling the orders at Mavericks, and they'll tell her, look, one after the other, we'll tell her, we got this, got that, boom, bop, boom, bing. And at the end of the, maybe 20 minutes of phone calls, Maverick suddenly owns 2.5 million shares, 3 million shares of Railtown at 65 cents. But now the bid is 65 cents. The ask is 75 in Canada. And they can't buy down there anymore. And so the decision comes to this trader, and she says, well, she calls around to each of them. What do you have at 75 cents? What do you have at 70 cents? And there's not much there. But she takes what they have. So she actually drives the price to 75-cent bid, and she now has a position of 4 million shares, which I think if that happened, she did brilliantly. She did absolutely brilliantly. And now the bid's 75 cents. The ask is probably 85 cents, 90. And all of those brokers and all of the phone calls they made, it starts going around all the trading desks. Mavericks is a buyer. Somebody's buying. Hey, put in some for me. I put me in for 50,000 shares. Put me in for 25,000 shares. Hey, do you think there'll be any options on it? Well, there aren't any options yet, but they might be in the next couple of days. All right, well, let me buy 10,000 shares. Next thing you know, the stock's 95 cents to $1.05 in Canada, all because Mavericks started buying, all because Mavericks, who already knows the story cold, understands that Railtown is better than Langchang at this point. So my first answer to you is, and I made up that it's going to be Mavericks. I have no idea. Mavericks may have to wait. Maybe they can't buy some. I doubt it. I think Mavericks is a very logical buyer of this stock. But anyway, it's just I'm making it up. Mavericks may not do it right away. I mean, this announcement may come. Remember, the announcement itself, the filing itself, could take its own sweet time. The law firm that Railtown selected, I think, does a beautiful document. Mostly, some of the wording is confusing, but it's a good document. But to the extent that Canaccord's clients maybe deal with that same law firm, maybe there's a slow walk going on, or maybe it's other reasons. But it's quite possible that if the Railtown AIP deal closes on Friday, we don't see a filing until Tuesday or Wednesday morning. Up in Canada, my experience with just this situation is Canadian bureaucracy and some Canadian legal efforts are very similar to getting something done at the World Bank. It's very slow. So the first part of my answer to you is yes, I think it could be slow after the merger, the acquisition. But once it starts, which I can't give you the exact date, but Mavericks is good. Look, one company is going to be able to grab millions of shares, I don't know, below $1.50. Maybe two, but I doubt it. As long as the machines are set on mimeograph, spit out as many fake shares as you want, they'll be able to do it, but it won't last that long. And so after it starts, it being buying by Mavericks, and then it's on the screens over at Cohen, it's on the screens at any number of the institutions who take Capital Research's reports. It's on the screens of some of the insiders or whales that haven't been able to buy, and the stock starts moving. I think it'll be very quick. I'm almost legend. Once it starts, I think it's $1.25, $1.50. And frankly, I'm not sure what stops it at that point. Now, if Mavericks is trying to buy essentially 5% of the company, they'd have to buy about 12.5 million shares. Again, it's my example. I'm making it up. If for some reason, which I think is impossible, but if the shorts and the criminals are slow on the uptick, and there are no geniuses in that crowd, otherwise they'd have real jobs on Wall Street instead of being bird dogs for criminals. But if somehow Mavericks were able to buy 10 or 12 million shares all under $1.50, it could pause. It could even have a pullback if nobody else joined Mavericks. But I find that highly unlikely. I think once Mavericks, in my example that I'm making up, once Mavericks starts buying, you might see Omer's Ventures come in, another logical buyer. And Omer's Ventures says, we want to have 5% too. I mean, they don't know what Mavericks is doing, but they go through that same rigmarole. But Mavericks was first, so all the easy stocks already taken. And now Omer's is paying $1.25 to $1.75 just to get 1 million shares. And suddenly the bid is $1.75 to $2.10. And the phone calls come back to Omer's Ventures. We can get you 1 million shares at $2. And the guy there says, all right, take it. All of a sudden the stock's $2 to $2.50. And then comes a phone call into Omer's Ventures. We can get you 3 million shares at 2 3/8, down a little bit from $2.50. All right, take it. So all of a sudden the bid is 2 3/8. The ask is $2.75, and the guy at Omer's Ventures is saying, "Oh no, I'm the only buyer. Maybe I'll pause here." So maybe he stops a bit. Mavericks is out. They've already filled, and the stock pulls back to 210, maybe to 190, 215. And then maybe Omer's Ventures is induced, well, 210, 215, let me see what I can buy. And there's 400,000 available there. He buys it. But as long as you guys don't get enticed out, there's no stock available anywhere for sale. There isn't any. The only sellers is going to be the counterfeit sellers. So as these institutions buy, they're going to take stock off the market, and the only way they're going to find stock is if the price goes up, and the criminals think that by selling at higher prices, they can average their loss, their price upward. So when they think it's going to pull back, they can make a profit. That illusion is not going to last for very long. And the only stock out there for sale is yours. That's why I'm such a jerk every time somebody comes on here to try to get you to think of all the negatives and all the hot money things and all of that. You're the only stock out there that they can shake loose. They're not going to shake loose Corey Brandolini's stock. They're not going to shake loose Dr. Tom Core's stock. They're not going to shake loose any stock that the insiders and big whales already own. They're not going to shake it loose. And as the institutions buy, that stock goes into a lock box. And it doesn't come out. So I know that I've been wrong. I'm a broken record. I cannot tell you when. My theory is that a lot of these big funds and smaller funds who know the story, particularly Mavericks, who founded AIP, I think they are precluded up in Canada from buying the stock, at least until the AIP deal gets done. And they may be precluded for a day or 2 days or 3 days or 4 days. I don't know the rules. But I'll tell you this, they're not going to cheat the rules just to make $1, because they want to stay in business a long time. And they're going to believe that AIP and Railtown can be worth 10 billion or some number. And if they establish if Mavericks establishes a 10 or $15 million position at $2, and the stock goes to, I don't know, $125 in a buyout, they never sell. Well, they get to charge 2% a year on the assets, 20% or more probably on the, and I don't know how they do it. Some funds charge you on the appreciation, even if they don't book a trade. And then you have all these hurdle rates and these get back in if they have a bad year. It's all a nightmare. Some funds just do it cleanly. When we book the profit, we'll charge you a piece of it. And in that case, it might be more than 20%. But the key is Mavericks is going to want to be in, if this is the first mover, one of the key solutions to bringing AI to the sovereign AI factory and bringing it all into Canada. And he'll act. He won't have hesitancy, or his trader will act. She won't have hesitancy to act like we do. Well, we got to see it in the price. They announced some things, but the stock's still down. There's something wrong. I'll wait till it's up. They don't have any of that, because they have the balls to do their own analysis, stick by their own analysis, and they buy. So I have a bifurcated answer. It could be slow at first, but when it starts, it's going to be rapid. That's my opinion. Okay, here, great. Thank you. I'm almost legend. So the end of Railtown's fiscal year was September 30th. Thank you. I didn't know for sure. Okay, so that means November 15th will be an annual report. And that's even better for my argument, that if they have basically 0 to very low revenues to show for that entire year, imagine the growth rate they're going to be able to show in their first quarter, our fourth quarter, their first quarter numbers, and their second quarter, our first quarter numbers. They're going to show great revenue growth rates, which should get, all things being equal, high multiples. So it's exciting. It's exciting. Railtown's last trade is 42.92, 41.61 by 44 cents. 400 shares at 42.92. That's the last trade. Prior to that was 100 shares at 44 cents. Thank you, Marty Party. Thank both of you guys. I'm Almost Legend and Marty Party. I just didn't know. I should have looked it up, but I didn't know. So the fiscal year ends September. Both of you were great. Thank you for both of it. I appreciate it, Marty. I appreciate it. I'm Almost Legend. Tebow. Think they would have finished their year end to close the deal. Yeah, I bet they were trying to do that. Without blaming individual attorneys, it could be that Canaccord put pressure on that law firm somewhere to slow everything down. I don't know, because Canaccord needs to help their criminal clients, because that's where they get their revenue. Or some of it. Could be. Anyway, they did get it finished by September 30th. But it'd be interesting, Tebow, will that give them an incentive to finish by the time they report their annual report, so they can put some information into management discussion? So that, I think this Friday is the 14th. It is. So if they put out their annual report on the 17th, that gives the attorneys the weekend to add in the management discussion about the acquisition. I'm sure they already have most of the words written. That can't be that hard. So it's to expand on your point, Tebow. Maybe that's their goal now, is to finish the acquisition prior to the annual report. I assume they'll issue a report. Well, the quarterlies usually get done within 45 days here. I guess an annual report could take up to 60 days. So maybe there's not an urgency to get it out on Monday, but maybe sometime in the near future, we're going to see the annual report, and to have this deal closed so they can discuss it might be significant. And then we might be able to hear a little more about revenue. My guess is, do you ever listen to, I don't know, Squawk Box or Kramer or, I don't know, MSNBC's business? They always talk about guidance on revenue or whisper numbers or whatever. It could be that we get some sort of combination of the company talking about revenue in general, but maybe one or two of these analysts will create a model for what she thinks revenue will be. You know, if you assume the addressable market is this, if the penetration is that, if the expansion in the number of shares could be X, and the growth in the market is Y, well then Z could give you an indication of the revenue that Railtown will experience over the next 12 months. And then they give a price target based on that. So there's going to be a lot of, I think, I know it's been in the ditch. I know, very normal for human beings, by the way. We all do it. We tend to drive emotionally. We tend to drive looking in the rearview mirror. I'm not talking about actually driving, but our emotions, like if we've just had a bad relationship, and there's a new one right in front of us that's better, for some reason, most of us can't just look forward and focus on that. We got to look up in that rear view mirror, and we're driving and we're looking there, and we miss out. We hit the girl in front of us and send her to the hospital because we're still looking backwards. And we do that in anything. And so our tendency is to assume that Railtown's been a slog for 10 months. Railtown's been a slog probably starting in January, and it's been red all through the beginning of November, pinkish, because they did put some stuff out, but and I guess to go to I'm Almost Legends question, I assumed that next week is going to be, flashing green. It's going to be slow. I didn't really pick up green until the next week, Monday the 24th or the 25th. The problem is, in the United States, is anybody really going to be at their desk on the 24th and 25th? It's probably complete dead time in the States, but luckily Thanksgiving already occurred in Canada, and they have a lot to be thankful about. So they took their time off, and now they can work while the rest of us celebrate football. And then December, I think, to go to I'm Almost Legend, I'm hoping that December, we have 3 good weeks in December, but it's really sketchy. A lot of money, a lot of bosses, and I won't talk about what I think about the newly integrated bosses, but a lot of powerful people take December off. They make their bonus numbers in November, and December's a goner because they want to hit the ground running in January. They want to have a good. Unfortunately, Railtown has left everything to the end of the year, and I don't think it's their fault. I really don't. I really am starting to like the theory that Canaccord Genuity screwed the pooch on behalf of Canaccord Genuity's real clients, who are the shorts, and people like the toad, the Anson funds. That's Canaccord's real revenue source, the toad, and others like the toad. So, all right, let me go back to the comments. I already forgot what I was saying. Tebow said, think they would have finished their year end to close the deal. Yeah. you're thinking like a capitalist in the United States, although I don't know where you are exactly. Things are a lot more reasonable up in Canada. So we now have 43 cents by 44 cents, 7,000 by 800 and 8,400. The volume really hasn't changed much at 181,000. We have an hour and a half to go, and the stock's up a penny. And I'm running out of things to say, but that's all right. When did that ever stop me? That's what you're saying. I know exactly what you're thinking. I know exactly. That never stopped you before, you're saying. And in Canada, on delay, I think it's on delay, the stock is trading at 59 cents. That's the bid. The ask is 62 cents, and the volume is 64,620. On year-end numbers, let me see what you said. I think they would have finished their year-end to close the deal on year-end numbers. Oh, I see. Yeah. No, I think what happened with the merger, the value isn't this year's numbers. I think it's clear to me with the structure of the 50 million shares, and then they take 1 million off in case there was a cost overrun, and they take 10 million for a face saving minimal revenue target. I think that was a way of justifying increasing, I have no idea, but perhaps the independent, and I would assume Canaccord, that's why they hired Canaccord, the independent valuations maybe came up with a ratio closer to 15% for AIP and 85% for Railtown. I don't know. I'm making those ratios up. But to get the deal done, Railtown went up to around 22 and a half, just under that. And they did it with this face-saving device to make it look like, it was performance driven. And I think AIP adjusted their expectations downward because remember, to actually roll up some of the companies, the joint company has to issue stock. So my guess is that the deal, the agreement on 50 million shares was agreed months ago. I don't know why it took so long to paper up, but I'd say it was agreed in essence. I don't know, but I would say back as far as July. August, maybe everybody was on vacation. So maybe it was agreed September. But I don't think it had anything to do with revenue numbers or costs. They understand the value proposition and the spectacular growth potential of AI. You and I don't. So we're expecting, well, we want to see revenue and when's it going to start? And it's all fair. Our requirements are all fair. But I guess my belief is, and I could be wrong, that we haven't had a chance to see what's really going on behind the curtain. We haven't seen what's going on behind the swinging doors. All we're seeing is the pouring of the wine and the champagne. That just started. Otherwise, we've been sitting on our tables waiting for the waiter and the waitrons and service for an hour. And they just got around to bringing us a drink in the menu, well, the menu and then a drink, and we're still can't see behind that swinging door. And I think that's coming as soon as next week. But to address again, I'm Almost Legends question, I'm not sure that the buying ramps up on Monday or Tuesday or Wednesday. There's a process, even with a company like Mavericks, where they're going to have to do a little due diligence. Get on a Zoom call with Corey and Marwan. Have several calls with Dr. Core and his team and Mike Nobrega. Get a couple of documents into their file documenting their conversations and their reasoning, and maybe taking a vote in the investment committee. And then they'll give their trader in-house at Maverick the instructions, okay, we want to own 4.9%, the non-reporting percentage. And she goes to work. But that may take a few days. I don't know that answer. But once it starts, once one buyer comes in for size and means it, I think it's going to start a parade or a competition or a scrum of buyers. And it's very hard because all we've seen is this, and I've been making projections which have all been wrong. So it adds to the sense that, what the hell? Are we going to be sitting here until March? I don't think so. But I do have to give the caution that, and maybe this was something that Canaccord caused. I don't know. I don't put anything past the criminals. It's tough. It's tough. There's not many more trading days where people will be at their desk left in this year. There just aren't. But that also works in our favor. If you're a Mavericks or you're an Omers or you're a Fidelity AI Canada Trust Plus Bust Fund, and you're not someone young and just getting ready to burn your bonus for 2025, but you're trying to think ahead for 2026, you're going to want to establish your position during those days that people are at their desks. So there could be an intensity of buying of the stock. I don't know. In Canada, it could come in the last week in November because they don't have Thanksgiving. And in Canada, it could come for the first 2 weeks in December. So it could be a 3-week period starting the last week of November, the first 2 weeks in December, and there's a scramble to buy shares of Railtown for a handful of funds. And I guess what I'm saying is that's where I come down, is that that's going to happen. I think last week of November, first two weeks of December, I'd say between 1 and 5 institutions in Canada start buying the stock in Canada. And I think you're going to have a whole different price. And you're going to say, well, you've been saying that crap for 5 months, 6 months. It's true, I have. But I guess in my own defense, I haven't changed my story. I remain adamant that this is the wrong price for this stock. Should it have the price of a private company being manipulated in the price on the way up so everybody can give each other bonuses and they know they can place it in the next round at a higher price so everybody gets bonuses? Maybe not, because maybe it's not as much you scratch my back, I'll scratch yours as that is. But I don't think Railtown should be a $60 million market cap when they're a better company and they have more sources of revenue than Lang Chain, who was last valued at 1.25 billion. There's a discrepancy. How do you match those two up? Do you bring Lang Chain down? Lang Chain down? Or does Railtown go up? My money, obviously, and your money, is on the idea that Railtown's valuation is going to go up to close the gap between 60 million and 1.25 billion. There's only two ways. Leave the gap wide. Does that make sense? Not to me, it doesn't. But some people might say it makes sense. Railtown is shit. Lang Chain is the real deal. I don't agree with that, but some people might have that attitude. I think Railtown is better than Lang Chain. I just showed you the checkoff list. And also because they have other sources of revenue and they're going to make money. But maybe that's equally as extreme as saying that Railtown sucks, the big one. What's a compromise? Well, the compromise is Railtown comes up somewhere to get almost in the range of Lang Tracks. Well, you still got a $3 or $4 stock by the end of the year. That's what I'm saying is going to happen. But it's every day it's a slog. Every day Canaccord Genuity's clients sell, print stock that doesn't exist because nobody cares about the integrity of United States markets. What they care about is making a return for the Toad, for SAC, for our own retirement accounts. It's all fraud. The Toad. Take a look at the image below, which will help non-believers understand the scale of the problem. Please remember, this is just one of the clearinghouses in Europe, of which there are many. CSDR settlement fails report in 2022, which Ann Wagner doesn't care about. You got Ann, you've got Adina, they don't care. And then you got the goofball, Chucky Wucky, he doesn't care either. So the failure to deliver securities, there were 13,249 settlement fails. The value in euros of the settlement fails, 27,500,000 in one bourse in 1 year. The failure to deliver cash was $2 trillion. So the total was $29 trillion between cash and securities. The total settlement instructions value was 117 trillion. So roughly a quarter of those settlements failed, and no one cares. No one cares. So over 27.5 trillion with a T in failing trades in Europe in 2022. No one cares. And Wagner doesn't care. Remember how difficult it is to short European stocks. A high percentage of this is North American companies. Why is this not front page news? Indeed, why isn't it? Canaccord makes their money here. And so maybe Canaccord somehow nodding a wink with somebody over at that law firm. Slow it down, would you? Because we got to move these trades offshore. Could be happening. But I think after finally the deal is sealed, I think you're going to see buying in a very short period of a short window. And I contend it's going to be more than one buyer competing with each other. It's going to be a short window, so the price is going to go up. Let's say last week of November, first 2 weeks in December. But you do run into a problem with the holidays, skiing and whatnot. I mean, this is the benighted class of leisure. It's so hard. You don't know how hard it is trading stocks. It's just so hard. We need our time off. All right, the bid is 41.6. The ask is 43. The volume is just 27,000. I think that's the real volume on the sell side today, 27,000. The bigger number, I think that's gives you the clue that that's all. The word we use is counterfeit, but phantom. The last two trades I see, 7,000 at 43 and 7,000 at 43. The last trade is 43. The ask is 43. And let's go on with the questions. Brandon Neely, as you know, I have a larger position than whom? You do have a good position. You do have a large position. I don't have it in front of me, but you do have a large position. One fear I have is a reverse split. Oh, God. I don't know what to say about that fear. There is no toxic convertible note. The stock has not been shorted downward from a higher number, a significantly higher number. I got to check one thing. So the listing requirements for the Canadian Securities Exchange depend whether you're standard or non-venture issuer. Okay. So the general requirements to be listed on the Canadian Stock Exchange. This is according to AI Overview. You have to be in good standing as a reporter of your finances and et cetera, et cetera. You must have sufficient financial resources to carry out business for at least 12 months following the listing. Well, that's different. I mean, it's already trading. And I would say that is a subjective call, because at any one time, if you're looking at cash, companies may not have enough cash, but if they have shown an ability to raise money or they have revenues coming, that's financial stability. But all right, so that's an open issue. Minimum working capital. You need a minimum of $100,000 in working capital. Although you can have alternatives to that, including a history of revenues or being listed elsewhere. Your public shareholders, you need a minimum of 150 public shareholders, and at least one board seat belongs to somebody who owns shares. I guess it says a minimum of 150 public security holders who each hold at least one board lot is required. Ongoing reporting must be current. Okay, the specific requirements for non-venture issuers, you need a public float at the time of the listing of 1 million shares and 300 public holders. The requirement for a SPAC, an IPO of 30 million, this doesn't apply here. The IPO price per share must be a minimum of $2. That's for a SPAC. All right, so let me ask a different question. Because I have obviously asked the wrong one. Okay. The question I asked, and Brandon, I'm a bit shocked because I guess it just doesn't register. This is not an over-the-counter stock. It does not, US rules are not driving the price of Railtown. It's a Canadian Securities Exchange stock. So let's see, I asked, what is the minimum share price required to remain listed on the CSE? The answer, the Canadian Securities Exchange does not have a single minimum share price requirement for continued listing, but instead uses a tiered system with different standards. For standard venture tier, there is no specific minimum share price, but they must meet other requirements like minimum public float or income. For senior tier, I'm bleeding, I'm sorry. I'll try to lean this way so you don't see it. I don't know what happened. For senior tier or non-venture issuers, there are minimums such as maintaining a public float of 500,000 shares with a market value of at least $2 million, or reporting net income of 100,000, and a market value of listed securities of at least 3 million. So nowhere in my initial reading, Brandon, on the CSE, is there a requirement of a specific stock price. Therefore, in my initial interpretation, there's not going to be any advice to reverse split, number one. Number two, then if that's your concern, you don't believe any of the rest of the story. You just think it's a manipulated stock. They're gonna do a reverse to remain listed. You don't believe in the revenue. You don't believe in the multiples that the revenue could get. You don't believe in the growth. So it's just a manipulated stock like G-Bucks or COSM or Genius Brands or CRTD. It's just another manipulated stock. I don't know what to say to that. If that's what you think about it, you probably shouldn't be in the stock. Let's see if we can determine. It's on the CSE Composite Index, which means it's in really good standing. They have 138,908,000 shares outstanding. I don't know if it's going to give me any information on this page. I can go to another one. I can go to Yahoo. Oh, there's the Form 9. There's the Form 9. Somebody asked me about that. I couldn't find it yesterday. So on November 6th, Railtown has issued an outstanding securities of 143,388,458. The news release came out October 8th, and the closing price the day before the news in Canada was 81 cents. don't know what they're trying to say here. Every question is empty. Here, acquisition. The issuer is acquiring all of the issued shares and outstanding shares of AI Partnerships Corp., approximately 21,065,894 shares on a fully diluted basis pursuant to a three-cornered amalgamation. AIP is a Toronto-based company that has established an affiliate network of over 160 primarily North American AI SaaS companies that provide AI-based vertical market solutions and AI development and management tools. The issuer confirms that the acquisition of AIP does not constitute a quote unquote major acquisition as defined under CSE policy number 1. The amalgamation agreement dated October 6th, 2025, as amended, the amalgamation agreement was entered into by the issuer, AIP, and 173-66400 Canada, Inc., a wholly owned subsidiary of the issuer. Pursuant to the amalgamation agreement, AIP and Subco will amalgamate to form a new entity which will be a wholly owned subsidiary of the issuer, which is Railtown. Under the terms of the amalgamation agreement, the issuer will acquire all of the outstanding shares of AIP from the holders thereof in exchange for up to a maximum of 50 million common shares. That'll happen. It's just face saving, in my opinion. It'll be 50 million shares of the issuer, representing an exchange ratio of approximately 2.52 issuer shares for each AIP share acquired. Such shares issued at closing may be less than the maximum of 50 million shares and will be subject to adjustment in accordance with the amalgamation agreement. Yeah, it's just got a screwy earnout, but it'll all happen. So just count on 50. 50 million shares, common shares, deemed value 50 cents Canadian per common. Such shares issued at closing may be less than the maximum of 50 million shares and will be subject to adjustment in accordance with the amalgamation agreement. Well, this probably took the attorneys a little while to fill out. Details of any dealer, agent, broker, or other person receiving compensation in connection with the acquisition. Canaccord Genuity. Canaccord Genuity received $350,000. I guess we should take solace in the fact that it was Canadian dollars. It looks like they didn't receive securities or warrants. So I guess that's good too. This is signed by Paul Woodward, November 6th. So Form 9 is clearly a filing which must be made prior to the acquisition. So it's good. Got done. Good step. Okay, I'll go to Yahoo Finance instead of this one. AMD CEO, AI data center market will be worth $1 trillion by 2030. Written by Daniel Howley, technical editor. AMD CEO Lisa Su says AI data center market will be worth $1 trillion. Advanced Micro Devices CEO Lisa Su said she believes that the data center market will be worth $1 trillion by 2030. Su made the announcement during the chip makers' Financial Analyst Day in New York on Wednesday, where she outlined the company's revenue growth and projections for its performance going forward. Su also revealed that the firm is seeing strong momentum with multiple gigawatt scale project opportunities for its MI450 series chip and Helios rack scale offerings across hyperscalers, AI native companies, and sovereign AI businesses. There is no question data center is the largest growth opportunity out there, and one that AMD is very, very well positioned for, Su said. We now have all the pieces to deliver full AI factories, and that is really our goal throughout this entire stack, across CPUs, GPUs, software networking, and our cluster level systems design, she added. As a result, Su said "see" to the future. AMD is in a battle to grab market share from NVIDIA, who continues to dominate the majority of the AI data center market. NVIDIA's market cap now sits at $4.7 trillion, though it previously climbed above $5 trillion. AMD's market cap is $396 billion. See. Su. All right, now let's see the statistics. Okay, in Canada, the market cap is 113 million. The enterprise value, so it meets that requirement. It says 28% held by insiders. The float is 104 million. Doesn't say how many shareholders there are. I thought it would. Maybe I missed it. All right, let me see. Let's see what profile says. No. Let's see what the financials say. I really thought they put the number of shareholders There, let's look under holders. 28% of shares held by insiders. The largest institutional holder is High Point Advisor Group. They have 20,000 shares as of March this year. So Brandon, I really don't know how many shareholders they have. But from what I read, there's no incentive for the company to reverse split to stay on the Canadian Stock Exchange. That's number one. Number two, there is no motivated group of attorneys, so-called investment bankers, bird dogs, hedge funds that need to steal this whole market cap to save their short position. So there's nobody giving advice to the company that if you want to stay on the exchange, you got to reverse split. That's two. Three, the company doesn't need revenue. Sorry, I said that wrong. They don't need to raise money from the Toad or from Canaccord Genuity. So there's going to be no raise on the New York Stock Exchange, the NASDAQ, at $1 or higher. The CSE, which is in Canada, Canada, like the UK, accepts that stocks trade under $1. So I don't know where you get this from. But why would the company need to go to $5 to be on the NASDAQ, to be on the New York Stock Exchange? Then you don't believe there's any revenue coming. So a gimmick, they're going to have to use a gimmick to be listed on the New York Stock Exchange. I would suggest you don't understand your investment. But you've seen a lot of stocks under $1 do this. Like Genius Brands, genius guy running it. Like MMAT, the mad scientist running it. Like Vocal, a content creator based on plump penthouse nudes. GTII, apparently a fraud from the jump. I don't know, trying to think of others. You're going to see Logic do it, I think, if they even stay in business. These are all gimmicks so that the system can take your money one time, and then when they roll it, reverse it, up to qualify, they can do another financing and they can take your money a second time. It's all by way of stealing the entire market cap of these poor companies. Brandon, respectfully, I don't think you understand what Railtown is. It's not a manipulated company. It's not a company whose market cap has been or is about to be stolen by a rapacious group of hedge funds. Railtown does not need to raise money on the NASDAQ or the New York Stock Exchange. Therefore, it does not have to meet a certain minimum per share price. I just don't see it. Now, what if Railtown did do a reverse split like you're saying? and it went to five. The goal, I guess, Canadian, is to go to $5. So it did a 10 for 1. Well, fine. You own fewer shares, but it's trading at $5. Doesn't change anything. The per share revenues are higher. The per share profits and cash flow are higher. So the per share price will be higher. But it's a completely unnecessary mechanism for Railtown to explore. It's a complete waste of time. They don't need to do it. It's not required on the Canadian Stock Exchange. And if they did it, I don't think it'd be negative. I don't think there's anyone that's going to short the stock back down from a higher level. It might, if they did it, it might expose them to a little bit more shorting because the greed factor on the shorts will step in. But it doesn't change anything, Brandon. It's a complete bugaboo. It's not something for you to worry about at all. It's not going to happen. And if it does, it doesn't change your investment or your upside. Now, having said all that, I don't think the company needs to do a reverse split to get to $5 because I think it's going to $5. Probably by the end of the year, but it's late in the year. So, realistically, you got to face the fact it could be January or February. The company, and more I think about it, Canaccord may have put pressure on the law firm, slow it down. I don't know. I put nothing past this criminal enterprise. It's trillions of dollars, and they don't pay taxes. And the attorneys are beholden to them. Entire bureaucracies are beholden to them. This is more over 27.5 trillion in failing trades in Europe. I can only think of 2 countries who have a GDP bigger than that amount of money. This is gigantic. So, is it plausible that Canaccord has delayed this law firm so that Canaccord's clients could move their shorts to Europe? Yes, it's totally possible. Canaccord is notorious as a short seller. Criminal, frankly, in my judgment. But Brandon, you're just looking for a reason to be scared. I get it. It gives me a chance to point out to you again, Railtown is not a Benedetto Beauty. It is not a Borders bomb. It is not a hamster hype. Railtown is not one of these manipulated stocks where you've got the whales control this much and there's a big short position and they're going to buy gold company and they have gold and hey, they really do have Bitcoin. It's audited, but they have this strange entry on the page, additional paid-in capital, just for kicks and giggles. What are they giving up for that additional paid-in capital? Nothing. This is not a manipulated stock, Brandon. It's a stock that is mispriced. Now, let me go through. Why then are they trading at 44 cents? I don't get it. Well, Railtown started as an idea. Marwan Haddad ran into Corey Brandolini approximately 6 years ago, 5.5 years ago. They shared a drink or a squash game or a ski run, or they both checked out the same girl as she walked by. I don't know where they met. But they got talking. Hey, you know, remember we were at that, whatever it was called, recess? Do you remember how when something went wrong with our software that we were creating and the bells started ringing and the red lights shone, how everybody had to drop everything and rescue the software development or it would crash and maybe destroy the company for a few weeks? Do you remember that? Yeah. Well, I've had an idea, one said to the other. What's that? Well, are you reading about the advancements being made by NVIDIA and TSMC and others in the power of the computer power of their chips? It's quantum. They are leaping in bounds. Yeah, I saw that. When are they going to be? Well, they don't know yet, but it's coming soon and it's going to change everything. Yeah, I guess I've seen that. Well, have you seen how companies and states like Texas, Virginia are building data centers almost at a pell-mell rate? And data centers are being built in China. Frankly, they're being built here in Canada, even in the Middle East. Are you seeing the commitment to build massive data center power, which leads to computational power and expansion of the ability to use this computer power? Yeah, I've been seeing that. Well, isn't it funny, up here in Canada, we've got a country that's bigger than most. Nobody came here. So we've got all this excess energy, excess cold water, and doesn't it seem to you that it's a perfect place to take advantage of that quantum leap in data center power and chip power? Yeah, it does, but I'm not sure how. What are you getting at? Well, what if we created an AI agent and a tool that, instead of all hands on deck when there was the potential of a software bug destroying a company's software, or when there was an alert of a cyber security risk of a company's software, or when a developer team is trying to upgrade software, what if we created an AI agent that did most of the mundane work for the team? And what if our AI agent was able to analyze the software and predict a bug before it happened and predict a cyber security risk before it happened? What if we did that all with AI? That would be great. That's what we spent hours and weeks and months in our other situations. And Marwan would say, I've done this with a bunch of Fortune 500 companies. That's a great idea, but the problem is we're too soon. Even if we built that, nobody could use it. They might not be able to use it for years. That's my point, says Corey. Why don't we start now? We have money from our last sales. We know the software engineers. Why don't we bring together a team and start on this now? We'll be early. We'll be early. But man, we could have it ready. We could have it beta tested. So when NVIDIA cracks the code, or when TSMC beats NVIDIA, we're ready for it. And when the data centers get built, we are the go-to element that gets attached to that computer power, and it provides an interface with all the apps and all the users because we were first. Yeah, but there's some risk to that, isn't there? Because what if it takes a long time and we don't have enough money? Well, let's see what happens. We can always go public. So that's what they did. They got started with their own money, friends and family, and they did it on a shoestring. And they started building with this vision to be first, to be best, to solve a real problem, and be ready for when AI 2.0 and the computational power came on full force and the data centers, they'd be ready to go. Preparation meets opportunity. So they did it. But what happened? They were early and they needed to raise money. I forget the mechanism. They may have reversed into a public company or something, but they started trading on the Canadian. And again, I don't remember if they did an IPO or did a raise, but they used that stock and the warrants attached to that stock to raise money because they were early. They needed to raise money. And then Corey, like all CEOs, believes the NASDAQ is as good as it used to be. Under Adena Friedman, the NASDAQ is a joke. The current NASDAQ for stocks under $5 who need to raise capital is just a gilt-edged, gilt-layered slaughterhouse. It's an abattoir just like the over-the-counter markets. It just has nice music and less blood that you can see. But Corey figured and Marwan figured we can do it. Let's list on the over-the-counter and we'll go down to the Americans and raise money. I would suggest to you, Brandon, that as soon as they did that, Canaccord's clients and others started shorting the stock. Because remember, Brandon, when a stock is on the over-the-counter market or NASDAQ under $5 and needs money, there is no research. There are no investment bankers. There are no pools of money that can buy. There are no retail brokers that are going to recommend it. There are no institutional brokers. They're completely abandoned. So clients of Canaccord know if we start shorting it, we'll accumulate cash in our Canaccord account. Canaccord collects fees and they charge loan rates on stock that doesn't exist. They drive the stock from 80 cents or $1 down to 20 cents in Canada. Railtown needs to raise money. They go to Canaccord. Oh, yeah, sure, we'll do it at 15 cents. The CEO's gobsmacked. He's like, what? We're worth, but we need the money. All right, we'll do it. So the shorts have destroyed the stock. They enter into an at-the-money or convertible note, and the stock's now 15 cents. And hey, presto, everyone's happy except shareholders, but the company can keep going like MMAT. They can keep diddling around in the laboratory as the company is being eaten alive by the toad. Well, down in the over-the-counter markets in NASDAQ, same thing happens. As soon as a company who is underfunded lists on NASDAQ or the over-the-counter, the selling commences. There is no buying. There is no knowledge. The selling commences. So a CEO who gets onto Adina Friedman's markets, where she's indifferent, as she waddles around in her expanding skirts, they just sell. They accumulate cash. And when Lind Partners or Yorkville Advisors or Kramer LLC with the newest name, when they come and they get the CEO say, hey, we can raise 10 million for you. Really? Yeah, it's one call. Let me check with our funding. And really, you could do that? Yeah, let me send you some paperwork. You sign it. We already checked. You have enough volume, which means we can sell stock and rip you and your shareholders off. And we don't care. We don't need to know more about your business. Just sign up here, get it signed, and if you can get it to me by the end of the week, next week, I'll let you know how much we can fund you for. Well, great. Well, we're going to mail it to you. Why wouldn't you overnight it? Well, we just, all right, we'll overnight it, but we're going to do 3-day delivery. It'll be there by Friday. That gives a chance for Kramer and his 8 investors, one of them Leo, I can't remember the rest, to start selling the stock, just punishing the stock, punishing. But the insiders with the stock, they get all the good news. Wow, we're going to get funding. All right, we better be buying. We better be buying. So Leo and his buddies, working with Kurt and Seth, build up a cash position by selling stock that doesn't exist of $5 million, maybe $6 million. So by the time the documents get back in 10 days, they answer some questions. Well, we're able to give you $5 million at a 45% discount to market. But we want 2.5 times warrant coverage, and we can close on the 15th. But we're going to do it in tranches because they want to steal over a long period of time. They don't want to steal once. They want to do it. So we'll give you 10% of the money on the 15th, and we want you to put enough stock into the transfer agent, free to trade, to cover 100 times what this initial. Why that much? Well, you never know. We won't probably use it, but just to be efficient. And then our formula is, at any time, we can call you up and you'll issue stock based on a price of 75% of the average of the lowest 3 trading days for the previous 5 trading days. And you're off to destroying the company. But again, Adina Friedman doesn't care. The smiling goofball Charlie Cromwell doesn't care. Ann Wagner doesn't care. Nobody cares. And so you're lucky that Railtown did not come down to the United States markets, because Railtown would be destroyed. But the clients and the advanced troops, the vanguard of these criminals, started selling. Canada here, because they knew Railtown was going to need capital. I would say serendipitously, luckily, a stroke of fortune for us, Corey never did a deal down in the United States because his stock would be destroyed by now. Why didn't he do it? Because he was able to get away with some smaller financings in Canada. And all of a sudden, the perfect wave, the perfect timing. And he went out and started, and they did everything on a shoestring. He went out and started selling conductor. It was called Scrum Master or something like that. And he started well over a year ago. There's research out there from over a year ago that prices this stock at $2. Yeah, you say that. Why isn't it trading at $2? Well, he went out and he started pitching his woo. $2. July 2nd, 2024, $2. So he's out telling his story, generating revenue. A year ago, over a year ago. Well, come approximately November, he goes to yet another conference and he meets AIP partners. They fall in love. And the conductor product did turn out, it seems, to be first to market, best in class, solving a real problem, battle tested, battle scarred, beta tested, ready to go. And guess what? No lesser of technology gurus and experienced financiers in Canada, no lesser than Mike Norbrega and John Ruffalo said, buy us. We've screened 180, actually we've screened hundreds of companies. We've selected 165 at that time. But we, out of all of those, we want you to buy us. Well, they called up, everybody called up their attorneys. Everybody knew that they knew something, so they stopped buying because they followed the law. So December passes, January goes, holidays. Everybody needs holidays, December, January. So you get to February 11th this year, and the company announces that it is going to acquire AIP partnerships. What do the computers do? They start selling. Because it says MOU in the title. It says LOI. It says acquire. It says a few weeks. Same scam starts happening. Led by Canaccord Securities, they hired Canaccord Securities. Hey, pal, we just got another one. We got another. Oh, really? Well, why don't you sell 10 million shares for me? You can do it at any price. Just keep selling. Boom, commission comes to somebody inside Canaccord. 10 million shares, 20 million shares. It got up to 50, 60 million shares. Maybe it's hedging, but it's commission. It's not all hedging. And the more I think of it, Canaccord put the kibosh on speed over at Brandon Jenkins law firm, whatever it's called, Jenkins Holiday, and boy, do we take holidays. If you need us to take time and stall, we're the law firm for you. Having trouble in your divorce case, we can stretch it out for years. Not really wanting to close your transaction, we take over a year when it should. In other firms, we'll do it in 30 days. Call us if you want to delay. Anyway, the more I think about it, Canaccord Securities probably interfered behind the scenes, delayed everything, because their real customers are the shorts. So we got lucky, Brandon. On the one hand, Corey didn't do a toxic convertible note. We, I think, got lucky that starting February 11th, we entered into a period where the shorts kept shorting. Their computers did. The buyers disappeared. All of the insiders, the whales, the institutions, the large individual shareholder buyers, the family offices, and many of these haven't even heard of it. The only company that knows the story is Canaccord Genuity, and they can't tell it to their customers. No one's really heard it outside of the OMERs and maybe some of the investors at Railtown and the AIP investors. All of them were precluded from buying. So I think we got lucky. It's pain in the ass, slows everything down, but we were able to buy stock at a $60 million valuation rather than a $1.25 billion valuation, which you wouldn't even be allowed to get into. So we got lucky in that sense. But our instincts, Brandon, because we listen. Oh, this stock's going to 3,000. It's got 200 million short. They're going to have to buy it in. Oh, this company's going to go to $150. They just bought a gold mine. Oh, this company is going to go over 100, easily over 100, because they just bought a eyeglass company. Oh, this company's going to have a squeeze because they're buying a law firm and Trento Mining, and then the whales are in on it, and it's going to squeeze. Oh, this company is just like HKO, is a Chinese company, and they have all the shares, and it's going to do a forward split, and I can't wait to see it. This thing's going to go into the hundreds of dollars. That's how your brain works. And I'm not attacking you personally. All of us. Oh, yeah, wow, he must be right. He knows something. He talks with that New York accent. He's got to know. I just spent several videos reading you excerpts from The Great Taking, which someone took from my desk. The Great Taking, I doubt anybody reads this. I'm not sure you listen to it, Brandon. But Wall Street has converted from physical shares into electronic shares, and Wall Street can sell you an unsecured claim as a percentage of a pool of stock that they give away as collateral multiple times to make money on. It's called The Great Taking by David Rogers Webb. So we've been lucky that they keep selling because they don't know. They don't care. They just do it over hundreds of companies. You think they know something, but they don't know anything. But the problem is the AIP deal has taken 10 months. So everything you've told us has taken forever, William. You're wrong. It's always down. I'm worried that they're going to have to do a reverse split because that's what the piece of shit company CRTD did. That's what the piece of shit company GNS did. That's what the piece of shit company COSM did. That's what ZJYL did, or they did a forward. That's what all these pieces of crap do. So, by the way, William, I'm telling you, I think Railtown's a piece of crap too. Because I haven't processed anything you've said for 6 months. I know you come on here and you drone on and on and on. And I know you give the reference points so I can go do my own due diligence. But I am thick as a brick. I think all stocks are just like MMAT, MMTLP, MULN, NIXX, LGIQ, DLQ. I think they're all like this. They're all manipulated. And they're all going to do reverse splits because it's all a game. I haven't heard a thing you've said about this being a different kind of stock and that this is an investment. So therefore, Brandon, when Railtown goes to $5 and Frank Benedetto comes out with a stock, hey, this stock's it shines blue when the sun goes down, and in the morning it's silver, and during the middle of the day it's gold. And I got to tell you, they're going to use Bitcoin and Ethereum and XRP, and they're putting it in the treasury stock, and there's a bunch of whales own all. And my guys are buying it. Of course, my guy is the same guy Ham uses, and a couple other, but my guy's buying it, and you got to buy it. You better hurry into it, and you're going to sell out because you don't know what the F you own, Brandon. And I'm sorry to get worked up. I really am sorry to get worked up. You own a stock, Brandon, and let me see if I remember, if I have it written down here. Recently. You're just sitting there as a victim. You're going to be plucked. I don't want you to be a victim anymore. I don't want you to believe the horse shit these people tell you. I'm not questioning their motives. You want to see a real IR person? Follow Rebecca Kurzweil. I'm not vouching for every stock she recommends, but I tell you what, she's not in bed with any of the shorts, I don't think. Wouldn't surprise me, though, now that I say it. I don't think she is, though. I don't think women do it. I don't think women have that bone in their body. All right, Brandon. The last number I see for you is 154,570 shares. So that means you've put probably as much as 75 grand in, and you don't really understand what you've done. That's on me. That's on me. Somehow I failed to get it across to you. It's not on you. The stock right now with 12 minutes to go is 43 cents to 44 cents. The volume now is 216,000 shares. And there was most recently 2,500 shares traded at 43 cents, 7,000 shares traded at 0.4299, 18,000 shares traded at 43 cents, 18,000 shares traded at 43 cents, 7,000 shares traded at 43 cents. Pretty powerful. So Brandon, it's on me. I obviously haven't explained it. I do appreciate that you trust me enough to make such a large commitment without really understanding what you're in. But let me just quickly give a number. If Railtown goes to one, I think Railtown's better than Lang Chain. So let's just use 1.25 billion and we'll divide it by 60 million market cap. So that gives 20.83. Let's leave off the 0.83. So if Railtown were to go from 44 cents to $8.80 in a great arbitrage between a stock that's under attack by shorts, there's been a buyer's strike, there's a lack of awareness but amongst all of us, but with institutions who can buy about their revenues and their growth, what the hell they do. Anybody that does know can't buy. It's still that same bloody situation. So if it catches up and the number of shares don't change, it goes to $8.80. But we do know that the number of shares, regardless of what the Form 9 says, the number of shares are going to go up by 50,000 on Friday, give or take. So they're going to expand by 22.49 roughly, 22 and a half. So that number, let's just do it. Let's just do it rather than me trying to get an exact number. Let's divide it by 2.2250. So that 50 million will reduce the arbitrage to $5.62. All things being equal. Now, part of what will close that arbitrage, that price, partly it's probably three things. It's probably three things. One, the buyers need to be able to come in, and that hasn't happened yet. Two, revenue needs to be explained. You're not going to understand it, I'm not going to understand it, to the institutions who come in to buy. And it's got to be at least equivalent or better than Lang Chain. That shouldn't be hard. Lang Chain is projected to annualize revenues between 12 and 16 million right this year, time frame a little bit longer. And they make no money. And their valuation is 1.25 billion. So the second thing is big buyers need to believe that Railtown is going to do, let's say, 15 million or better in revenues forward 12 months. And with a profit, you're in like Flynn. The other assumption is they don't issue any shares to acquire any of the AIP network. So your target to close the arbitrage, to make it tighter than a tick, is $5.62. Currently, the stock is trading at 44 cents. You, Brandon, are susceptible because you don't know what you're in, and you're confused by all these terminologies that the charm boys give you to confuse you. So you're going to be susceptible when the stock, let's say, gets to $5 of selling, or $4 is selling. One of the charm boys is going to say, hey, that's a win, like Tiptoe Tony. Tiptoe through the tulips, Tony. He's a prime candidate to come tell you, you better sell. They're going to do a reverse split, and your brain's going to go, oh my gosh, I've seen that before. I better get out. Don't fall for it. Don't fall for it, Brandon. Don't fall for it. If this stock goes to $5, not 5.62, you're going to have $772,000. I don't know your background. I don't know if you've ever had $750,000 before. And I'm not judging it at all. But assuming that's a lot of money to you, because it's a lot of money to me, if the charm boys come and they say something to you that registers, oh my gosh, a reverse split. Oh my gosh, they're going to do a financing. Oh my gosh, the shorts are going to come in. You're going to sell. It's going to be emotional. My opinion is going to be stupid, but you're going to do it. It's understandable. Don't get me wrong. It's understandable. But you got to stop listening to them. You got to listen to me for a little while. And then after what I see coming happens, you can listen to other people, but not them ever again. You can't listen to them ever again. Now, let me tell you what happens from $772,850 in your account at $5. Let me tell you what happens then. Oh, I'm worried about a reverse split. Damn it. These guys are so effective of getting you guys, and I'm not picking on you, Brandon. I'm actually trying to protect you and help you. And the reason I'm pissed off is I haven't taught you. I'm proud of you for building this position, but I haven't taught you. Now, by the way, Brandon, I'm ignoring the risk that the stock market crashes. I'm ignoring that something happens globally that changes humanity. I'm ignoring that the AI, there could be a run on AI. I'm ignoring all that. For the time being, I'm assuming everything remains copacetic, because that's a different issue. But you have you're going to have Now, I'm going to tell you what I think's coming. It's my opinion. It's my strategy. It's not a guarantee. But I think you're going to have $772,850 when the stock goes to $5. When? I think there's a good chance it happens by the end of this year. But because of the delays, the more I think about it, it could be something that can coordinated with those attorneys. They don't really know. I'm not blaming the two younger attorneys. I'm saying at the top. But anyway, the year is running out of time. So I'm going to say that you have that by, I don't know, January 20th next year. Now, if you use this kind of thinking, that means that if one of the charm boys comes on and says, oh my gosh, you got $5. Do you know what they could do? They could do a finance. Oh my gosh. Remember what happened to? And you're going to say, I better get out. Oh, and there's this other stock over there trading at 70 cents. I could buy 5 million shares. And if it goes to $10, you can't listen to them anymore, Brandon. Please just listen to me for now. You can think I'm a jerk. You can think I can't sing. You can think all sorts of things about me. But just listen to me now. Don't listen to them anymore. Now, I do reserve the right to suddenly change my point of view if the facts show it. But let me tell you what's going to happen from $5, Brandon. It's hard to say. I'm going to guess about, I'll say 10 million. I mean, it's very low, I think. And I'll say and I'll say I don't know. I'll call it very low. I'm going to use low numbers. These are all low numbers in my opinion, Brandon. But I think by January 15th, you're going to see a minimum projected going forward 12 months, that from the revenue sharing, just the simple moving the hosting from alternative sites to TELUS, just the TELUS revenue sharing. I'm not talking about acquiring. I'm not talking about new business. I think it'll be $15 million projected sometime January, February, projected forward. Then I think the conductor, and I think that's 100% margin business. I mean, what's the cost? Conductor, I think they've already announced something like 5 to 8 different revenue deals. We have no idea what the revenue will be, but these are new tie-ups and partnerships. I'm going to guess, and you may say I'm high, but I'm going to guess that Railtown can predict for the forward 12 months that they'll collect 10 million in revenue from their conductor platform to customers. And remember, they're going to cross-sell. That's my second number. So this 10 million are outside of the network, and I think that's a valid number. Inside the network, I'm only saying 5 million. I think that's low. These are probably 50% margin. I don't know, guessing that, but they're profitable. And then with the new business here, the new business that they bring in, it'll be on TELUS. I think they'll do 1.5 million revenue sharing. So that's 100%. So let me add that up. I think it's all very conservative, but let me add that up. Okay, so I think the company could show sometime by end of January, beginning of February, forward revenue of $31 million. All high margin. Now, what multiple? Lang Chain's multiple, pretty amazing. Using, projected maybe 15 million, 83 times. We've seen recent transactions and valuations over 200x. We've seen transactions at 150. We've seen them at 100. Let's just do this one at, I don't know, 50. Is that too aggressive? Let me see what 35 does. Now, it's got to be 50 to make it worthwhile, I think. But that might not work. No. So let's see what 75x does. All right, let's use 75x. So that gives a value to the market cap of 2.362 billion. And we'll divide that. We haven't acquired any AIP companies. We haven't acquired any of them. So we'll divide that by this isn't going to be a huge number, but it's not bad. I don't know if you can read that. But if the company does that minimal forward projection of revenue and you use 75x, it's a $10 stock, $10.61. If you get charmed out of it here, you're going to miss that. What happens from $10? Well, what if Railtown acquires some of the, now that it's a $10 stock, What if they roll up some of the network companies and the revenues grow to a more robust number going forward? What if combined the total is 200 million going forward? Let's say in the second quarter they accomplish this. Forward 12 months. Well, remember Soundhound, which is down now, but Soundhound is trading at 35 multiple to revenues, but that doesn't matter. Let's just look at its price as a market cap. Their Soundhound's market cap is $5,920,000,000. Now, Soundhound this year is projected to do less than 200 million with no profit. So why don't we imagine that Railtown in the second quarter, from its revenue sharing, from its roll-up of some of the 400 million, from its new business, and from its cross-selling business in the 5,000 companies, and from the shared revenue from that, and new revenue, let's say they're able to get to 200 million forward revenue, and Soundhound's valuation remains 6 billion. Well, let's use, they're not going to issue all the shares they can. Let's assume to get to that number that the total number of shares outstanding are 275 million by that time. That's $21.50. If the charm boys charm you out at 5 with just illogical information, you're going to miss out on that. Let's see what that is worth to you at that point. 154,570. Your account, if you can just stick with me, your account has the potential to be worth $3,327,470. If you just don't listen to those noises in your head, and they all come from the charm boys. It's on purpose. And I'm not mad at you. I'm frustrated with myself. But that's at $21. You have a $3 million account. By the way, 200 million is probably a minimum they'll get by the second quarter. Don't know. But Soundhound's multiple is like 30x. It's probably less than 30 now. If they change this multiple and it goes to 100x, this number is going to be gigantic in a buyout. So, Brandon, if you sell here even, you listen to the charm boys, you're going to create tax losses, and I think you're going to miss out on a double or better by the next quarter. Now, I can't say that this is absolutely for sure going to happen, but I hope I'm giving you some revenue targets which unfortunately the company is unable to give us right now. So that leaves you in this area where you can actually seriously ask me, what if they do a reverse split to go to $5? I just haven't done a good job at all. I just haven't done a good job at all. Just to take that number, if the stock were to go to $42, you'd have 6.6, almost $6.7 million at $42. If it gets bought out there, or at 50 or 60, if it's purchased, Brandon, you don't pay any taxes for that bump up in equity. It's like your home. If you buy it 20 years ago and it goes up to this big value, you can borrow against it, you can do things, and you weren't reduced by taxes. You just got to stop listening to this nonsense in your head. It's all nonsense. It's not your fault. It's not your fault. It's not your fault. And it's my fault that I can't get it across. I hope I've shown you a couple things. 3 things maybe. 1, you might make a lot of money. And 2, you don't need to trade. And 3, the stock's not going to do a reverse split. They don't need to. So I don't know if I answered your question, and I'm sure I overreacted. But please, Brandon, unless I get further information, which I have not received, and I will agree with you that you're assuming I'm right, so there's a bit of risk there. You have to accept that Railtown is not one of these endless other crap companies. And through an alignment of the stock already have been public, therefore it's available to us, and an alignment that they started early, so they were considering raising money, and that the criminals just keep doing their crap, and they chose the criminal firm, the biggest supporter in Canada of this, one of the biggest anyway, in my judgment, in Canaccord. So we also got the suppression of price, and for whatever reason, papering up 100 pages took 10 months. I mean, it could be valuations, it could be negotiations, it could be distractions, it could be arguments, it could be anything. But the stock price is low, Brandon. So in your head, you're saying, well, obviously they have to do a reverse split so that it doesn't keep getting. I don't know what's in your head. I really don't. It's a complete irrelevancy. I can't even make it make sense. Except that you don't accept that Railtown is a real company and it's mispriced. It's just mispriced. It's mispriced because the shorts are shorting and the buyers are absent. It's mispriced. The story isn't out there. You want to know the story. I think you might have been the person that caught me out with my expression that was wrong. You want to see proof. Well, you may not see proof of revenue. You may not see proof of concept. You may not see even proof of the revenue sharing deal before the stock's $2. You may not get to see that. Why? Because I think it's just too hard for a salesman to teach you about it. I think it's too hard for a banker to spend time with retail on it. I think it's a lot easier to walk in as a institutional saleswoman. It's a lot easier to walk into Mavericks who understands it, because you don't. And they never ask that question. But you know what, Brandon? That's your opportunity too. Your opportunity, and everybody here's opportunity, is we have been able to buy it. We are not precluded from buying it. We get in early. That's what we give here. What we give to the arbitrage is being early and not really knowing. By the time you get confirmation in some research report that this company is worth, what was my number right then? I'll take the high number. 880 a share, let's call that Canadian. That'll give a buffer. When a research maybe comes out and says, this is the forward revenue, it's going to be worth $8 Canadian, you will have missed your chance to buy the stock. So I'm proud of you that you've bought the stock. But my gosh, I've got to think about that, what I did wrong. Because I haven't explained this. I guess maybe all I did is make declarative statements, and I didn't explain it enough so you understand that Railtown is not one of these crappy destroyed stocks. Railtown doesn't have to do a gimmick of a reverse split. You know, frankly, maybe it might have if they had had to do a raise with Yorkville or Lynn Partners or one of these endless scumbags, in my judgment. But luckily, they didn't do that. And I'm mad, you know, Brandon, I'm mad that you have to wait, and everybody else here have had to wait so long. I've shown that frustration. I think it's the regulators. I think it might be the attorneys. But now it's a possibility that I thought of last night, in the middle of the night, particularly after I saw that post. Maybe it's Canaccord. Went up and muddied up the waters. They make a lot of money selling stock that doesn't exist. So I get it, Brandon. The stock price goes to 60 cents. It's back to 40 cents. It behaves. The stock price behaves just like any of these other shitty stocks. And it's shorting. It's clear there's a lot of shorting. And the company basically can't say anything. The AIP deal never finishes. I get it. It feels like one of the other companies. So therefore, you're worried that they're going to do things like the other companies. But I've tried right from the beginning saying that Railtown is not a manipulated stock. They do not need to use gimmicks to try magically to force non-existent compliance officers and non-existent regulatory care and non-existent buy-ins. They don't have to do any of those gimmicks. Yes, the stock is 44.2 cents, whatever. Yes, it is. It sucks. But again, it's because the computer program trading, it's not human beings. 95% of the selling is from computers with a setting. It's computers selling this non-existent crap. Matched with no buying and no discussion allowed. But Brandon, what really amazes me, maybe you don't have a copy of this. That could be. You don't have a copy of this You know, I tried to send this to everybody whose email I had. And maybe some people don't have this. But Brandon, there's so much information in here. Even though the company can't really talk, they've put so much in here. But it doesn't show up in the stock price. Why not? Because the buyers, I believe, I could be wrong, cannot buy the stock until AIP closes. And they may not be able to buy the stock for, some period. I'm not going to use the word that I would normally use. But they can't buy it for a period of time that their attorneys say, you better not buy it if you want to be safe from regulatory scrutiny. Maybe that's a day, a week, I don't know. But once it starts, Brandon, the information is here. We just don't trust ourselves to process it because all the information we've received on almost every stock is all bullshit. Treno Mines, bullshit. Legal company, bullshit. What's that? Alibaba's going to invest in the company. Bullshit. Out of Goldman Sachs. Bullshit. Oh, they're buying a gold mine. Bullshit. This isn't bullshit. But you don't trust it. You don't trust it. And I guess I don't blame you. Because what your brain is telling you, it's a 40-cent stock. So it's just as shitty as all the rest of them. That's why I got mad, Brandon, at that one guy here. He kept trying to put in your head, and I guess it worked, that it's a penny stock. It's not a penny stock. Penny stock means more than just the price of the stock. Some stocks trade under $1, but they don't meet the other definition of penny stock crap. We're very lucky. And this is why I'm so adamant, Brandon, that this stock should be the only stock people own in this space. Because we got lucky. Railtown listed public and on the over-the-counter market with the intention to raise money in the United States. They didn't. Thank God they didn't do that. Railtown was early, so they're ready to go with their product. And nobody's come up with a competing product. Possibly Lang Chains does some of the stuff. But as far as I know, there's no competing product yet. They were early, battle tested, ready to go. I think that's pretty good. Thirdly, they ran into, I think, guys in Canada, and women, there must be women too, that are the most incredible technology and investor group in Canada in this space. And they bought the company. And it's going to generate a whole raft of revenue they don't have to do anything for. They just revenue share. I think that's incredible. And the stock still is under $1 because of the criminal shorting and maybe Canaccord helping them. Because they have a formula that always works. But it's not going to work here, Brandon. I don't think it's going to work here. And then finally, I think the backdrop for these companies is there is an arms race. So I think Railtown's going to be bought out. It's so rare to run into a stock like that. And I know maybe I don't mean to, maybe I've offended you by overreacting. But it scares me, Brandon. If you have this thought, you can get taken out of the single best opportunity, I think, ceteris paribus, that you've seen. And it's, you know, for people who are inclined that way, it may be sent by God or by our good Lord. Others, it may just be chance. But I tell you what, it's very fortunate for this. But this, you try, Brandon, to figure out how this company is going to behave like the great manipulators at these crappy companies. I can't tell you how crappy Cosmo was, COSM. It was just always crap. Genius Brands, crap. GTII was just a short squeeze story, a piece of crap company. Finger had a story, but it doesn't have a courageous leader. It's got a good man, but I think he'd do better at a $20 billion company. But this isn't that, Brandon. So I'll move on. I'm sorry. I'm just so shocked at myself that I haven't taught you enough. By asking that question, Brandon, I think you're going to be stripped of your upside. And I don't want to see that happen. Now, that's not to say if the market crashed next week, a lot of what I'm saying either won't happen or it'll be delayed. Or if a meteor hit our planet, or if World War II started. I don't know. There's lots of scenarios out there that I can't figure out. But just assuming we muddle through the next 90 days, 6 months, 9 months, you have an excellent chance of having your account. I mean, it could go to $5, $7, $9 million without having to pay taxes until you sell the acquiring company stock. And you don't have to overthink it, Brandon. You don't have to overthink it. I mean, it's not to say I do appreciate your questions. And I appreciate this question because it shows me what a terrible job I've done. I guess I've just maybe repeated things over and over again rather than going into depth. And I got to think how to go into depth. And I'm at a loss how to do it, how to get it across. You know, the funny thing is, if the stock were just to go up, you'd believe me more. But I don't think that's good enough because the stock that goes up can pull back. I've got to convince you, Brandon, that this company's different, and I don't know how to do it. Let's leave it there for now. I'll think about it. How I can convince you that this is an alignment of unique characteristics, and it's about to change in my judgment. You could argue, Brandon, that Lang Chain is mispriced and Railtown is correctly priced. You could argue that. I wouldn't, but you could. You could argue that Lang Chain is correctly priced for the time being, but it's going to go higher, and therefore Railtown is incorrectly priced. Or you could argue that both are incorrectly priced, but the answer is somewhere in the middle. I don't know. And maybe Lang Chain is in the maw of the bankers, and they control their own destiny by manipulating revenues and manipulating prices and finding it could be that. But in general, the metrics are the same. And Railtown's just mispriced. I choose the side that Railtown is mispriced and should be priced better than Langchain right now. That's the side I choose. But you're right, there's execution and all that. And you're right to question whether they'll make the right decisions. But one of the decisions that's not on their list is a reverse split. It's just simply not on their list. Anyway, Brandon, I'm more frustrated with myself than I am with you. And I'm also scared for all of you. I'm so scared that these guys like Twinkle Toes Tony and the Charm Boys, they're going to claim credit for Railtown, which is fine. Who cares? I don't care who claims credit. But they're going to claim credit by way of indicating to you that they know what the heck they're talking about, and they may do. There's only two choices. If they know what they're talking about, they are consciously screwing you. If they don't know what they're talking about, they're just incompetent, but they're screwing you anyway. And it's time to get away from this. It is time, and it's frustrating. I'm frustrated. Bloody 10 or 11 months to get a bloody acquisition accomplished? The more I think of it, the attorney's process was interfered with by Canaccord, in my judgment. It's a guess. It's an opinion. But it's pretty darn logical. Anyway, Brandon, I'm sorry I went on and on. It seems as if, this is Brandon, it seems as if a lot of companies don't want buyers to have large positions for pennies on the dollar, and they always reverse split. Well, okay, that's one way to look at it. But the percentages are the same, Brandon. Right now, you have 100 and, let's see, what is it? 150, let's call it 155,000 shares, just so it's simple, divided by 22225. So you own 0.006974%. Well, if they do a 10 for 1, a 1 for 10 reverse split, I mean, it'll be the same number. You'll own 15,500 shares of a company with 22,225 shares. It'll be the exact same percentage. So it's a concept that a lot of people get confused about, and I understand that. But in reality, what's the difference on a percentage basis? None. It's like if I can't give you an example that will instantly be understandable, but basically, it's not that, the number of shares you own doesn't matter. Doesn't matter. If you owned 15,500 shares and the same ratios all happened, I think the stock would be $210 a share. So you'd still get your 3,200,000. There are companies that reverse split. Look, nothing's normal anymore, Brandon, in the U.S. markets. But in general, in U.S. stocks, it's better to have 100 million or fewer shares outstanding. By the time you get to 1 billion or 2 billion shares outstanding, that's a red flag for many investors. But Australian stocks, Canadian stocks, even UK stocks, but particularly Australian stocks, they have that big number. So yes, you're correct that companies may reverse split simply to reduce the number of outstanding shares. But the current number of outstanding shares for Railtown is acceptable. It's about 225 million shares. And if they issue enough shares to acquire other companies, I think the most that'll be out there is $350 million shares. It's perfectly fine in Canada. There's no need to reverse split those shares, just unless they're anal obsessive, which they might be. I know it's hard to believe right now because I've been so wrong about the timing, but the odds of Railtown existing as a publicly traded company in 9 to 12 months, assuming everything else is the same, is very low. It's very low. And if they do exist as a publicly traded company, everything else being equal, they're going to be a unicorn. They're going to be a powerhouse. I wouldn't worry about reverse splits. I really wouldn't. And I wouldn't worry. It's nice to own 150,000 shares of something. But if for some reason there were a reverse split and you only had 15,000, that's fine too, because all the numbers change. Remember, this is about making money. It's not about owning a lot of shares. It's just about making money. Brandon Neely, I think their revenue off Conductor will be roughly 5,000 subscribers at $50 subscription fee per month. I don't know. I don't know. Even if it's $10 a month, $100 each times 5,000. 500,000 times 100. It's not much. You could be right. I don't know. I have no basis to know what the subscription fee would be. You might be right. $50. $5,000 companies, but 5,000 companies might each have 20 developers. I don't know how to do it, Brandon. You could be right. You could be right. That would be a nice number if you are. Richard K. Good afternoon, Lucky and William. I'm looking for growth rate this month. Many of us loaded up for action this year, not next. Would have made money on other things short term. Like what would you have made money on? I can only think of one, which is a good one, is Energy Vault. I don't think you would. I mean, I don't know what you would have done. Yes, in retrospect, there were alternatives. You know, silver's up, which I love. Silver's up, I don't know, 60 to 80%. Yeah, and you could have written that and sold out. Energy Vault's tripled at maybe 2.5. That would have been great. On the other hand, if you had purchased G-Bucks, you lost nearly everything. If you had purchased GDC, let's say at 7, you lost half your money. If you purchased MTEN, you lost 75–80% of your money. If you purchased Finger, you're down 65% on your money. I don't know, Richard. You're right. You could have if you made the right choices. My suggestion to you, Richard, if you're tired of it, just get out of it. I know waiting's a pain in the ass. If you know somewhere else to make money quickly, you're obviously more of hot money. And I'm not criticizing that. I do not view Railtown as hot money. So if you got into it as a short-term trade and you're tired of it, just get out. Go somewhere else. I think you're going to regret that, and you'll regret it the rest of your life. But what I'm hearing you say is you bought into it for it to go to $5 this year, and you don't want to wait for it in the first quarter of next year. No way. I bought it so I can make some money this year, and I could have made money elsewhere this year. That, to me, unfortunately, is still the hot money mindset. And I'm not saying you're not good at it. I'm not. I really am not. And if you are good at it, you should do it. But I think for most people, they can't do that successfully. You know, you spread your money out across Energy Vault, MTEN, QTEM, G-Bucks, Finger, GDC even, ZJYL. And, you know, a few months later, you've got money in one of them. And so you can argue to me, yes, you could have made money elsewhere. And you're right. But I'd argue to you, I didn't know which one would go up. I mean, I think Dirty Randy, I think it was, pointed out to me that Energy Vault was a strong story, but I couldn't determine that with such a low margin business. But the leverage and the amount of money they were able to raise without selling equity perhaps made that a different story. But Richard, I'm sorry. Good afternoon. I'm looking for growth rate this month. Many of us loaded up for action this year, not next. This isn't an action stock. If you want action, go follow those other guys. Railtown is a change your account stock, change your net worth stock, and I'm sorry it's taken so long. I could not, in my wildest dreams, predicted that it would take 10 or 11 months to close with what they just filed in their Form 9, a non-major acquisition. But it did. So grow up, Richard. It took longer than I expected. I'm sorry about that. And if you're looking for something this month, you know what? I hope it doesn't happen this month. I hope you have to wait another month. I just think that's very spoiled brat. But it doesn't matter what I want or think or wish for. The simple timeline, Richard, is that on February 11th, probably sooner than that, probably in January, Railtown agreed to buy AIP. They both hired attorneys. And from that period, all material information became untradeable. So buyers disappeared they've been gone from the entire year. Now, you're saying I should have known that. Well, I did delay February. I delayed March. I delayed April. And I delayed May. But by the time June came around, I just couldn't imagine that the deal would take much longer to close. I was wrong. And I apologize for that, Richard. I just could not tell that the attorneys would take that long. Now, it may be that it was regulators. It may be, like I'm guessing, the Canaccord got in there. But if you can't deal with that, it's not the right stock for you, Richard. It's not a hot stock. I've said that all along. I know 2-3 guys that can give you hot stocks. And there's another guy waiting in the wings. So luckily, I don't think you've lost money, Richard, so you can get out and go trade some other stocks that you know are going to go up. But, and there's not going to be any growth necessarily that you see this month. To be clear, Richard, Corey Brandolini, Marwan, Dr. Tom Core are building a company, in my judgment, that's going to explode in upside value so they can sell it to Microsoft or somebody else. They don't give a crap about what one retail trader, you or me, worried about an update. They're not going to risk it. They see the opportunity. You don't. You just think it's one of another, and I can time it. That's what you're thinking. I could have made something somewhere else. You should have known that the attorneys were going to take this long. I could have come back in it. That's just really, I think you must be a great investor. You must be very spoiled by your results. But I think it's unrealistic. It's really unrealistic. I don't think you should sell. I think you should be buying more. You should be taking advantage. If you're pissed off that you missed out on making money, I don't know where. The only one I can think of is Energy Vault and silver. Maybe you would have bought NVIDIA. I don't know which one you're talking about. But I think you should be buying more, Richard. But you don't see, I'm just doing such a bad job of getting the story across. I don't know. If in your neighborhood, the exact house across the street, but it didn't have I don't know, a closed-in porch, and it didn't have a addition for an extra bedroom upstairs, but otherwise it was the exact same house, and it sold for $3 million. And the last time you looked at your house, it was worth $150,000. Would you complain that I want to see growth this month? I loaded up, as you put it, for something to happen this year? Or would you be going, wow, that's a comp. It trades 20 times what I thought my house was worth. And you know what? I have a chance next door, I could buy that house for the same price as mine, because the attorney for the estate gave me an option to buy it, and I've been diddling around waiting, and it expires in 2 weeks. I better go exercise it. Would you look at it and say, wow, that's a great opportunity? Or would you bitch and moan, we would have made money on other things short term? I think you're a spoiled brat. Railtown is trading for $60 million. Lang Chain is trading for $1.25 billion. I want to see it now. I could have made money elsewhere. God, Richard. I wish I had your skills, because you must be incredible. You must be incredible. You make money elsewhere. It's incredible. I suggest to you, if you want to make up for your frustration, buy more Railtown. Railtown right now is 44 cents. I think it'll be $5 by the end of the year. Well, but I need it this year. Well, you're right. It might not be this year. It might be January or February. But that's not good enough for you. I don't know what to tell you. I really don't know what to tell you. I would buy more. You're frustrated? Buy more. I wouldn't sell. I wouldn't chase the laundry list of manipulated gimmick stocks. But if you feel you can do better than 20x, just to get to the starting gate, 20x, maybe 15x, hell, make it 10x. If you can do better than 10x somewhere else in the next 6 weeks to 12 weeks, go do it. Go do it. You don't need to be here. I absolve you. You can go. Brandon Neely, I think February is the month we see the dots connect. Put that on your calendar and see. All right. I'll do that. I don't have a calendar. I have one over there for next year. All right. Let me write that down. You say February. The dot. What do you mean by dots connecting? If you're saying the stock's going to be 50 cents until February, I should have to ask you to step outside. I don't think that's going to be a case. I think this, again, just repeating myself, the house across the street sold for $1.25 billion. Your house sells for $60 million. How long is it going to take for a realtor or the next buyer to notice that difference? Are they going to go to the guy that just paid $1.25 billion and convince him that his newly acquired house is only worth $60 million? Or are they going to come to you with an investor and a developer that's convinced your $60 million house is worth $1.25 billion? It's going to happen quickly. It's going to happen quickly. But the company hasn't been able to talk about anything. And yet, it's all in this document right here. Not all of it. They don't connect the dots. But there's 120 million of referral revenue, 100% revenue sharing, 120 million right in here. That's going to be transferred over, 120 million. At 10%, that's 12 million in 100% revenue. $1 million a month cash flow. It's right in here. But you got to think when you read it. And I'm not criticizing. I'm just saying it's there. I'm not saying you got to think about it. I'm saying that politely. I'm not saying that it's obvious. It's not obvious. You got to go through it, think about it, sleep on it, wake up, share your ideas, talk about it. But I wrote down February, Brandon. I think it's possible dots connect in February, but I bet it's a $5 stock long before that. Justin Babish. My friend, the limo driver, just added 7,000. All right. I'm writing that down, Justin. That's great, Justin, limo driver. I hope he makes so much money that he can buy a fleet of limos. Marty Party. So let's say Canaccord is helping suppress the price for some clients. When do they do their job and turn around and support this stuff? I don't think they're going to support it. Well, what I mean is, Marty, I don't think 100% of Canaccord is on the side of the shorts. I think somebody somewhere is rotten and somebody somewhere looks the other way because it's just so much business. But I think what's going on at Canaccord is these automatic machines that read headlines and read news stories just started selling the stock. And the guys that are overseeing, thousands of stock being destroyed, they saw OTC, they saw MOU, they saw LOI, and they saw Canaccord, and they said, well, these guys are going to come to Canaccord for a financing. So they sold a massive amount of stock, maybe 50 million shares. Because the last number I saw was over 50 million shares. Now, some of that could be arbitrage. Some of that might have been covered. Let's just say 30 million of that stock was sold with the intent of having cash available to do a Canaccord deal. If they got an average of 60 cents up in Canada on 30 million shares, and they did it down here, let's ignore that. Or let's just look at it here. Let's ignore Canada. If they got 30 million shares off at 35 cents average, they brought in $10 million, and they're thinking, well, it's an over-the-counter stock. Canaccord's going to do a deal. They'll do it under the market. They'll get warrants. They're not going to do it at 35 cents. They'll do it at 20 cents or 25 cents. We've got 10 million sitting in our account. We'll wire the 10 million to Canaccord and we'll get warrants. We'll close out our position at a profit. That's how they're thinking, because it works every single time. But they failed to see it's a Canadian stock. And so what I think's happened, Marty, is one or two or three or four of Canaccord's go-to guys that help them drive down stocks, help them in this scheme, have gotten trapped. And it's possible Canaccord has tried to buy them time to wiggle out by moving stock from one LLC to another LLC, getting it away from one prime broker, getting it to another, moving the trades over to Canada, over to Germany or somewhere else. And they've just bought time for them to rearrange the nightmare and delay the cost. That may have happened. I don't know. But those people are not going to turn around and support the stock. But the rest of Canaccord, the investment bankers who just got paid $350,000, the research desk, the retail brokers and the institutional brokers, they'll come in and they'll support the stock. And I think one of the biggest supporters of Railtown is at Canaccord or is associated with Canaccord. I think he and his network owns something like 25, 30, 35 million shares. So I think they'll come in, but it's a different part of Canaccord. Marty, I was only trying to come up with an explanation, which I'm at pains to come up with. I cannot understand why an acquisition where both parties are enthusiastic to do it took 11 months, 10 or 11 months. I can't come up with a reason. So I'm just scrambling to figure out why a relatively simple acquisition. Everybody wants it done. It's 100 pages. You already got 52% of the vote. Why did that take 10 months? I can't figure it out, Mark. One of the reasons could be that Canaccord, the criminals, their clients got in trouble, and they just were trying to buy some time while they moved trades, arbitrage it looks like, they moved trades away from Canaccord prime broker, and they moved them to a prime broker like Alpine or a prime broker like, do we stuff the stock in retail accounts and how? And I don't know. That part of it, Marty, has already happened if it did happen. Do I need to bring it to your attention again that last Thursday night, I think it was, the company announced that they are announcing that they intend to close the purchase of AIP per their previous announcement on November 14th. Of course, they put in there the typical legal cover your ass language, there can be no assurance crap. But they told you, Marty, that on the 14th, this acquisition is going to be completed. They told you that. So the answer to your question is the time for Canaccord to, if it's happening, to be helping their trapped short clients move stock around and buy time is over on the Friday. So I guess the answer to your question is it'll end on Friday. I do think parts of Canaccord have been extremely supportive of the stock. I think there's buyers in the stock from before. I think there's accounts at Canaccord that own a massive amount of stock. I think there's going to be research potentially out of Canaccord. So I guess my answer to you is it'll end on Friday when Railtown finally acquires AIP. Donna, good afternoon, William, and future RT millionaires. I'd like to see it closing green. Yes, I agree. Where did it do today? It's green today, Donna, up 2 cents. Pretty good. Green is green and moving in the right direction while I hold for the long run. Yeah, I'm not trying to be dismissive of how uncomfortable it is. And maybe I'm being stubborn. Maybe the way to look at this is if the attorneys are taking so long, there must be something wrong at the company. To me, that's a non sequitur. The attorneys, for whatever reason, took 10 months to 11 months to draw up a simple agreement. To me, it's inexcusable, but whatever, they took that long. And you paid Canaccord 350 grand for what? But anyway. Maybe they did the valuations and maybe they dragged it out. I don't know. But to say that we could have been doing something else, or how did I know? How do you know that it was going to take this long for the attorneys to draw up a relatively simple document? It's not that hard. There was one page that was, describing the deal, maybe 2 pages. Otherwise, it's all boilerplate. But I understand it. So what's the alternative? Just assume that the company sucks, management sucks, they don't know what the suck they're doing, the whole story sucks, AI sucks, data sucks, the multiple sucks, the comps suck, everything sucks because the attorneys took forever? It just doesn't make sense to me. We can all agree that it's been a real pain in the arse to wait this long. And it's been painful. It's been annoying. On the other hand, many of you were taking advantage of it to build truly incredible positions. Not all of you are like Richard Kay, who need instant gratification. You understand that, there's some positions here that are unbelievable. Deschamps is here, has a massive position. Neil has one, Jack, Justin Babish, even Joe 99's position is amazing. And it's all been available because the attorneys took their sweet time. But I don't get that connection, because we've had to wait, because apparently there were other places we would have known to be to make money, because the stock has been suppressed. We know that. Day after day it closes in the red. And I agree with you, Donna. It'd be nice to start seeing green. I don't get that. They announced it on February 11th. They obviously agreed earlier. There's been a period of time where all the major buyers, the knowledgeable buyers, the buyers with wherewithal, the buyers that really care, haven't been able to buy. And in that environment, the automatic program selling by computers read MOU. They did it twice. They read MOU. They read acquire. They read LOI. They just start hammering it. And that, I'm supposed to accept the premise that means there's something wrong with the AI 2.0 story? That there's something wrong with the Tele story, which is gigantic? That there's something wrong with 400 million in revenue for the taking at AIP Partners? That there's something wrong with the revenue share? That there's something wrong with the conductor product? Just because the attorneys took their bloody, well-paid, well-talented time? I don't see it that way. I see it that there's been an opportunity to buy the stock. Add to the stock. Hold the stock. Yes, 6 months is a long time, but it was going to go by anyway. But if the stock has a catch-up phase, let's say over a 6-week period, you got to remember that it's just caught up to the Series B financing. There's pre-seed, seed, Series A, and Series B. It can go all the way up to Series E and longer and higher. Don't be impatient, because if you're impatient, as soon as it goes to 4, you're going to get out, because Richard Kay tells you there's another place to make money, which he doesn't know. He's just looking back and he's seeing that 1 or 2 of these things worked out. But you don't know. What if you were one of the lucky ones that got into G-Bucks at $7 because it was going to go to 150? It's 13 cents. Come on. Account settings. Brandon, I did ask the reverse split question to one of their IR relations team members, and the gentleman didn't know anything about reverse split. Also, he said we have never discussed in any of the company meetings. Well, yeah, there's no, to Brandon in account settings, a lot of what happens is this is a whole systemic method of stealing money. The government prints trillions of dollars to go to war for a shitty little country, and the banks know that money's sloshing around out there and they want it. This is one of the methods. And they have the attorneys, they have the regulators, they have Congress, they have the broker. It's a whole system. So one thing they do is they convince a company that the best thing they can ever do is be on NASDAQ, access to capital. So they do a financing that's toxic. They get on NASDAQ, and then they crush the stock. And then they do a reverse split. But the key is the reverse split recommendation comes from these well-dressed, important investment bankers. They're really just bird dogs. And then the attorneys come in, well, we recommend that you should do this because, and then the board members all go along with it because they got their kids at home, they got to get home. And then the attorneys listen to the other attorneys who listen to the other attorneys, and they're all in on it because it sounds so reasonable. But there is no toxic financing here in Railtown. There are no smiling, lying faces as board members. Remember, a collective audience had 2 smiling, lying faces from Aubrey Advisors before Aubrey took over 90% and then sold a big chunk of it to Greenberg in Connecticut. There are no smiling, lying faces on a board at Railtown. There are no smiling, lying attorneys representing the Chadron Financial or Aubrey Advisors, and they wear the nice suits and they got the hot chick come in and everything feels good. There are none of that because there was not ever a toxic financing, and the company doesn't need to do it. You guys have been abused for so long. I mean, I understand it. It's like a child abused by their mother when they go out into the dating world. It's very difficult. Or, a dog that's been whipped or hit by brooms. I used to take a broom to sweep my floor, and Lucky would skedaddle. He got better, but he still, because someone obviously hit him with a broom. You've been hit so much by these crappy manipulated stories that you just are trying to see the problem here at Railtown. Railtown doesn't have a bunch of lying, smiling faces recommending to them that they should reverse split so they can do another crappy financing with another set of smiling faces so they can take it up the rear end, bend over, lube up, and we're going to take it home to you. They don't have to. I don't know how to explain it. I just don't know how to explain it. You're buying what some of these people tell you, that because the stock is priced in the same range as the other stocks, it must be a shitty company. You're buying into that. That's why I get so angry when those people come on. I know it has that impact on your brain. Not you personally, though, a group of you. And it's understandable. It's the same abuse. But what differentiates Railtown, they didn't do a toxic financing. They didn't listen to a bunch of lying attorneys. They didn't listen to a bunch of pretend financiers. They didn't get impressed by some bloody hedge fund that's shorting their stock. And more than that, they self-financed. And they're not greedy. They don't have over impressive salaries. They don't need the money. They're not in dire straits. They don't have to cover their ass. They can be tough. The only problem is the acquisition of AIP Partners has taken 11 months. They've blown through all the excitement of the AI boom because the attorneys, and I know I've been admonished that, they must be great attorneys. They probably got great grades, undergrad and law school. But whoever the hell runs a business based on what attorneys want? Anyway, you should be grateful that Railtown didn't take any financing from the United States. You should be grateful. I am. The flip side of it, you should understand that as soon as Canaccord was named, the computerized selling began. And it's entirely possible, maybe I'm wrong, Marty, but it's entirely possible that Canaccord had something to do with the delays. I don't know. You give me a reason why it takes 11 months to close a deal that both parties want to do. What? The negotiation about the valuation? All right, let's say that's 2 months. 2.5 months? Why do you need 11 months? A pretty logical conclusion is that Canaccord was trying to help their best go-to clients move a trade somewhere where it doesn't come back and bite them in the ass. It's possible anyway. But it's announced it's going to be Friday. They can't do that anymore. The delay is about expanding the period of time that all those buyers can't come in. Well, that ends on Friday or shortly thereafter, unless I'm missing something. So know what to say. I'm running out of things to say. There's a big disconnect. I'm not doing a good job of teaching this. This is the beauty of this investment. You guys are calling in about reverse splits? The guy must be wondering, what the hell? I mean, frankly, it's almost embarrassing. But I get it. Every other stock has done it because GTII was a piece of shit. I think they lied about the law firm. I think the Trento mining deal was just hype. I think the acquisition of the distance learning is a bunch of crap, and et cetera, trying to cause a short squeeze. I think GDC apparently has a bunch of Bitcoin, but there's an entry. I'm not an accountant. There's an entry on the balance sheet that says they paid $200 million for the Bitcoin, and they have an additional paid-in capital of $600 million. Where's the offsetting? I mean, I remember my basic accounting. You got to have an offset. The two columns come down, they match. What's the offsetting? Shares? Side letter? A night out with the neighbor's wife? I don't know, but GDC is down. I don't know. You want to chase it? Chase it. Finger. I'm not going to go through that. I've called that one correctly. What else? CRTD. Idiot. You know, the guy's smart. I thought he had courage. But smart is as smart does. COSM. A company with contracts and a Greek CEO. Come on. Genius Brands. A guy that dyes his hair and speaks in a British accent. It's my fight. Come on. Again, just a crappy company. What else is out there? MULN. Pretty good idea. Relies on subsidies, but a pretty good idea. But you take the toxic financing, doesn't matter what you do. Northwest Bio. You take the toxic financing, doesn't matter what you do. DBMM, another one, kind of, is that a good idea or not? But they take the financing, doesn't matter what you do. Because the system, if you can bring $10 million in value by issuing 1 million shares, the system's going to make sure instead of issuing 1 million shares for that, you end up issuing 100 million shares. So what was worth $10 a share becomes worth 10 cents a share. But that's not Railtown. And to call in and ask them about a reverse split, they must be thinking, who the F is this guy Farron? What kind of clients is he getting in there? It's so, I am telling you guys, there's no such thing as a bad question. And by asking these questions, you're learning. But I hope you can hold on to this stock long enough and you can avoid listening to these other people. You're so starved for information, which I understand. Wall Street has set it up. So there is no other information other than some, young person that reads a script to you and you go into a mutual fund. It's terrible. It didn't used to be that way. But you can't listen to these guys. They're just taking advantage of you. And they don't care. It's not a single one of them that cares. But Railtown is going to take you away from that. And I hope we can stay together. If it isn't, I'll give you a dozen names of people that can go manage your money that you can trust. I know hundreds of people on Wall Street. If they're not dead, I know honest people you can go to that aren't going to do this shit to you. But what reason would Railtown do a reverse split? What reason? To take it from 175 million shares down to 11,750,000? Why? Why? To get the price higher? Don't you understand that the price being higher, it's just arithmetic? What does it do? Do you understand that Railtown trades in Canada? It's not a NASDAQ stock. Yes, it trades on the over-the-counter. I don't know what to say. I don't know what to say. Brandon Neely, I was asking you about reverse splits, thinking they would jump into 5, and then big buyers would jump in because it's over 5. Oh. Would they do that? It's a little gimmicky. And Brandon, it's not just $5. It's not just $5. And every place is different. But if the company, let's say, currently has a $60 million market cap, 60 million is too small for most brokerage houses to allow their brokers to recommend it. It's, it's not always true. And it's too small for institutions to buy. So even if it's a $5 stock and it's still trading for 60 million in market cap, the institutions aren't going to buy. And it's too gimmicky. Brandon, they don't need to do this. The stock is at 54 cents because they haven't closed the AIP deal. There might be something else I don't know about, but it's here because the buyers can't buy. And that's been the way it is, unfortunately. Look, I didn't come on and say buy it in February because I figured it's going to, I looked it up. It takes a minimum of 30 days to get approval from the regulators. But I figured, well, probably going to be negotiations of some kind. It's going to be, so it's not going to happen in 30 days. And then I looked up what could delay it. And what could delay it in Canada is if the acquisition causes a reduction in competition. That's another 30 days. So I said, all right, it takes 60 days probably. Add in some, back and forth time. Maybe it's 90 days. So I didn't come to you in February. I didn't come to you in March. I didn't come to you in April. In fact, I didn't come to you in May. I tried to avoid that delay. But by the time June came by, I was wrong. I thought this is going to happen any minute. I was wrong. But I really thought I couldn't wait any longer. And once the deal is finished, they can start buying and talking. Well, something delayed it. I gave you my initial reaction, which was inappropriate and wrong. And I was admonished for it, and I've apologized. But then that leaves, why did it take 11 months? I still don't know. I still don't know. One explanation could be the attorneys and the banker and a couple of the people over at Canaccord Genuity pulled some strings to gum up the works. Could be. Maybe with the regulators. They got money. It's trillions of dollars. They can threaten if money doesn't work. I don't know, Brandon. I do not know why it delayed so long. So the stock sits here at 44 cents, and you're trying to come up with ways to trigger buying. It's all gimmicks. Wall Street sees through that shit. You can't outsmart it. But Brandon, it's not just the $5 price. Sometimes it's not $5. Sometimes it's $7. Sometimes it's $10. It's not just that price. But when you have a company with it'll be 225 million shares outstanding, basically, times 5, you're comfortably over the threshold. The threshold institutions, some institutions have, or some retail networks have, it can be $1 billion, but it can be $500 million. It can be $750 million. So it's a two-pronged thing. It's not just $5. It's the market cap. So if you change, the current market cap is $60 million based on 44 cents. If you reverse split to get it to $5, the market cap might be $65 million. I don't know what, $70 million. Yes, it meets the $5 threshold. It doesn't meet the market cap threshold. So it's a good idea, but it's gimmicky, and it doesn't fix the problem. It's still a micro cap. It's even a tiny cap. And the price level is partly about the leverage that's automatically there. If you buy GDC, well, no, if you buy G-Bucks at $3 and it goes to 2, you've lost a third of your money. But for it to get back to 3, it's got to go up by 50%, which is normally unheard of. Normally. If you buy GTII at $2.20 and it falls to 20 cents or 10 cents, you lose, I don't know, 95% of your money. 90%, whatever the arithmetic is. But for it to go back up there, you've got to see from 10 cents, you got to see 200%, 200x. It's the leverage. You don't need margin to destroy you in low price stocks. Just the arithmetic destroys you. So one of the reasons they have a $5 or $7 or $10 minimum is that. But that's just part of it. The rest is the market cap. So simply taking the number of shares in a gimmick from whatever it is, 250 million down to 25 million, so the stock price goes from 45 cents to $5, isn't going to trigger any buying at all. And besides, Brandon, nobody knows the story. The only people that know the story are the big investors at Railtown, the insiders, the outsiders that have big positions, whether human being or institution. The big people at AIP, same thing, at some of those other stocks. But Canaccord has had a lock on the information, zip, because they were the exclusive banker. So none of the other banks in Canada, no bank in the United States has ever heard of Railtown, unless just by accident. Nobody knows the story, Brandon. It's not about $5, $10. It's about knowing the story. Gimmicks are for these other stocks. Please stop thinking about gimmicks. Stop thinking about hot money. Railtown isn't hot money. Railtown's going to get there. It's going to get there unless the world is hit by the moon or Putin launches the Poseidon missile off of the coast of New York City. I don't know. These questions don't really show that you guys are ready to have 2 or 3 million in your account. They really don't. So I'm going to have to try to teach you to appreciate that kind of money. I've been through it in my life. I've made millions of dollars several times. And when I was younger, number one, it seems easy. Number two, you figure out if you can do it, you can do it again. Well, you can't do it again. Railtown is a unique investment. I don't think you're going to see another investment like Railtown. I do think you're going to see some AI opportunities, and I might have access to them, sort of on the healthcare side. But I don't know. I don't know how the pricing is going to be. If you guys are mature enough and you'll be accredited, but you just don't have the experience or the brains for it. And that's where I've failed you. I have failed you. Normally, one would have to go to the bowling alley to meet someone of your character. It's been lovely to meet you, Gloria. Now, normally, an opportunity like Railtown would be something I'd bring you as a private investment. It'd be something you'd have to put your money in, and you would have no liquidity, which is a weird thing to say, because in essence, for 6 months, you haven't been able to get out of this. But I would suggest to you 6 months is just a tiny amount of time in most private equity investments. You're looking at years. So in most cases, for me to be able to show you something that I truly believe, Brandon, can go from 44 cents to $4, $5 to $55, all in, believe it or not, 6 months to 9 months. It just doesn't happen. It just does not happen. And it won't again. I doubt you'll ever see an investment like Railtown again. You might, if you're fortunate. But if you treat Railtown like the ladies down on 7th Avenue, instead of the debutante that has style and grace and an outlook on life like yours, like your own, you're going to miss out. To even call and ask about a reverse split, or to suggest that by getting the price to $5, it's somehow going to trigger movement. It's just, you're just screaming, take advantage of me. That's all you're doing. I believe if we can all stick together and build a pool of money, I don't know if I should set up a company, an ETF, an exchange, closed-end fund, open-end fund, a private. I don't know. I've been giving all of it thought, but we're not there yet. But we could be there soon. And unfortunately, the mining area has really started to move away from us. I've been waiting for funding forever, and I don't know. I don't know what to think. It's the same experience. Delay. Same bureaucratic crap. But in the meantime, what was an obvious trade to me is obvious to everybody now. And so in will come the private equity guys and girls, and they'll take, I'll give you an example, Brandon. In the Central Basin platform, I don't have a picture of it here, which is where Torchlight first had some assets. It was a great opportunity to go buy revenue-producing oil and gas properties with locations at a 30% discount, PV 30. It was awesome. And I was expecting to have money to go do that. And it was a great way to build a company. Well, the last conference I went in, these cocksure 35-year-olds with pools of money from Wall Street, they came in and bought it all up. Didn't care what they paid, because they're going to get their bonuses. They tell the story. But what they do by doing that is they get the first 10x or 15x or 20x or 30x inside of their fund. You don't have a chance to invest in it. It's these professionals or I don't know, SAC or whoever. Or it's through a mutual fund. But they come in, they claim that, and then they're able to get 2 to 10% annually off of it. And they probably anywhere from 20 to 30 to 40% of that gain before it comes to you. With the kind of money that we can create here, and I'm not doing it for this. I'm really not doing it. If you guys want to disperse. I'll be fine. But I can tell you, if the majority stick together, and it doesn't, I can teach people, but it can be others. I can put a team of people together, but I can go get transactions private with an exit, with warrant coverage, if we have cash. But if you're idiotic, and it's not so much not understanding it. My point is, if you start trading the crap that the charm boys bring you, you're going to lose it all. They're going to suck all of that. As some Cosmo CEO is going to get another $35 million out of your money. Some asshole that got a squad worth of Playboy and Penthouse pictures is going to take $10 million from you. Some other jerk who drives around in Rolls Royces and probably did the deal with the Kramers is going to take $5 million from you. Some other pain in the ass who promises you the moon is going to take your money. And I'm telling you, if we stick together, I can show you. Number one, you should be happy with what you're going to get out of Railtown. Maybe just keep it. But I can show you how to do things for cash flow and growth and be transparent and fair. But if you listen to this crap, you're going to lose it all. And these kind of questions lead me to believe you're going to lose it all. I don't want you to do that, Brandon. I don't know how old you are. But I'm an old guy. And there's no 100% guarantee that things are going to turn out the way I'm saying. But I've had experience. So I'm not making this shit up. But I also know how rare it is. And I didn't do all this work so that when your position goes to 5 million, you can have it stolen by the charm boys and it ends up in some CEO's account so he can fly around the world and go yachting with Meghan Markle. I don't want that to happen. I want you to keep it. I want you to keep it. And I want you to become a different financial entity. You don't see it now, but if you can have $1 million account or a $2 million account, you're different. Of course, then we got to figure out how to save it from the crash. But the noise from the charm boys' schemes, I'm telling you, it's all falsehoods. I'm not saying they know it, that it is. They just might be particularly thick-headed. But I don't know. It doesn't matter. I don't want to be in the, it's better just to avoid it. But anyway, Brandon, what Railtown is, because of a certain set of characteristics, the guys got started early, no question. The guys knew what they were doing. I don't think there's any question about that in software. The guys put up their own money and did it kind of on a shoestring. I don't think there's any question about that. The guys created a product that solved a major problem, addresses the largest market in the world. They're first to market, best in class, and they have a relationship with Microsoft. I don't think there's any question about that. They were looking ahead and realized they needed money, so they availed themselves of the public markets, first in Canada, then in the United States. I don't think we can deny that. Once in the United States, they got crushed at some point. I don't know exactly when it started. We can't deny that because there's 50 to 60 million shares initially shorted. We don't know how much remains shorted. And that's just the United States. We don't know about Canada, but there's no argument about that. We know that they chose Canaccord Genuity, who is a notorious facilitator of short selling. Can't argue about that. We know that AI 2.0 has caught fire and that James Altucher calls it the single best technology and the greatest wealth-creating technology revolution in 150 years. He said that AI 2.0 is going to create more wealth than crypto. It's going to make crypto look like a ripple. Can't argue about that. Morgan Stanley's put out research training their sales forces that AI 2.0 is coming. The first day, they didn't use that word, but the first AI was about gathering all the information in the data centers, basically scanning everything. The second AI revolution is about using it vertically, which is Railtown. Can't argue about that. That happened. We can't argue about the masses of amounts of capital going to data centers, going to acquire AI, teams, and otherwise. We can't argue about that. That's a fact. We've seen it. Can't argue about the multiples, anywhere from 50 to 250x on revenue. Can't argue about an arms race. All of these are facts, for now anyway. We can't argue that John Ruffalo and Mike Norbrega were the foundational investors in Constellation Software, and they're taking that same strategy and they founded AIP Partners up in Canada. Can't argue about that. We can't argue that Canada has decided to put all of her resources towards AI as a national priority to stay relevant in the new world. Can't argue about that. We can't argue about Canada having a lot of energy resources. Can't argue about that. We can't argue that AIP said to Railtown, buy us. We're your girl. Can't argue about that. Where we can argue, I guess, is Railtown's a bunch of shit. They don't have any revenues. Well, we can argue about that because I can't tell you one way or the other if they have any revenues. But I can tell you, if you study this, you see 3 or 4 ways they're going to get revenue. If you study this, it's in here. They can't lie. But you got to put the pieces together. All right, that's something you can argue about. I think you're wrong if you say Railtown doesn't have revenue. I think they're going to jump. They're going to go from 0 to 50 million, maybe 100 million, maybe 150 million, and it's in here. But that is something you can argue about. I guess we could argue about why the acquisition of AIP is taking so long. It's not an interesting argument. We just have to acknowledge that it has taken so long. So that's not much to argue about. But an aspect of it is it really true the buyers aren't buying? Does it make sense that the buyers are waiting for AIP or some other event before they buy? Does that really make sense? Or they're not buying because they know the company's shit? I guess right now that's an argument. I buy the argument that the buyers are in the box right now. They can't come out of the box. But, okay, that's something that we can debate. I don't think we can debate anything else. The only debate we can really have is, why aren't the buyers here? It's the only debate we can really have. I don't see anything else debatable. Could be wrong. If you want to argue that it's been 6 months and we could have done something else with our money, okay. You're still in the financialization, hot money stage of the market, the spoiled brat stage of the market, and go lose your money, because you will. You will. I'm telling you, Railtown gives you a chance, Brandon, to take 100,000 shares and become wealthy. That's what I'm telling you. But if you keep listening to all this noise and all this experience, which have scarred you and make you respond like it's going to happen again. Look, I understand it. I do, because I go through it in the middle of the night. I'm not as tough as I'm trying to look. But I surely do wish that the AIP deal would close, and whatever might be that, I can't know about. If there is something else holding up the buying, I wish it would just end, because we're coming into the holidays and we might have to wait till next year. And the longer you wait, those variables that I hold equal, they can change. But I still think the preponderance of evidence, Brandon, particularly with your stock position, even if the stock only goes to $5 or $10, it's a substantial change to your situation. But you can't think the way these guys want you thinking, because then you're still a victim, and they'll take your money from you and they won't look back. I don't want that to happen. Anyway, the reason Railtown is unique is you can buy the stock at a pre-seed or seed money valuation. If this stock were private right now, you wouldn't see it. But you can't accept your good luck to be in this situation. You're just unable to accept it. There's got to be something wrong. I get that. I'm glad it's gone on for a while, because we've built up a large position, and I think that's the way I'm going to look at it. Is without the delay, we would have had 3 million shares. Instead, we've got 15 million. So I'm going to look at it that way. All right, let me keep moving on. Ward says, Donna, I love your greeting. It has a nice ring to it. Yes, it did, Donna. David, SoftBank has cashed out of NVIDIA. All stories about AI on CNBC is concerning. How does this affect Railtown? I doubt Railtown's on CNBC. Let me try to read this again. SoftBank has outbid NVIDIA. All right, let me say, SoftBank has cashed out of NVIDIA, period. All stories about AI on CNBC, period. This is concerning, period. How does this affect Railtown? For you, it doesn't matter. You don't own Railtown. But I don't think it has an effect on Railtown long term. Obviously, the whole AI complex is down. I mean, SoundHound is down. Oh no, I guess in after hours it's up a little bit. But I think there's two ways to look at it, David. Did SoftBank call the top in the Max 7? Because that's what NVIDIA is the Max 7. Did they? Do you think so? I don't. Another way to look at it is SoftBank, as they said, decided to spend the money on other AI opportunities. So it's actually a confirmation that other AI opportunities are out there. Another way to ask yourself, what does it matter what NVIDIA is trading for compared to Railtown at 60 million market cap? What does it matter? Are the NVIDIA chips still going to be part of the sovereign AI factory in Uskomunsky, Quebec? let me put this a different way to you, David, because I think you're complicating your life. There's no connection in the longer term about those two. But in the short run, everything gets suppressed. My guess it's about taking profits before the end of the year. It's already bonus time. November is bonus time. Let's say, of course, I got to show it to you. I forgot that because you won't believe me unless I show it to you. Here is the agreement with TELUS. What does NVIDIA have to do with TELUS? Not really anything other than the TELUS AI factory is using NVIDIA chips. So you've got these 180 affiliates. Whether or not they're bought up, it doesn't matter. Railtown is going to control this network. They're going to own it. This conductor platform is now going to be what those 180 affiliates use, at lack of vocabulary, as their agent on top of the TELUS data center. So the 180 companies that are currently doing revenue are going to move their revenue streams to TELUS. What does this say? Shared computer revenue. Shared computer revenue. So as these companies move their revenue streams to TELUS, part of that revenue stream is going to go to Railtown without any cost. What does that have to do with NVIDIA? Nothing. Nothing. You're just trying to get people to think with their emotions. And then this is the moat. And there's a bunch of reasons for the moat, but right here, it says opportunity, and obviously once they own the AIP, this is going to happen, to move acquired and non-acquired affiliates to a common lower cost platform than the hyperscalers they currently use. And that's based on 170 affiliates. They're now up to over 180. It says 120 million. So, David, what percentage of that revenue is Railtown going to get in the revenue sharing? I don't know. I really don't. Let's call it 15%. You're going to be negative. You can adjust it downward. So 120 million gives 18 million in ARR. Okay, David, 18 million in ARR from that alone. That's just one of their potential revenue sources. Which has nothing to do with NVIDIA, has nothing to do with SoftBank selling their stake in NVIDIA, nothing. Okay, David. Lang Chang just raised 1.2 raised 125 million at a valuation of 1.25 billion in their Series B round. LangChain generated between 12 million and 16 million in annualized recurring revenue. So they haven't done it yet. So what percentage? Well, let's do a different one. Let's just look up NVIDIA and see it's down 3%. Let's see how much it's down in a month, 6 months, not much. So NVIDIA now has a market cap of 4.7 trillion instead of being over 5 trillion, David. That's, oh my God, that's scary for Railtown. But let's just say that because SoftBank has sold NVIDIA, that it's radically changed the valuations in the private market. So instead of LangChain, which is an exact comp to Railtown, only it's not as good as Railtown, let's say, why don't we just say, because SoftBank sold NVIDIA, let's just say the valuations have dropped by 50%. Oh, it's a nightmare. Oh my God, this is in the end. All right, so instead of 1.25 billion, let's say now LangChain rate, the bankers that gave money, 125 million, the 6 or 7 funds that gave that money to LangChain, they were all stupid. SoftBank is smart. So let's chop the valuation in half. Because, oh my gosh, SoftBank got out of NVIDIA. All right, so it's going to be 625 million divided by gives you $2.81 target. $2.81 target. And remember, let me just tell you something about that 18 million in ARR, David. It's all cash flow. It's almost 100% margin. Bottom line, NVIDIA has nothing to do with Railtown. Now, if it sparks a panic sell-off that leads to more selling and more selling, well, it would probably make Railtown, a $1-2 stock in the short run, and we have to wait. But it won't change the closing of the AIP deal on Friday. It won't change that kind of revenue from one source of revenue. It's not going to change the AIP revenue, the AI revolution. NVIDIA sells chips. The question is, should NVIDIA be valued at 70 times earnings or 50 times earnings? They're still going to sell chips. Doesn't affect Railtown. Not yet, anyway. Mike Burry is posting about AI artificial earnings. Yeah, I mean, where have you been? There's the idea of the circular earnings, and that's why I think it's smart that SoftBank sold $6 billion worth of NVIDIA because they've got a $30 billion commitment to spend over the next few years. So I think it makes perfect sense for their own risk tolerance to sell. I don't think it reflects anything on AI. But obviously, David, you're negative and you want to cause fear. That's fine. Are you the same David pissed off at me? I don't know. There's two Davids. Mike Burry has been posting. Yes. He's also talking his own book. He took $187 million short position or something like that in what everybody calls AI. But AI is not just 7 MAGA stocks. Those are MAGA stocks. That's what's been leading for a long time. That's what's been leading the rally in the market, no question. But that's just part of the story. It's a big part. Their revenue, their spending, their CapEx is a big part. It's not the only part of the story. But thank you. So, David, is your suggestion nobody should buy Railtown because Mike Burry is posting about artificial earnings and AI? Is that it? It's a non sequitur as far as I'm concerned. Edward Barona, he's hyping this up like hyping Finger, MMTLP. Look where those stocks are at. Look where those stocks are at. Don't believe the hype from this moon. Well, Edward Barona, I never, ever, even remotely recommended the purchase of MMTOP. I just didn't. I bought it in the sort of fever either Tuesday or Wednesday before they stopped trading on Thursday. I bought it. I never once told anyone to buy that stock. So your facts are wrong there. On Finger, it's a little more complicated because early on I did believe in the squeeze aspect of the story. But I just spent the last week or so reading the book, The Great Taking. And I also learned about this in the David Morgan report, probably in February, maybe April of this year. And I've been relaying that frequently to everybody. But I've made it clear, Edward, that my initial, I'd say year and a half, I don't remember the time frame, but the initial part of time, that I believed the short squeezes would happen because that's what I had experienced in my career. But once you understand that in 1996, I think it was, that under the Bill Clinton administration, that the UCC Section 8 was changed so that when people buy stocks, all they're buying is a right to the stock, which is unsecured. Anyway, I don't want to go through it anymore, Edward. You're not worth the time. But what it shows is that short squeezes are not going to happen. Every now and then, maybe the setup can be just right. But Wall Street's not going to buy in those shares. And I've been clear about that now for all this year, the majority of this year. And but early on, I did put out videos that I thought finger motion could squeeze. When I met with Martin Shen the first time, he made it pretty clear to me he didn't believe there was a short squeeze story in Finger. And he said it pretty kindly. I said, well, I thought, I'm embarrassed. He said, well, you were listening to Ham. That's true. But I'm not going to blame Ham because I believed it. I believed, based on my previous experiences, that could happen. I stopped. And again, Edward, I don't want to go back through it. Cindy Lou Who says, I blame the dead man. People don't want to deal with facts. They want to deal with emotions sometimes. But I think Finger Motion was squeezing with something Ham recommended to the company, which was selling a warrant as a special dividend. I think Finger was squeezing. I'm not going to go through the particulars. I think GTI was squeezing. But then you guys found this CEO, this Greek CEO, and a couple of gullible guys, and you popped the bubble on it. Now, if that hadn't happened, it would have been something else. But $35 million came out of those two stocks and went directly into COSM, and it stopped the squeeze. After that squeeze stopped, I stopped believing that either GTII or Finger could ever squeeze. And I stopped talking about a squeeze, at least the best of my memory. And then with GTII, I started telling people to get out of it. I'm going to leave that off since you didn't bring it up. Finger, I started backing way off of Finger, but then the next year it ran from, I don't know, $1 something all the way, I think, to $7 or something. I caught some of that. I expressed some of that. I talked about the trading and selling calls, and I think some people made money. But anyway, either that year or the next year, a very difficult experience with the movie and all that. So I think I've been pretty good on Finger since the first belief that it was going to squeeze. I think my calls have been correct trading, Edward. So I think your criticism is unfair. In terms of hype, I'm not hyping Railtown. I am being adamant about Railtown because you guys have these people in their emotions and thinking that you know something about stocks. You don't. You're just shorting. You're just shorting. You're just shorting. You're just shorting. Railtown's their way away from you. So I actually do appreciate that you've come on because it's a reinforcement of the reason why I'm so adamant. Be in Railtown. Get away from Edward Barona. Eric B. Edward Barona, I do my own DD. That's right. Steve, I added, wow, good, wow, I got to write that down. Added 31.4. That's good, Steve. I think you're still well in the lead. A lot of Florida schools down here do it right. They have school today, do the nice concert for veterans. It was my favorite. That's great. Congratulations. I didn't know you were a veteran. Thank you for being a veteran. Hey, Steve, hi. I did Pete the Greek. I did see that. Charles Payne asked Atkinson. His face is priceless. Son of a beach. I'd like to see it again. I saw it briefly while I was here. I turned it briefly. I'll look at it again. Good for Charlie Payne. So Steve got it. Steve got it higher. 33,900. Good for you, Steve. That's awesome. Bravo. Donna, we close green. Yay, yay, yay. Brandon Neely, if we go to 3-4 naturally, I have no intentions of selling. I believe the company and what you say. I will ride it to 20, 30, 40 or buy out. Good, good, good. That's great to hear, Brandon. Brandon Neely, I think the biggest thing that puts doubt in folks' mind is that it almost sounds too good to be true. That is fair. That is a fair criticism. I once had I forget the investment right now. And it worked out. I forget what it was. But I told it to an investor. I think we were at lunch or maybe we met for a drink. And I told the whole thing. And at the end, I told him where I thought it could go, which it did, dude. But when I told him that, he said, you know what? I was going to buy it. But now that you gave that target, that's too good, too good to be true. So he didn't do it. I'm trying to, I'll probably remember the investment. It happened a long time ago. But so he didn't get the benefit of the investment because it just sounded too good to be true. Here's where Railtown let's try to go through some of the risks on Railtown, Brandon. To me, the broadest risk is that the market crashes and the bankers shut their windows, and a bank goes down, or two banks go down, and we go into a 20-month depression. Then the Fed has to, that could happen. We can't do anything about it, but that's always possible. Another risk is that the AI 2.0 window shuts down overnight. So it's the broad market and then it's the specific market. Well, there's two sides of that. David comes to scare you with really something we all know if we read the news, and that's one side of it. Another side of it is people like Microsoft, the big funds, pouring money into AI 2.0. Let me ask you something. When's the last time you deleted photos from your phone, or you removed, you reduced your storage? It doesn't happen. The demand for data is increasing. So those are two macro risks. The specific risk with Railtown is I'm lying to you. I don't know for what reason. Another risk is the company is lying. Well, I don't know. I don't know. I've never spoken directly to the company. I spoke to one gentleman that represented the company, but I don't think so. But there's a risk. The guys at AIP are all a bunch of fraudsters. Ruffalo, Nobrega, Dr. Tom Korb, they're all frauds. Yeah, I guess. I don't buy any of that. I think that both companies are straight up. They're working hard. They are what they say they are. Another risk is there's no revenue. Their product sucks. it's in this presentation, but it's crappy. Lang Chain is much better, and Railtown's product is just awful. I suppose all the markets that they list, those markets are going to overnight disappear. Nobody's going to want to fix software. Nobody's want to improve software. The travel agents are fine with their software just the way it is. Thank you very much. The automobiles are happy with the software just the way it is. Thank you very much. Airlines are happy where it is. Thank you very much. The federal government happy. Wall Street's happy with everybody's happy. The software development market is going to disappear overnight. I suppose that could happen. I suppose. I think you can see that the risks I see are ridiculous. They don't exist. What are the two real risks right now? I guess three real risks. One is we're at the end of the year, so nothing happens till the first or second quarter of next year. And therefore the markets dry up. I would say if we were in the first or second week of December, that might be more realistic than it is right now, but it's a potential risk. Second risk I'd say is they have no revenues. They never will have revenues. It's all bullshit. They're just telling us revenues to hype us up, hoping something gets hold. Yeah, I guess that's a risk, but why would AIP agree to be purchased by Railtown if their product sucks? I mean, it says right in their quotes that Conductor has broad relevance across all of AIPs. I don't buy it. I think they have revenue. We just don't know what it is yet. Another risk is they never close the AIP deal. It just takes another 5 months, and we're in limbo. I can't do anything about that. Another risk is the AIP deal falls apart. I think there's less than a 1% chance of that, but I don't think it matters. I think Railtown will still make a lot of money, but I don't think it's going to fall apart. Brandon, I can't see any risks to this story that I believe in. Time is the one risk we've had, and we've paid. Boy, have we paid in time and in sideways action. We've paid in that. Stress. We've paid that. But I think if we're willing to just treat this as an investment rather than hot money, we're going to be rewarded. I don't see major risks, although it is a speculative stock. I don't see major risks in it. So Brandon, I never gave initially the really high numbers. I started telling you the high numbers because I don't want people shaken out, frankly. But some of my higher numbers may be wrong, either direction, by the way. So that's an area where there could be risks. When I give a number 50, 60, 100, those could be wrong. Those could be wrong. We don't have the information yet. But I think from 40 cents to $5 to $15 to $25, as long as the world doesn't change, I think that's going to happen. JD, 4 p.m. William, where I've been away. Where's Lucky? I hope he's in heaven with St. Francis. But Lucky died this year. And he was the best dog anybody could ever have. Absolutely the best dog. I feel very bad at the end of his life that I wasn't happier and I didn't have enough people around him. But I tried to introduce, I had to move to, so his life was disrupted at the end. But what a good boy he was. The greatest, if I died today, I would say he was the greatest blessing I ever had in my life. But obviously, I'm forgetting other blessings. But I'm looking at him over there. He's in a box. His ashes are over there. But Lucky died. Lucky died. Oh, yeah, Donna, that's true. It's a good time for my Jennifer disclaimer. I have not been paid in cash, stock, or anything, any way whatsoever, to focus on a strategy of buying Railtown. I just haven't. There was a brief moment in time where I thought I was going to get a hat that said Railtown on it, but obviously I said something wrong. But thank you, Donna. I forget to do that. I'm doing this because I believe in it. I'm not making money doing it. And I get adamant, I guess, because I really do think it's a way to undo some of the hurt and some of the losses people have experienced. And I wish I could do a better job at it, but we'll see what happens. JD, 4 p.m. I've been away. How is Lucky? He's dead. I hope he's in heaven. Happy, happy, happy. Donna M. JD, Lucky's in doggy heaven. I hope so. Jack Hamilton. JD, 4 p.m. No man, no. I hope you're on the up and up and not some show. Lucky is in our hearts, but he's no longer on this earth. Thank you, Jack. That's very nice. Jack says thank you to Donna. Jack says, looks like you and I had the same timing. You're a little faster on the draw. Brandon says, thank you for your thoughts. Happy Veterans Day. Yes, and you're right, Brandon. It is the 50th anniversary of the wreck of the Edmund Fitzgerald. Hey, Jack. Thank you. Yeah, happy Veterans Day to everybody. Jack, thank you. And cheers to all the others as well. Account settings. I mean, I had asked the reverse question back in June when I just started about Railtown. Yeah, I got you. You know, sometimes it seems personal. I'm not trying to be personal to one person. And I'm not always as frustrated with you as I am with myself. And in your defense, this has taken a long time. It has. Really, Chucky, you think Finger's going to go to 3,000? I don't know. They'd have to do a hell of a reverse split. I don't think Finger's going to go to 3,000. And I don't think it will, and I've said so. So I don't know your point because I've not said that. So I don't know where you're getting that target from. If it's your own target, I think you're delusional. And My target for the last, I don't know, 5, 6 months on Finger is I have a bad feeling that when they do a deal, it'll be at $1.25. And I'd be very cautious, Chunky, buying Finger if you're hoping for it to go to 3,000. That I don't see that as being feasible at all. So good luck. Good luck with your target. I'm almost legend. Check this out, Sir William. Chatting with our AI friend, I asked if it's possible that large Canadian institutions would invest in Railtown after the merger completes, knowing all of the information and news about TELUS and AIP. Answer: most likely, yes. That's the thing. Once filings confirm the merger and share structure, see, and I don't know that the attorneys, let's say they close it Friday. I don't think the attorneys are going to work late and get it filed Friday night. Sorry. I don't think they're going to do that. In fact, I doubt they're going to work over the weekend. So I would guess Monday or Tuesday, but still, that's soon. It's soon. I love that. You're right. Once filings confirm the merger and share structure, exactly, institutions may start building positions if they view the fundamentals and TELUS connection as strong. I agree with you. I later asked it what its personal thoughts were. The stock could see a short-term bump from confirmation and renewed attention, then stabilize or climb gradually if investor confidence in the AIP TELUS partnership holds. Wow, well, I'm seeing the bigger number. Likely a 20 to 50% short-term price bump, depending on trading volume and market sentiment right after the filing. Very good. I'm almost legend. That's similar to how you explain the slow investment. Yes, unfortunately, Sir William. Thought AI doesn't quite agree with you about, or though AI doesn't quite agree about you with the $1 to $5 price, at least not soon. This is its perception. It take major revenue growth, confirmed TELUS contracts, and strong investor demand. Realistically, 6 to 18 months if fundamentals deliver and hype sustains, even with AIP's existing revenue. Well, I think it's wrong. I'm almost legend. I've shown you a comp. The Lang tracks, they're projecting annualized revenue. It hasn't even happened yet at 12 to 16 million, and they valued it at 1.25 billion. So I think AI is wrong, frankly. I don't think it takes major revenue growth in the sense that it has to be booked. I do agree that it's going to take major revenue growth projected with a clear path to it that is believable. I do agree on that. The confirmed TELUS contracts, I would take that as a broad bag because they've already talked about revenue sharing. So I don't know that that has to be confirmed, but I do think it's a grab bag of what is the deal? When will it start? How much revenue are we talking about? Does it apply to new business or just transferred from AIP? What if, all of that? I mean, a dream would be every bit of the business TELUS directs to their own, they direct their own customers to this brand new factory. Maybe it all goes through conductor. That might be dreaming. That might be greedy. But yeah, I think that's correct. They've got to talk more about that. Strong investor demand. I think there's going to be three sources of investor demand. One is if it's true. And this is probably the only risk that I see, that if it doesn't come through, I'm going to go, wait a minute. And that is if the family offices, the institutions, the insiders, the whales, et cetera, et cetera, et cetera, have been held back from buying because of AIP or because of some paper they signed or something, will they come in? If they don't, that would start to make me wonder, wait a minute, what did I miss? But I don't think I missed anything. I think they will come in. So that's going to be one source. I don't think it's going to come in all in the same day. Some of those institutions can't buy under $1, can't buy under $2, can't buy under $3. Some, it'll, like I've said, it might be start, stop, but it's going to be steadily upward. The second source of buying, I think, is going to come from a broad category that I would call research. I think there's going to be anywhere from 2 to 5 research reports, and depending on their following, particularly in Canada, I think it'll bring in institutional and retail investors. The third thing is, I think there'll be buying generated by just the company going out and talking to institutions, large investors, conferences, but being able to sell the story. So I think those three. And then, as ever, there'll be a fourth category. As the stock goes up, people are going to buy it. They will buy it as it goes up. Anyway, I do believe there'll be strong investor demand. But that is the one area in this list that I'm willing to say, let's see it. It'd be nice to see it. The fundamentals, this idea that the fundamentals have to deliver in 6 to 18 months, that's not true. The small price stocks, you've never seen. All right, let me give you an example. NVIDIA. One of the reasons NVIDIA is trading at a $5 trillion market cap is the forward projection of revenue and growth and earnings. The forward projection is being discounted today for the bullish people. So they're willing to pay up now because of what they see in the future. You're starting to see some cracks in that, but I would argue it's just a correction. I don't think NVIDIA is over with, but we'll find out. Obviously, the higher it goes, the riskier it is. But that kind of discounting of the future projections is exactly what the pricing of LangChain just happened by people that have the knowledge, not me. So I think this is wrong on that. If we just haven't heard them. I just don't know why the process, I don't know if it's the attorneys or something else, but the process of buying AIP, I literally think you could have built the Empire State Building by now. I think the Empire State Building was built in 12 months. I don't know what happened. But anyway, I disagree with um, the AI model. The simple fact that research and Corey, others are out telling the story and it's believable, those future, the 6 to 18 months fundamentals will come to right now and the stock will price it. And just to give you why that'll happen, at let's say $10 a share, it'll be projecting, I don't know, I don't want to figure it all out. Let's say it'll be projecting 100 million in revenue at $10 a share. I'm just giving an example. Well, the reason people will be willing to pay $10 a share at 100 million in revenue is because they expect that revenue to grow to 500 million. And then the stock will be $50 or $60. And the reason people are willing to pay $50 or $60, they're expecting that revenue to go to 1.5 billion. I'm making up the numbers right now, but that's the progression. And I think AIP is, AI is wrong in your example, but we'll find out. Even with AIP's existing revenue, $1 to $5 would require proof of sustained growth, recurring contracts, and successful integration. I don't think so. LangChain, I mean, that's the thing. If you don't believe it, you don't believe it. But LangChain is the closest comp out there. It's not as good as Railtown. It's in the private equity model, not in the public markets model. And they just raised money in the Series B based on non-existent revenues, annualized revenues of 12 to 16 million. And they gave it a $1.25 billion valuation. Railtown could show annualized revenues at 50 or 100 million by February or March. Not 10 million, 100 million. Not 15 million, 150 million. But I keep trying to keep it conservative because you're going to say, what a wacko. $5 just needs 10 or 15 million in revenue, 100% payout. But I don't think it needs proof of sustained growth. I don't know what recurring contracts means in this case, because the one agreement is enough. In the case with TELUS, it might be more than one agreement, but establishing the relationship is enough. The one agreement with Uniserve or some of these other companies they've already announced is enough. The acquisition of AIP is enough to cross-sell Conductor across 5,000 companies. It's enough. So I don't agree with that recurring contracts. However, if what they mean is recurring revenue, I agree with that. But I don't think it has to be proof. I think it has to be a believable presentation to people who understand AI. You and I don't. But a Microsoft, a NVIDIA, an AMD, a SoftBank, a Mavericks, an Omer, these kind of companies, they see the projected revenues and they see the adoption rates, they see that TELUS, I don't know this, but whatever TELUS's capacity is, I don't know what their capacity is up there in Canada. But if that new factory is brand new, and when Railtown moves 120 million of revenue over through its AIP, maybe that's just 1% of what that facility can handle. And then Railtown goes out and grows revenue itself, develops revenue. We don't know. Those are things we got to know, but it doesn't require proof. It requires the ability to extrapolate, a model, a penetration. If TELUS data center can process $2 billion worth of revenue by 2028, and all of that's going to be run through Conductor. Of course, I'm going to an extremely good. I'm not saying that's going to happen, but all of it goes through Conductor, and Conductor gets 10% of it, 10% of 2 billion, 200 million in revenue just for existing. That will be discounted in the price fairly quickly. Now, a limitation to it is if 200 million is the cap on the amount of revenue they can generate in that scenario, it might only get 25x. But I don't think that'll be the cap, because they're building another data center one in Muskowiski and one in Tuscaloosa. I don't know. But they're building two. And if that capacity runs out, they can expand the capacity. So anyway, it's pretty exciting. But that's just one source of revenue. One source. If Conductor is so valuable, as Mike Nobrega was quoted as saying 7 months ago, this Conductor has broad application across all of our customers and their end users. Well, that's going to be huge revenue. You don't even know. It could be 100, 200, 300 million in revenue to start out. All of that will continue growing. I will tell you something, I'm almost legend. Whatever the limits to capacity are, if they exist, if Railtown gets to 150, 200, 250 million, and their model works, and they truly are the best, and the addressable market is 300 billion in annual spend, I'm telling you, if a Microsoft thinks they could buy Railtown, and then Microsoft could, with their resources, claim 10% of that 300 billion annually, that's $30 billion in annual revenues, high margin revenues, that Microsoft might be willing or might create. Now, I'm mixing my experiences. If this were an oil and gas company going to produce 30 billion a year, depending on the state of the stage in the market, if it's a bear market or bull market, a buyer might pay in a bear market 1.5 times that revenue, In a bull market, they might pay 7 to 10 years of that revenue. So a Microsoft, I think at a minimum, would be willing to pay 1 year, 1 times that revenue to buy it all, if that's what their projection showed. But I bet they pay 2 to 2x if there's a bidding war. I bet they'd pay 3x. But at 30 billion, and if you just assume 300 million shares, it's pretty easy. It's $100 buyout. And I would tell you, I'm almost legend, while you and AI wait for proof in 6 to 18 months, I think Microsoft will have already bought the company. That's what I think. But there is some speculation, obviously, in that projection. Sir William, and I have a challenge to AI with your own information and viewpoints, and it dug deeper and agreed with your information. It said it was being conservative in its projections, but still being what it deemed realistic based on its own observations and info. Well, okay. Let the force be with you. Either way, we'll find out. Definitely prefer my speculation. Well, I don't think it's a lot of speculation. You have to assume certain things. You have to assume that the AI 2.0 market is an arms race. I think it is. You have to assume that the multiples are going to stay strong. I think they will. You have to assume the demand for software improvement, software development is a gigantic annual business. I think it is. You have to assume that the big companies like NVIDIA, Facebook, Google, Amazon, Apple, Oracle, so on and so on, do perceive almost an existential threat if they don't keep up, much less excel at AI. You have to believe that the demand for AI 2.0 is going to grow exponentially. That you might argue with, but are we going to go back to Kodak cameras? Are we going to go back to typewriters? Are we going to go back to, cash registers that you punch in the numbers and pull the arm? Are we going back to manual vending machines? Are we going back to having police cars follow us on the highway instead of overhead cameras? Are we going back to people running travel agencies instead of online travel agents? Are we going back to having brokers manage our accounts, or are we going to continue to do everything online? I don't see it. I don't see it. So I don't think my projections are that much speculation, but we'll find. Like you say, we'll find out. The toughest thing to process is, why is the stock still 44 cents? That's the toughest thing to process. Normally, news leaks out, and then buyers buy. So it means either there isn't news, or there aren't buyers, or Canada is a particularly tough area of securities regulation. And like you say, we'll find out. I tend to think that we're not looking for a lot of buyers. We're looking for one. Mavericks. Or Omer's Ventures. Or Omer's Technology Fund. Or, one of the other funds out there. Just one. Just one. Just one fund buying 5% of this company would take 10 million shares. Now, if the shorts want to feed it to them, good. It's good for us. It's good for us. You know why? Because then we'll have a fund in there alongside of us with 10 million shares at $1. They're not going to sell. They're not going to sell. And if another fund comes in and buys 5%, another 10 million shares, and they get it off at $1.50, well, again, I think that's good for us because those people aren't going to sell. So if you had 2, 3, 4 funds all able to buy collectively 25% of the company, and the company didn't squeeze, it'd be awesome. We'd be trading $3, $4, $5 maybe, and it didn't squeeze. And then some buyers came in once it crossed $5 and the market cap, and it went to 10 and maybe a squeeze started. Be amazing. Those funds aren't going to sell. Be amazing. I don't want to squeeze, though. I don't want to squeeze. I don't want to squeeze. Brandon Neely. So do market cap is too small and institutions still won't buy. Who will buy? Just more folks like us. The hardest part is going to be getting it to whatever threshold brings in institutional buying. Is it $2, $3, $4, $5, $6, $7, $8, $9, $10? I don't know. I just don't know. There's a plethora, you can Google them, Brandon. There's a plethora of funds up in Canada who invest in technology and AI. Google it. Ask Google, what's their cutoff per share price and market cap? See what Google says. But I think, and I've tried to express this, and I guess it just doesn't come across. In Canada, the government, the provinces, the think tanks, the universities, the financial institutions, the big pools of money, and the companies are all, and the energy companies and the hyperscalers, they're all working together to make Canada a premier AI destination and a player on the world economy, and to keep the data sovereign and the intellectual property sovereign. They're all doing that. So in that context, in Canada, not by the way, it's not all institutions. There are some institutions set up. I mean, you got to use your imagination. Google it. How many institutions? What are their sizes? Look, if I started something today, my limit might be 500,000, and it might be no limit on the stock price. But if you're Fidelity and you've got people spending time, they're going to have cutoffs. Not every institution has the same cutoffs as every other institution. It's not a law, it's a preference. Now, in the brokerage houses, the Merrill Lynch's, the Morgan Stanley's, the A.G. Edwards, the whatever they are called now. The cutoff of $5 is called the Merrill Lynch rule. And it is called the $5 rule, but it also may have other aspects to it. So there's a screen at each of those firms that once the stock's over $5, they'll consider it, but there's a list. Can the broker solicit an order in that stock or not? And many of the stocks don't make that cut. So I don't expect buying pressure from Wall Street retail until the stock's $10. So I don't expect it. Institutionally, in Canada, a guy like John Ruffalo, if he's going to buy 10% of Railtown, he has to have 25 million shares. Is he going to wait? He might. I don't know his parameters, but I wouldn't. I'd start buying at 50 cents in Canada. Why? Because the stock's available. And he knows it. He knows it cold. He founded the mother. I wouldn't have any limit. He probably has to get an exemption. It might take 2 or 3 days. They have to write it up and send it around for a vote, get everybody's initials. But I wouldn't wait. You're being too obtuse. Yes, when the market cap is small, you're not going to get retail buying at the big firms because they're not allowed to. Fine. They're not allowed to solicit the orders. Fine. They'll recommend it when Merrill Lynch comes out with a buy recommendation at $16. Fine. Let them have it. You're getting in early. Are you scared to get in early? Or do you want to wait till Merrill Lynch starts buying? The institutions, on the other hand, they may not come in under $1. Maybe no institution out there comes in under $1. But if I had to pick one, it's Mavericks. They'll come in under $1. Let me ask you this, Brandon, with your expansive mind, not your obtuse mind. If your team sat down, and of course you guys don't believe me, but if your team sat down and they pulled the public information on Langchain, they called the company, they went through their website, they called their friends at, I'll tell you if I can read it, I'll tell you the banker, the banks. I just can't, I cannot, I don't know. Just don't know. Okay. Fortune reported today that IVP, I don't know who IVP is, led the Series B investment. So Langchain, Inc., a startup that helps developers build artificial intelligence agents, does that sound like anybody we know? Has raised $125 million in funding at a $1.25 billion valuation. Fortune reported today that IVP, no idea who it is, led the Series B investment. It was joined by Alphabet Inc.'s Growth Stage Capital G Fund. Of course, they don't know what they're doing. ServiceNow Ventures, another bunch of idiots don't know what they're doing. Workday Ventures, another complete bunch of buffoons. Cisco Investments, Datadog, Databricks, and several others. Of course, they don't know anything. We know because the price is 44 cents here. So let me ask you something. If your group at Mavericks read this and you called up your friend at Cisco Investments that you went to school with, you said, what are you seeing here? What do you think? Well, we love it. We think this is going to be a $5 billion stock company and within whatever the hell. Let me ask you something, Brandon. If you, instead of being obtuse, you are an investment banker at Mavericks and you say, well, wait a minute, this stock's trading for 65 million, well, in Canada, let's say Canadian, 100 million market cap. And this Langtrax in Canada is trading almost at 2 billion, $1.8 billion in Canadian dollars. And I just talked to my friend at Cisco, and she gave me a rundown on what they're seeing. And she gave me a discussion that they're a startup and this and that. And here I've done a spreadsheet. I've run my models. And you get before investment committee, and the per share value that Mavericks calculates immediately is $8 Canadian for Railtown. Are you telling me, Brandon, that Mavericks wouldn't buy Railtown because its market cap is too small? I think you're being a little bit too, you're just being, I don't know what you're doing. John Ruffalo founded Mavericks. He founded AIP Partners. He met Railtown and said, why don't you buy AIP Network Partners? Do you think he's not going to buy the stock? If you do, I don't know. I don't know what to tell you. But no, your summary is totally wrong. Most institutions won't buy. They haven't heard the story. There will be some institutions, particularly in Canada, where stock prices do trade all day long in the 50 cents, 60 cents, dollar range for all sorts of companies. There will be institutions in Canada that buy, and Canadian institutions are going to determine the price. Thank you for the replies, Sir William. I'm going to take some time later to challenge AI with more specifics based on your info and research, as well as my own. See what? Good. I'd love to hear it. Brandon, why would Canaccord short the stock if they know the story and know it? Oh, God. It's almost painful, Brandon. It's almost painful. What kind of job do you do? Are you in sales? Probably not. So here's Canaccord Genuity. They may be broken into two, or they may be one bank in Canada. They've got investment banking. They've got research. They might, in Canada, have market making. They may, in Canada, have trading desks. I don't know. They have mutual funds. They have retirement planning. They have retail sales force and retail managers. They have institutions, the institutional desk and institutional sales managers and executives all the way up. They have compliance. They have stock loan desk. They have trading. They have computers they make commission on. They have margin lending. They may have institutional lending. They may have lending to companies. I don't know. So they have all sorts of businesses, Brandon. Of course, your brain is like this big. What? You think Canaccord is one department, one person? So you've got some institutional brokers who have an account with a company called, I don't know, the Tel Aviv, Cayman Islands, Frankfurt Trading Buddies LLC number 25. And it's run by the Anson funds, but the trader on the institutional desk doesn't really know that. But she makes he makes a shitload of money out of this account. This account trades millions of shares a day for 3 pennies or 6 cents, just constantly. It's an amazing account. When this guy running that bloody account, Brandon, calls in and says, I'd like to sell 500,000 shares of Railtown, the broker on the institutional desk says, do you own it? The toad says, yes. Okay, great. Let me get you a bid. We'll sell it. Brandon, please, don't make my brain hurt. I would say at Canaccord Securities, let's look it up. Let's look it up instead of asking stupid questions. How many employees does Canaccord Genuity have, and how many are on the institutional trading desk? Canaccord Genuity Group has approximately 2,911 to 2,925 employees. Brandon, they're not all in on it. I'd say of that, at most, 10 people know about it, at most. The institutional trading desk is part of a broader capital markets division which comprises about 280 employees in Canada, but the exact number is on the desk is not detailed publicly. So out of 280 employees in the capital markets division, A subset of that is on the institutional trading desk. How does Canaccord going to short the stock when they know the story and it's great and they... Let me ask another question. You won't believe me unless it's somehow Googled. Does Canaccord Genuity have a restricted stock list? Yes. Like all firms, Canaccord Genuity has internal policies that effectively create a restricted stock list to manage conflicts of interest, prevent insider trading, and ensure compliance with securities regulations. The list is an internal compliance document, is not made public to clients or the general public. Key points: internal compliance. The firm maintains robust internal organizational and administrative arrangements, including a dedicated legal and compliance department to manage potential conflicts of interest. Employee trading. Employees, officers, and directors are prohibited from using their position to obtain improper personal benefits, and personal conflicts of interest must be approved and managed by the firm. Information barriers. Canaccord Genuity separates its research analysts from its investment banking employees to prevent the misuse of non-public information. So they don't have to know it all. Brandon, do you have a brain? I sometimes, are you doing this to torture me? It's often referred to as a Chinese wall. Regulatory requirements. The firm is obligated to comply with comprehensive securities regulations aimed at investor protection, which inherently require the tracking and restricting of trading in certain securities, particularly those where the firm has access to material non-public information or an active role in a transaction. So, Brandon, probably the people in investment banking that were advising, what is the name of this company? Railtown. Were in possession of information they did not share with research. They did not share with institutional trading. They did not share with retail. The firm doesn't know about it, just some people in investment banking. And it doesn't matter, Brandon. Good Lord. The shorting, the selling is done as a scheme, as a trading system. The trading desk is going to take the unsolicited orders. They're going to say, because an attorney somewhere is lying on behalf of this toad, they're going to take the order. Are you long? Yes. Did you borrow those shares? Yes. Have you located those shares? Yes. That's one way they'll take the order. Another way, they've given permission to their client to enter the orders and doesn't even go to the desk. Another way is possibly the broker is in on it. I doubt it. But God, my head is pounding. All right, let me keep going, Brandon. 39 years old. That's fantastic. You're young. I'm jealous of you. Cattle farmer from West Virginia. I love that too. This is going to make your farm the best piece of property ever. I hope, Brandon. You're in the right. You're prepared for what's coming. Bravo. Brandon, the biggest risk I see is a company that has the greatest product in the revolution and isn't going anywhere as the boom is taking off. I would say that's perceptive. If for some reason they have been stalled during the last 10 months, and they haven't done anything. They haven't worked a lick for the last 10 months, and therefore they're just starting now. Or they're going to start after the AIP deal is finished. You're right. They're going to miss out. Do you think that's believable, that they've done nothing for the last 10 months? I can't. If you do, I don't know what to say. I can't prove it one way or the other. But I think the fact that they announced a deal with TELUS out of the blue last Tuesday, which is a big deal, and it's in this document, they've been working hard. Do you think that's the only thing they've been working on? Do you think when they met AIP a year ago and they decided to cross-sell their products that they haven't been working with AIP for the last year? Do you think there's no revenues coming out of AIP? Do you think they're not going to be able to transfer the hosting of these 180 companies over to TELUS when they control the network? I don't know, Brendan. You really are trying to search for everything. I don't know what to say. You can't look a gift cow in the mouth. To me, this should be at the forefront of every company raving over it. Instead, we have a little pamphlet that you show us, and it says we are the best with no revenue showing, and deals with small companies, not NVIDIA or Google or big names. All right, TELUS is a small company, Brandon. I think TELUS is a shitty company. I want to look it up before I stick with that. TELUS. Yeah, TELUS is a shitty company. Let's see what Yahoo Finance says. Yeah, TELUS is only 32 billion. That doesn't measure up. Yeah, that's pretty crappy. NVIDIA is 5 trillion. So unless Railtown gets a deal with NVIDIA or Microsoft, that's shit. I mean, TELUS is shit. Shit. Man, what was I thinking? TELUS is just crap. The little pamphlet that I show you. You know what? I believe I sent you this, Brandon, because I have your email. This is a little pamphlet. It's 42 pages, Brandon. You're ridiculing it. You know what? I think you should sell your stock, Brandon. You have a great position, but I can't. Let's go through it. I'll tell you what, Brandon. Let's go through this little pamphlet. It's Railtown, November 2025. Let's just go through it. Building a Canadian AI development ecosystem. I know it's just a shitty little pamphlet that I'm showing you. Okay, let's start with Railtown Partners. Let's just start with the Railtown Partners, Brandon. These are pretty shitty partners. Nobody's ever heard of them. You've got Founders Hub by Microsoft. You've got Microsoft Partners. You've got Microsoft Co-Sell Ready. I don't know, pretty sketchy partners. And then you've got NVIDIA. Now that one, you agree is a good one. Okay. NVIDIA is a good one. They're partners with NVIDIA. They're partners with TELUS. We can both agree that's a shitty company. It's only worth $30 billion. Shitty. And then these Northwestern, University of British Columbia, Amy, Mila, and Digital. Those are more think tank sources of revenue. And then AMD. AMD, all right. So we'll go with that. They got some partners. One of them, you agree, is a good partner, NVIDIA. The mission statement. Railtown AI Technologies is dedicated to transforming the way agentic lead software is built, deployed, and scaled by delivering intelligent AI frameworks as well as observability solutions that solve problems before they happen. Like noticing there's a wolf walking around the cattle, or a bear, or a rabid dog. So they solve problems before they happen, accelerate innovation, and strengthen the Canadian AI ecosystem. Through our 5 integrated divisions, we provide developers, enterprises, and AI companies with the tools, infrastructure, and marketplace access they need to thrive in an AI-driven world. Okay, here are our divisions. Our number 1 division is SaaS services. What is the product? The product is 2 products: Conductor DPE, an agent manager and engineering platform, and then Conductor RCA, a root cause agent. What is the value proposition in our first division? Well, Conductor DPE powers AI development teams with real-time insights into AI agent runtime, agent reasoning, token costs, developer velocity, error tracking, root cause analysis, deployment monitoring. That's the Conductor DPE. Conductor RCA. This value proposition, they fully integrate inside of Microsoft's Visual Studio. That's not such a great partner. Microsoft, come on. Nobody's heard of them. Fully integrated inside Microsoft's Visual Studio, delivering instant. Well, we can do better than instant, can't we? Delivering instant local level analysis of errors with suggested fixes, reducing debugging time dramatically. They reduce the cost of debugging. So the strategic position, it is positioned as the essential productivity layer for modern AI workflows, improving time to market, code quality, and operational efficiency. Sounds pretty good. It's probably bullshit, but it sounds pretty good. All right, their second division, Agent Frameworks Division. The product, Conductor ADK, which is the Agent Developer Kit, and Conductor RAG, the Universal Retrieval and Ingestion Engine. Value proposition, empower developers to build and deploy complex, that sounds good, real-time, that sounds excellent, AI agents with robust retrieval and ingestion capabilities. Well, that actually sounds pretty darn good. It's probably just, you got to see it. You can't trust these guys. Streamline, this just came out on Thursday morning or Wednesday night. It's only been out a week. It's not even on the website yet, but it will be. Streamlined integration with Conductor AI Cloud for deployment. So it's cloud-based. That sounds pretty good. What's the strategic position? It establishes Railtown as a platform provider in the agent economy, enabling next-generation AI-powered applications. Here's part of the little pamphlet. All right, so the third division is AI cloud compute services. The value proposition. It's cost effective, developer friendly, cloud hosting optimized for deploying AI agents built with our framework. Built-in data sovereignty safeguards, crucial for regulated industry and Canadian businesses. What is the strategic position? It differentiates Railtown from hyperscalers by providing targeted, developer-focused cloud infrastructure with competitive pricing and sovereignty compliance, which seems to matter up in Canada. Our fourth division, it's our open source project, Railtracks ADK. Value proposition. Railtracks ADK is a student/community version of our enterprise conductor ADK designed for Canadian universities. It supports AI education, fosters early adoption, and seeds a future. Developer base skilled in Railtown tools. So they've got something they send to Canadian university that trains students to use Railtown. Strategic position. Positions Railtown as a foundational contributor to Canada's AI ecosystem, creating a talent pipeline and strengthening our brand among future industry leaders. Sounds pretty weak. 5, AI partnerships. Canadian AI affiliate marketplace. Value proposition. A curated marketplace of hundreds of Canadian AI companies. Yeah, but nobody's ever heard of them. No one's ever heard of them. Provides affiliates with access to all Railtown products, frameworks, and cloud services, while enabling affiliates to showcase and sell their own solutions. Strategic position. Creates a network effect that drives product adoption, expands market reach, and builds the definitive Canadian AI business hub. Yeah, but nobody's heard of all those hundreds of companies. Come on. What are you snowballing us for? And then what's its strategic advantage? By integrating developer productivity tools, agent creation frameworks, specialized AI cloud infrastructure, open source ecosystem support, and a nationwide AI marketplace, Railtown AI Technologies occupies a unique position. We are not just selling products. We are building the infrastructure, community, and market channels for a thriving AI-powered future. This integrated model creates exceptional potential for accelerated revenue growth. That doesn't sound good. Accelerated revenue growth? Why can't you just start with a lot of revenue? Do you have to accelerate it? So the model creates exceptional potential for accelerated revenue growth from premium SaaS services to high margin cloud and compute channels by tightly coupling developer tools, frameworks, cloud infrastructure, and marketplace access. We open multiple recurring revenue streams that scale together. Oh, I should show you that page. Here's that page. Next page of this pamphlet. Railtown AI Technologies. These are the 5 divisions. Let's read them. You've got services. Seems to be cloud-based, but services. It's conductor DPE, conductor RCA. Then you have frameworks, which is tools, RAG, conductor RAG, and conductor ADX. The next division, you've got AI compute, obviously in the cloud. It's conductor AI cloud. And then you've got the division, it's called open source. That's Railtrack's ADK, which we just read about universities. And then the final division is marketplace, and that's the AI Partnership Corporation, which currently has over 180 companies. So let's go through the first one in this pamphlet. Let's go through services. So we start with conductor DPE, a Railtown AI technology company. So conductor DPE, this is developer and agent observability for the AI era. Conductor DPE is an advanced observability and productivity platform designed to accelerate software and AI development by removing friction across the engineering and deployment lifecycle. Originally built to optimize developer velocity, track builds, and monitor deployments, Conductor DPE has evolved into a unified platform that now manages both developer workflows and AI agent operations, delivering real-time insight into every stage of human and machine collaboration. With Conductor DPE, teams can track and optimize AI agent performance, monitor AI deployments, runtime behavior, reasoning paths, and token utilization for cost control and transparency. Can enhance build and release efficiency, streamline continuous delivery pipelines with intelligent automation, ensuring faster, more reliable releases. Can detect and resolve issues early, identifying performance bottlenecks, bugs, and anomalies across code and agent execution before they impact production. Can keep developers and agents in flow, maintain productivity through proactive observability, automated insights, and tools that reduce context switching and downtime. Then you have conductor RCA. It's a Railtown AI technology. Root cause agent, RCA, is a core innovation designed to automatically identify, analyze, and surface the underlying causes of software errors in real time. Instead of teams spending hours manually sifting through logs or debugging in production, a root cause agent proactively pinpoints the exact lines of code, impacted systems, and potential fixes, dramatically reducing mean time to resolution. Errors don't just disrupt individual developers, they ripple across the entire team, slowing down velocity, delaying releases, and driving up engineering costs. Developer costs, 20% of development time is spent on bugs, which translates to $20,000 per year per developer. Escalation, late phase bugs cost more than early stage bugs. They cost 10 to 100 times as much if you catch a bug in its late stage. The economic burden of bugs, $2 to $2.4 trillion annually worldwide. High impact incidents of bugs. The cost can range from $10 million, the impact of a bug, to $100 million per event. Plus loss of brand identity and increased server costs. What are the intangible losses caused by bugs? Reputation loss, trust lost, regulatory penalties, and team demotivation. IBM confirms these data points. No one's heard of IBM anymore. Okay, so what's the problem? One of the problems is data fragmentation. None of the prominent data providers seamlessly integrate and understand the full scope of a client's application. So on ticket data, it could be GitHub, somebody else, and somebody else. Develops data could be Jenkins, somebody, or Terraform. Application log data could be Google, SolarWinds, for example, or Splunk. Documentation data, Google Docs, Code, GitHub, or Azure, all as examples. So these could all be the data sources, all variety. They don't speak to each other. The different developers don't understand the other. So the solution is to put all those data, fragmented data, down into the conductor processor. The solution is data unification. Conductor provides a single platform that comprehensively ingests and unifies all application data, making sense of it all. That sounds like a bunch of bullshit. Can't trust that. Cost in developer hours. On average, developers spend 20% of their time troubleshooting and fixing bugs. For a $100,000 a year engineer, that translates into $20,000 per year in developer costs absorbed by bug work. If it's a team of 50 developers, That's roughly 1,600 hours per month, or 80,000 in salary costs per month, tied up in reactive bug fixing. If you discover a bug during the design, it costs you about $100 to fix. If you do it later, it's $1,500, and once it's in production, it can cost $10,000 per bug to fix. So of course, that's just words. It doesn't mean it's just a pamphlet. Broader economic impact. CISC estimates poor software quality. That's Cisco, I guess, in 2020. Estimated poor software quality cost $2.08 trillion. Poor software quality cost $2.08 trillion in the United States alone, encompassing failed projects, breaches, and outages. Tricentis reports $2.2 trillion globally per year in economic losses because of bugs. Smart Bear attributes $1.1 trillion globally in 2016 to software failures, leading to 315 years of end user downtime. So the hidden damage is to your brand, to trust, and of course causes legal risk. Software bugs undermine reputation, accelerate customer churn, and depress future sales. Regulatory and legal fallout from bugs, especially those causing breaches or financial harm, compound damage. Also, the team morale suffers. So the summary, this just all seems like a bunch of words in this pamphlet. The summary, I'm not going to read the summary, you heard me. The recommendation, invest in early detection, automated detection and testing, static analysis, enforce guardrails, peer reviews, shift left security, monitor and triage, crash reporting and analytical tools like Raygun to reduce triage time by up to 90%. That sounds pretty impressive. You can reduce triage time by 90%. Cultivate quality culture. That's good. Let's keep going. All right, so what is some of the industry information? According to Mordor Intelligence, this segment was valued at $6.41 billion in 25, and it's forecast to reach almost $14 billion by the end of the decade. Business Research Insights says it's going to reach $23 billion by 2033. Business Research Company says it'll reach almost $9 billion by 2028. The broader developer tools ecosystem, a Medium analysis cites $234 billion by 2028. A Wikipedia entry says $49 billion in 2021. A Verified Market reports a $61 billion developer market in 2023. Okay, what about frameworks? What about frameworks? The division frameworks. Well, Conductor ADK, Agent Development Kit for Building AI Agents. This is all in the pamphlet. It's all in the little pamphlet. Agentic Framework for Building Autonomous AI Agents enables dynamic interaction with LLMs tools, and APIs to solve complex tasks. Simplifies integration by handling low-level engineering so developers can focus on architecture and innovation. Enhances control over model deployment, data security, and infrastructure. Streamlines deployment, that sounds good. Accelerating time to market for AI-powered applications. It's all in the little pamphlet. All right, so APIs. I notice on this chart memory, large language models, and tools. But what I notice over on the left, it's actually, I guess, will be on your right. I think. Storage will be handled by TELUS. It's a small company, 30 billion in market cap. It's not NVIDIA. The large language models will be handled by TELUS. It's not NVIDIA. Although it's NVIDIA chips and NVIDIA state-of-the-art bricks. AI, API, and MCP servers handled on TELUS, and the Docker will be run on TELUS. I don't know. I think it's more than just a little pamphlet. So then the conductor RAG. This is Retrieval Augmented Generation Framework. Universal data ingestion, pre-built connectors to seamlessly ingest unstructured data from any source. So it's a universal translator. That's pretty amazing. That sounds pretty powerful. High performance engine, a robust, scalable engine designed for high speed data ingestion and processing. That also sounds good. Built on Apache Kafka, leverages Apache Kafka for efficient real-time streaming and event-driven data processing. Sounds good to me. Data transformation and cleaning. Includes a built-in pipeline for transforming and cleaning data before storage, ensuring quality and consistency. I like this RAG. Flexible data storage supports persistence in a variety of storage systems, including file storage, SQL server, and other destinations. Automation and triggers, capable of triggering real-time alerts, automation. Seamless integration. It easily integrates with existing data infrastructure, enabling fast and reliable data flows. That sounds good as far as it goes. Real-time processing, capable of handling large volumes of real-time data for immediate analysis and action. Well, I guess that could be better. It's a little pamphlet. Again, this picture just really gives me TELUS for compute, TELUS for storage, and TELUS for large language models. You know, TELUS isn't NVIDIA. You can't trust the idea of TELUS. All right, so industry information, AI frameworks. AI agent frameworks are tools for constructing and launching AI agents. These frameworks offer a suite of tools, libraries, and predefined components that streamline the developer process and empower businesses to create intelligent applications without a deep AI skill set. That sounds like something I could use. Benefits of using AI agent frameworks. Well, number one, reduce development time and costs. AI agent frameworks offer pre-built components and functionalities, sparing businesses the effort of building from ground up. Sounds good. Enhanced scalability. AI agent frameworks are engineered to manage extensive data sets. That sounds powerful. And complex processes, making them highly scalable. Again, that sounds good. And flexible to evolving business needs. Improving efficiency through the automation of mundane, repetitive tasks. AI agent frameworks free up human resources to concentrate on more valuable endeavors, thus enhancing overall efficiency. Enhanced accuracy and consistency. I mean, these things sound good to me. AI agent frameworks use machine learning algorithms to perpetually enhance their capabilities. Wow. Ensuring precise and uniform results while minimizing the potential for human error. Seamless integration. AI agent frameworks are crafted to integrate with your current systems and applications, allowing you to seamlessly incorporate AI capabilities into your operations without disruption. This all sounds pretty good. Okay, so they go through AI agents and development kits and the market growth outlook. Why ADKs will be one of the fastest growing infrastructure segments in AI. I'm going to skip all this. You got Mordor, 70 billion, SAC Insight, 96 billion, TechCrunch, 52 billion, Business Insider, 38 billion, Enterprise Agents, 24 billion, Agent Assist, 124 billion, major investment by Amazon, NVIDIA. You know NVIDIA, you agree that's a good one. Google driving ADK infrastructure. And it goes on. The industry signals are Amazon Agent Core, NVIDIA NeMo, and Google Agent Protocol. Anyway, there's more, but I don't want to bore everybody. And then they compare Conductor to LangGraph, which is in LangChain, versus Google Kit. And I've shown you this before. I'll just show it quickly. I've shown you earlier. And the main point is Conductor is the best of all the rest. Conductor is the best. LangChain just raised 125 million at a 1.25 billion valuation. No one's ever heard of it. No one knows who they do deals with. And they are projected. They haven't done it yet. In June, they annualized their revenue in June, annualized between 12 and 16 million. And they got a 1.25 billion valuation. All right, this just says Railtown and TELUS. I know no one's heard of TELUS. I mean, it's only 30 billion. This should have been NVIDIA, shouldn't it, Brandon? They should have gone with the NVIDIA, but we'll take what they did so far. Railtown AI with TELUS Corp, compute partnership. And the key of this whole thing, Brandon, is they're sharing revenues. So right here, it's hard to see. TELUS is going to upsell to the Conductor platform. Wow. So you're going to have TELUS custom connections, and they're going to upsell to Conductor, and then they're going to put it on the data center. So there's going to be revenue sharing. All right, let's go through the revenue, the Railtown revenue model. It's in the little pamphlet, which I believe I emailed to you. The Railtown revenue model. Railtown AI Technologies is monetizing its newly announced partnership with TELUS through the deployment of our agentic frameworks within TELUS's sovereign AI data factory. While TELUS provides the hosting and compute infrastructure for large language models, Railtown contributes its proprietary agentic frameworks, tools that enable the creation, orchestration, and management of autonomous AI agents. Now, I might be misreading this, but it sounds to me, TELUS, I mean, it's small. I mean, they're a small company. They only have a market cap of 30 billion. It's not NVIDIA at 5 trillion. But they are going to use NVIDIA bricks. But what it sounds like to me, it says here, TELUS is going to provide hosting and compute infrastructure for large language models. But then Railtown is going to contribute its proprietary agent frameworks that enable the management of AI agents. Sounds like to me, all the business that TELUS runs through its new data center is going to go through the proprietary agent frameworks of Railtown. That's pretty powerful. Of course, no one's heard of TELUS. It's too bad it's not NVIDIA. And it's just in this little pamphlet. It can't be very meaningful information. It's just in a little pamphlet. But this is pretty powerful. If this means what I think it means, all the revenue that TELUS generates in here is going to run through Railtown. Let's say it's $1 billion in revenue. And let's say Railtown gets 10 or 15%. That's a lot. That's your 100 million, 150 million right there. And it's all cash. There's no cost to that revenue. Imagine if they do 120 million a year with this revenue. It's $10 million a month free cash flow to start with. It's pretty powerful. But you have to read it in this little pamphlet. And you can't trust it because it's TELUS. No one's heard of TELUS. Hyperscalers like TELUS require frameworks or developer toolkits, ADKs, to make their hosted LLMs truly usable. Without these frameworks, it is extremely challenging for customers to build, deploy, and interact with AI agents effectively. So that kind of confirms what I'm saying. Everything that comes through this new AI factory is going to use Railtown. I think this is some of the most powerful information you can receive on your investment. By combining TELUS's secure domestic AI compute environment with Railtown's frameworks, customers can efficiently build and deploy AI agents while ensuring their data remains within Canadian borders. That's exactly the campaign that the whole country is on. The revenue model is usage-based, okay, and directly tied to the success of the AI deployments. For every agent built with Railtown's frameworks, which sounds like all of them, but we got to find that out. For every agent built with Railtown's frameworks and deployed on Teles's platform, Railtown receives a net percentage of the compute revenues generated by Teles. I'd like to see what that net percentage formula is, because it's not top line. So I wonder what they take out to create the net. But still, it doesn't cost Railtown anything. This aligns incentives between the two companies. The more AI agents businesses build and run using Railtown's frameworks on Teles's infrastructure, the more revenue Railtown captures, creating a scalable and mutually beneficial monetization strategy. Of course, it would be better instead of Teles if it were NVIDIA, but we got to take what we can get. And then you move on to open source, their other division. It's the strategic value of open sourcing IP. So this is for universities. It is a growth and influence strategy. It accelerates adoption, builds leadership and broad adoption. It does create monetization through enterprise edition services and hosting. And it attracts top engineering talent. It's all in the little pamphlet if you want to look at it. Open sourcing IP, strategic outcomes. So it will lead to rapid market penetration and ecosystem growth, increased developer mind share and integrations, de facto standard potential in key technology areas. That's pretty powerful. They could be the standard. Lower customer acquisition costs through open funnel, faster innovation cycles through external collaboration. I don't know if I showed that to you. Okay, so owning the license gives them strategic control. Owning the open source license equals owning the rules of the game. Define clear commercial versus free use boundaries. I can't do that. I have to leave that to Corey. Okay, so owning the license can enable dual licensing for monetization. It mitigates legal risks. They can also shape industry norms by influencing license models. They can maintain brand and trademark control within the ecosystem, create long-term leverage, but at the same time support open innovation. And then the AI marketplace. This is very busy, but it's founded in Toronto, Canada in 2021. They have 180 plus companies. They're planning strategic acquisitions of 1 to 5 companies. There's 180 plus AI SaaS companies oriented toward B2B applications. Network is selected with highly scrutinized requirements. For example, financial performance measured to financial goals, synergies between other affiliates, recurring SaaS revenue models, user productivity, and efficiency enhancing products. The affiliates currently serve 5,000 plus clients in North America. The acquisition plan, we have identified 3 to 5 shortlisted acquisition targets from the affiliate network. We are leveraging prior experience working with those companies, so they already know them. The strategic plan is to acquire early stage AI companies at a discount and optimize costs across the acquisitions. I guess that's called synergy. Affiliates provide AIP with access to proven SaaS-based AI solutions that AIP resells on a system integrator basis to customers looking for capability beyond what individual affiliate products and services provide, but they get a piece of it, each of them. Summary, AI Partnership Corp is a global network of AI as a service-based companies. Combined approximate 400 million in revenues and over 5,000 end user clients. So they're going to use an accretive strategy. So they're going to take advantage of the current premium in public markets for SaaS companies. This provides a platform for discounted private company acquisitions, supporting accretive cash flows. So obviously they're going to realize synergies across revenue, cost, valuation, and growth velocity. They plan to make efficient acquisitions using the affiliate network as a pool of potential acquisition targets. AIP has already identified top performing companies, leading to more efficient due diligence and transaction times. The management team is renowned. The management and board of directors are comprised of highly experienced members to execute a, quote, private equity roll-up strategy, unquote. Experience. OMERS, that's the Ontario Municipal Employee Retirement System, Venture Capital, Ontario Centers of Excellence, CEO of OMERS, and COO of IBM Canada. The transaction summary. Railtown is going to acquire AIP on a cash-free, debt-free basis. 100% share-based structure. The transaction is valued at $20 million to $25 million. They're going to close in Q4 of 2025. We now know it's going to be this Friday. Corey Brandolini is going to remain as the CEO. One director from AIP to be invited to the board. Oh, I didn't show it to you. Okay, the AIP Affiliate Partnerships Network. AIP offers an AIP product and services catalog across multiple industries, including manufacturing, finance, healthcare, construction, agriculture, telecom, retail, automotive, HR, customer support, aerospace, utilities, and real estate. This network provides expertise in machine learning, computer vision, NLP, automation, data science, robotics, cybersecurity, and more. These abilities enable clients to build AI strategy and maturity, decide between in-house versus outsourced AI, access scalable subscription-based AI solutions, improve operations like retention, acquisition, forecasting, and automation. The strategic outcome. The acquisition of AIP establishes a first of its kind AI affiliate platform and marketplace, reaching beyond the one-dimensional matchmaking structure of partners simply connecting with buyers. Partners now gain access to technologies, frameworks, and infrastructure needed to build, deploy, and scale intelligent solutions more quickly. Okay, Railtown AI Technologies and AIP partnership, a transformational coming together. This merger represents a unique combination of two Canadian powerhouses in the AI ecosystem. Railtown AI Technology, a leader in AI-powered developer tools, an AI Partnership Corp, an established network of over 180 AI-driven affiliates with a proven $400 million in annual sales footprint. The combined entity is poised to create a scalable platform that redefines how AI solutions are developed, delivered, and monetized. The affiliate network transformation. AIP's affiliate network, used in conjunction with Railtown's AI services, creates a first-of-its-kind platform for the AI service business. This transforms AIP's previous B2B matchmaking model into a one-stop platform for developers' AI needs. The AI services growth potential. The newly integrated platform aims to have multifaceted growth potential. On the monetization side, the integration of Railtown's AI service suites delivers the existing affiliate network high-quality AI service solutions and activates ensuing revenues for Railtown. From a growth perspective, the network's expansive nature provides significant opportunity for organic network growth, with new customers further growing service revenues. Strategic vision. By combining Railtown's cutting-edge AI suite with AIP's vast network, we aim to deliver unmatched value to shareholders and to customers. This merger empowers developers, enhances customer outcomes, and establishes a monetized marketplace for AI tools. You'll find this in the little pamphlet. Too bad the little pamphlet takes so long to read. All right. This is a flow chart. It's a fully integrated technology marketplace and cloud service. At the top are 181 affiliates. In the middle is conductor, 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 and conductor, all Railtown AI. And at the bottom is the Sovereign AI Factory, which is TELUS, and Conductor and TELUS share revenue. So customers can build and publish AI agents with AIP. They build with rail tracks and lane tracks frameworks. They deploy with TELUS, Bell, Amazon, Google Cloud, and Azure. It's observed by Conductor Agent Manager, and it's published in the AI Partnerships Corporation marketplace. The value of technology marketplaces. Technology marketplaces are transforming the way businesses operate, providing a powerful platform for growth, innovation, and efficiency. They provide economic efficiency and growth by lowering costs, direct connection between buyers and sellers, reduce intermediaries and transaction costs. By wider reach, marketplaces help small, medium enterprises access broader customer bases and boost sales. By faster transactions, technology streamlines procurement, increasing business volume and economic output. Data-driven insights, actionable data. Marketplaces generate rich insights from user behavior and transactions. Smarter decisions. Businesses use this data to refine operations, marketing, and product strategies. Predictive power. Analytics enable better forecasting and resource planning. The marketplaces enhance user experience by seamless transactions. User-friendly platforms ensure efficient, frictionless interactions. They increase trust and security. Built-in protections foster confidence among users, and they increase personalization. Data-driven recommendations tailor the experience to individual needs. Marketplaces have caused a rise of B2B software marketplaces. Rapid growth. B2B marketplaces are now a leading channel for software procurement. Major market share. They are projected to represent a significant share of enterprise software spending. Simplified buying. These platforms make it easier to discover, evaluate, and purchase solutions. By acquiring AI Partnerships Corp, Railtown AI Technolgies, Inc. can shift the affiliate network model from connect and resell to a value integrated ecosystem, thereby offering core platform tools, agentic frameworks, and shared infrastructure that enhances every affiliate's product and delivery. Then they discuss the competitive moat. What keeps competition out? Well, they can cross-sell. They have proprietary enterprise application software, brand recognition, access to capital, patents, intellectual property. I've already gone through the 120 million per year. It's a vertical marketplace, not spread out across the internets. And then economies of scale. Let's go through the key people because there's some doubt about the quality of this transaction. Corey Brandolini, founder, investor, and advisor with 30 years of experience in high-growth software and technology companies. He has co-founded companies in spaces such as cloud storage, content delivery networking, and prop tech. An angel investor in ventures like VoIP, voice over internet protocol technology company, Telio, acquired by Microsoft. Marwan Haddad, the CTO, former CTO and VP of engineering for global award-winning PropTech cloud platform. For a decade, he has led platform development for Fortune 500 companies, including Microsoft and Starbucks. Marwan holds a degree, a Bachelor of Science in Electrical Engineering, and he's done a lot of stuff. Dr. Elliot Holtham co-founded several technology startups and worked in diverse fields from quantum computing to genomics. So he was the co-founder CEO of Extract AI, which was acquired by Patriot One. He's very well educated and Dean's List. Dr. Tom Core, former president and CEO of Ontario Centres for Excellence. He is going to be on the board, and he's an AIP founder, and he was the CEO of Ontario Centres of Excellence for 10 years. He also was CEO of an accelerator center at the Waterloo Research and Technology Park. And he was vice president of the commercialization at the University of Waterloo. Pat Hargan, entire career at IBM. And he works with the government. So these are key people. Then you got 5 more key people. You've got Dr. Eldad Haber. He co-founded, he's an advisory board. These are all on the advisory board. He co-founded Extract.ai, which was acquired by Patriot One Technologies. He has over 20 years of experience developing widely adopted commercial software. Then you've got Kevin O'Neill, investment banking at Merrill Lynch, and early stage experience. He also was CEO of Extract AI, which was bought out by Patriot. And then you've got Michael Norbrega. He was one of the founders of AIP. He's going to be on the advisory board. He's a former president and CEO of the Ontario Municipal Employees Retirement System, OMERS, one of Canada's largest pension funds. He served as president and CEO of OMERS subsidiary and infrastructure management group. And then you've got John Ruffalo, founder and managing partner of Mavericks Private Equity. He's also the founder of OMERS Ventures, and he ran that for 8 years. He devoted $500 million of capital to over 40 technology companies. And then you've got Cameron Schuler. He is a former director of AMI, the AMI AI Institute of Alberta. He led one of the top-ranked machine learning and AI groups in the world. This is all in the little pamphlet, which I contend is a lot of great information, which is going to go out to institutional desks. And I don't think they're going to look at it as a little pamphlet. The number of shares fully diluted is 172,538,000 before the 50 million. Founders, directors, employees, and consultants own 38% of the current shares, and I am not a consultant. I haven't been paid anything. Okay, so that's the little pamphlet, which I think, rather than being a little pamphlet, is a major source of information that gives you, Brandon, and everybody else a jump start on the institutions who apparently still can't buy. But everybody wants the best of both worlds. They want to buy it inexpensively when the big boys can't buy, but they also wish the big boys were buying so that it would confirm their buying decision. Brandon says, my point is when you have news with Thales, NVIDIA, and Microsoft stock run $2, $3, $4. We don't. The partnership or part they have with them is minute. I do see big things coming our way. Well, I don't know if your interpretation is right. Oh, I didn't email it to you? I thought I did. I don't know how to check right now, Brandon. I sent it to a bunch of people, and I thought, I'll look again. I apologize if I didn't. I really thought I had sent it to you. It's good. It's a good source of information, and I think it'll bring you comfort in your investment. I really do. It's a starting point. I mean, it'd be better to get news. It'd be better if the stock price were up. But in the meantime, we can keep adding to our positions. So anyway, let's see if we're at war anywhere. No, it doesn't look like we're at war, which is good. Labor market in free fall. U.S. loses 50,000 jobs. What's this? Land in data center alley sets new price record. Man, I knew a friend of my father's owned a bunch of land there. I don't know if they kept it. Loudoun County, Virginia, known as Data Center Alley. Roughly 70% of global internet traffic passes through its fiber backbone at some point, attracting hyperscalers such as Amazon, Google, Microsoft, and Meta, making any remaining land zoned for data center development among some of the most valuable real estate on Earth. 97 acres for $615 million. Wow. All I had to do was buy land in Loudoun County? Wow, that's impressive. All right, I'm going to sign off. Thank you, everybody, for tuning in. And uh, hang in there, Brandon. It's going to get better. And happy Veterans Day. And let's think about everybody that died on the Edmund Fitzgerald and pray for peace in the world.